You're watching India Market Close, where it's a mayhem for the markets for sure today. Let's pull up the Nifty 50, trading around 0.6% lower, almost at day's low point. The Nifty Bank under pressure, down by about 1%. Sensex also trading 0.6% lower. Let's pull up the heat map and see what counters are putting that pressure. Axis Bank, of course, the top loser on the Nifty 50 today, down by about 4.6%. Shriram Finance down by about 2.3%. BEL down 2%. HDFC Life also down by about 1.5%. But some counters that are actually doing well in trade today includes Wipro 2.5% up, Tata Steel up 1%, ONGC, Bajaj Finance and IndusInd, some names doing well. Let's try to pull up the advance decline ratio, because that's going to be an interesting one to watch out for. On the Nifty 50, there are 11 odd advances and 39 odd declines, but on the broader end of the spectrum, there's 1500 odd declines versus that of 700 odd advances. So that ratio is almost 1:2. Let's also pull up the sectoral heat map and see how sectors are doing in trade today. There you go. It's only the Nifty Media that is in the green, up by about 0.9 odd percent. Nifty Metals slightly in the green, 2 odd percent. Nifty IT largely flat, up by about 0.05%. Nifty Realty also flat, but it's the Nifty Defense that's seeing significant amount of profit booking, down by about 2 odd percent. The Nifty Private Bank down by about 1.4 odd percent. The Nifty Bank also seeing downtake of around 1 odd percent. Consumer Durable seeing the downtake of around 0.8 odd percent. Nifty FMCG also under pressure, down by about 0.7 odd percent. That's with regards to where the sectors are concerned. Let's also try to pull up the broader markets and see how broader markets are doing in trade today. There you go. The mid cap 150 also under pressure, slightly recovered from its day's low point, but down by about 0.5 odd percent. The small cap 250 down by about 0.6 odd percent, slightly recovered from its day's low point. Let's also try to pull up the BSE 500 and see what these counters are doing, where there's PVR Inox that's seeing gain about 3.5 odd percent, KRBL up 3.5 odd percent as well. Triveni Turbine seeing gains of about 3 odd percent. Mahindra Life, Chemplast, Whirlpool, some counters in the green, but there's Clean Sciences seeing significant downtick in trade today, down by about 8 odd percent. Alok Industries down by about 5.8 odd percent. There's Axis Bank, of course, seeing significant amount of pressure. Route Mobile, Atul, SW Solar, some counters that are in the red, down by about 4 odd percent. But Harsh, that's with regards to where the markets stand. What else are you picking up? It's Axis Bank, which is definitely one of the top losers on the Nifty, and because of which the Nifty is under pressure.
It is, and it is our stock of the day as well. So we will discuss that. Thank you so much, Mahima, for getting us all of that very, very detailed market check. But let's take a step back. European markets have inched higher, so we're seeing the stock 600 up around 1/3%, the DAX 2 up around 4/10, the CAC is up 0.5% thereabouts. So some names within European markets as well, but defense continues its downtrend. Down over 7% in the month of July now is the Nifty India Defense Index, and that now reflecting on your screen, one of the top losers in trade today. So that's the other one. But US futures have climbed as well. So you're seeing globally things looking better. India, specifically for defense, looking lower. The India VIX has risen from its 15-month lows, at least today. When you're looking overall at some names as well, and let me just pull up some names for you. One, the BSE 500 chart, of course, Mahima's covered, but the hotels business demerger, Vellore Estate and Focus on the back of that. Some losers today, a Clean Science, a Nugent Software, and you have a Sterling Wilson. We had numbers coming from Clean Science which weren't particularly bad, but it's the promoter exiting 24% of his stake. He will still be the majority owner in Clean Science, mind you, 51%. but the stock obviously not taking that, and the street not taking that too well. 8% lower on that one. Newgen Software, Sterling Wilson on the back of numbers. Sterling Wilson more on the back of that order book, which has come off. The other one, a couple of them which have hit 52-week highs on a day like this are Kim's and HDFC AMC and Anand Rathi Wealth. What a run Anand Rathi has had, and we'll discuss some of those as well. In terms of volume-led losers, a GE Vernova, a Cochin Shipyard, a HAL are some which are featuring. HAL and Cochin Shipyard, of course, within the defense pack, and the defense pack is one of the key losers in trade today. But yeah, so that's just kind of to sum it up. Let's bring in Ruchit Jain to get us better perspective on what he's seeing with regard to Indian markets. Ruchit, both the Nifty and the Nifty Bank, what's your call? Yesterday was an expiry day move, yes. Today also we are seeing sustained weakness despite global markets holding up. So give us that perspective.
Yeah, hi, very good afternoon, Harsh.
Good afternoon.
Well, what you've seen in last 3 weeks, our markets have been going through more of a consolidation phase, or what we also call a time-wise correction. And this entire correction just seems to be a sideways phase within an uptrend. Now we are trading around very crucial support levels right now, because this level of 25,000 to 24,900 is where the 40-day exponential moving average on Nifty plays around with the rising trendline support. So I think the follow-up move in the coming week and Monday or trading session, Tuesday's trading session will be very important to see whether we manage to form a base around this 40-day mark and resume the uptrend from here on, or we break this moving average support. So ideally, it's more of a time-wise correction within an uptrend. 24,900 should be the pivotal point, or what we can say the make or break level for the short-term trades. And in case only if 24,900 is breached, then we would expect some more corrections towards 24,550 to 600. Otherwise, these are the levels where maybe a markets could form a good support base. So today we are trading around that very crucial support. So the follow-up move from here on will be very important to watch.
Okay, and the Nifty Bank as well, Ruchit, give us your take on that one.
So we are going very selective on the Nifty Bank Index. As of now, there are no signs of a trended up move on the Nifty Bank Index. The major support for the index would come around 55,900, which is about more 300 to 400 points lower from current levels. So it's better to keep a wait and watch approach on the Nifty Bank Index as well.
Ruchit seems more negative than positive today. Ruchit, what are your top picks in this market, and how would you trade them?
Well, very few picks, just recommending one of them, in the show. So SBI is one stock that we like positionally. While we spoke about the Nifty Bank Index, where we can see the impact is more of the private sector banks, SBI is one of the heavyweight where the stock has recently seen a good consolidation over last 6 months. And even if you see the entire rally which we witnessed in the banking space from the month of April to June, SBI had not seen any kind of participation in that rally. So in terms of that, even now, if we witness profit booking in the overall market or the broader markets, and those stocks which have rallied significantly, they are witnessing some profit booking. But SBI is one stock which has not yet seen any kind of significant up move over past few months. So the risk reward ratio has become quite favorable from here on. So price volume action is also looking quite positive, where the recent price up moves have been supported by rising volumes. So the downside seems to be very limited from here on. For a positional basis, traders should go long on SBI over here with stop loss below 800. We expect targets around 855 to coming in SBI once we see a resumption of the broader uptrend.
Ruchit, actually, just before we get to Ruchit, can we just show the defense index or any defense ETF and just show what's happened in the month of July? So if you pull up the 1 month data, you'll kind of get that sense, right? Because I think for the month of July as a whole, defense has had a fairly ugly performance, right? Down, as we can see, 7.5%, right, in the last 1 month. Now, Ruchit, typically bouncing back, fundamentally the order flows have only gone up. India's own capex for defense has inched higher. Is this correction showing any signs of being close to support levels, or do you expect more downside?
Neeraj, although the longer term trend for Nifty with defense India is not negative, But the only thing is that the index had already rallied significantly in 3 months time frame from April to June. If you look at towards March, and when the Nifty India Defence Index bottomed around 5,000 levels, from 5,000 to just in the 3 months perspective, the index had rallied towards 9,000. So that kind of a move cannot be repeated over every 3 months time frame. So definitely, I think this is one of the corrective phase within an uptrend. I think the Nifty India Defence Index should go through some time-wise correction as well, along with this price-wise dip which we are witnessing before resuming any kind of broader uptrend. Now, on the levels front for the index, the major support for the index is coming around 7,100. We are now around 8,200 on the index. I think some more dips towards that 7,900 support could be seen in the short term. And once we get a dip towards 7,900, I think that's where the risk reward ratio could become favorable again to take some contra longs on the Nifty Defence Index. But as I said, we expect that once the index stabilizes around that 7,900, it would go through some time-wise correction as well.
Okay, so that's on the Nifty India Defence. What's the take on IT, Ruchit, at this point? We've seen some pressure on the index over the last maybe week and a half, but today it's holding up.
So I think today it might be showing a relative outperformance compared to the broader markets, but on a trending basis, we are not witnessing any kind of trended up moves coming in the either of the large cap names, nor on the mid cap names, except bearing a few like Coforge. Now we have seen a pullback move in last couple of months in the Nifty IT index, but again at the high level we can clearly see that all the heavyweights such as Infosys, TCS, HCL Tech, none of them have been able to surpass their 200-day moving average resistances as well. So I think looking from that perspective, we are not expecting any kind of positive momentum to coming immediately in the Nifty IT index. I think relatively on pullback moves, we would continue to witness some selling pressure as well.
Okay, Richard, stay with us. Time for a quick conversation. We have Ashutosh Mishra, Head of Research, Institutional Equity, Ashika Stockbroking, joining us in just a minute. But there you go. Good afternoon, Ashutosh. Let me first start off with your take on Axis's numbers. What is your assessment, and do you believe that the worst is now penciled in, or do you believe valuations are cheap, or do you believe that you would want to stay away from this one?
So we can say that worst is almost priced in. Like if you look at the commentary and intention of the management, it does not look that they have guided this in the fourth quarter that they are doing some review and the result is out in this. Normally, first quarter is also weak quarter for the banks in the terms of that they recognize the agri NPA, especially the larger bank who have a substantial higher agri portfolio. So there also we see some pressure comes into this segment. But in my view, probably second quarter onward, we are going to see a transmission impact, especially on the deposit front, to start getting reflected, and that's where the things will start playing out. And even CRR impact will be there in the third quarter part of it. So from the perspective, if you look, the worst is behind us for the Axis Bank, in my view. Whether things will improve very quickly, I have my own doubt on this part of it, because we have seen that last year also growth was lagging. If they are not able to catch up on the growth, then probably this year also will be washed out, and then we will look for FY27. But if they were to deliver the growth going forward from here, then things may be looking good for them.
Okay, all right. Ashutosh, what's your take with regard to this technical write-off they've taken? Would it worry you at a time like this, and especially at a time when we've seen what's happened to an IndusInd, and maybe I'm nowhere alluding that it's the same case, but would it at all worry you?
No, it's not a matter of worry, but only thing is that it need to be communicated much more clearly in advance, which was lacking in that terms. So there we can question management on that part of it. That if they were doing these type of deep internal audit or internal system change for certain segment of the loan, they should have communicated to the investor in advance in a much more clearer way, rather than just as a passing remark in the fourth quarter commentary.
Ashutosh, the other question that will be in the minds of the people might be that if I'm not saying they will show a similar one, but if there are some chinks in the armor of HDFC and ICICI as well, could that make people move in a sizable way from banks to NBFCs, even if they want to stay within the BFSI space, or alternatively reduce exposure to banks to some other sectors, if you will?
So our house call was ideally from the last 2 months about that, going more long on NBFC and reducing weight on the bank. Simple reason was that if you see the historical high of the bank's names in the last 2 years, it was happened because of the rate hike. When the rate reversal cycle has started, there will be impact on the banks, and we all know that will get reflected over the next 2 quarters, or 2 to 3 quarters going forward from here. So in that way, still NBFCs looks to me much better than the larger bank bet. Where we are more positive on the bank side is the smaller banks, because there they have much higher term deposit contribution, and the term deposit rate has come down substantially. So they were the larger benefit of this whole rate cut cycle and liquidity flush in the system rather than the larger bank out. So my view is very clear that prefer smaller banks with non-MFI exposure type of thing, and then we can prefer NBFCs over the larger bank.
Okay. And so what? Can I ask you, and we'll talk about NBFCs, but can I ask you, what's your pecking order when it comes to the smaller banks? Because there are people who've bought into the small finance bank and others. I mean, is there a pecking order that you have there?
So we prefer the bank where have a less microfinance exposure. So if you see the business numbers of CSB, Karur South Indian Bank, these banks are doing quite well in that pack. So in my view, these banks can do quite well going forward from here.
Okay, the other two that will come out with numbers, and we discussed those, we just touched upon those with Ashutosh, was an HDFC. Flat on the net interest income is what HDFC is penciling in, or rather analysts on the street are penciling in with regard to an HDFC. Operating profit also expected to be largely flat, just about up 1% or thereabouts. Provisions will also hold in what is supposed to be a tough quarter, especially where agri is concerned. Some of those numbers are on your screen. Those are provisional numbers already disclosed by an HDFC bank. But profitability to hold up when you're looking at it sequentially. Ashutosh, do you, a material inch up in margins not expected, of course, this quarter, but would you then say that there could be any inch down in margins? Because HDFC did see an inch up in margins in Q4. Do you think they'll give away that inch up, if at all?
Surely they will give away some of the margins which we have seen in the fourth quarter. And a peculiar case where the difference between HDFC and ICICI will be there, that HDFC has just changed or relinked their HDFC Limited loan books to the EBLR linked loan in the recent past. So they have, in my view, have taken much better linkage terms and conditions compared to many other banks with their EBLR linked portfolio. So HDFC and compared to ICICI, probably HDFC will see a relatively lower compression in the NIMs compared to ICICI Bank, in my view.
But Ashutosh, that's unfair because ICICI is also on a higher base. So how much of an inch down are you expecting on an ICICI? And if I can venture, what's the take on Kotak as well? Because those numbers will get benchmarked to Kotak's numbers.
So even these three, if I just compare the three banks which you named, I will say the Kotak will be giving one of the good result in thing, followed by the HDFC and then ICICI Bank.
Okay. I'm just.
But all three, I don't expect any negative surprise on asset quality or as such any of these three banks out there. Main focus will be on a growth and NIMS territory going forward from here.
Got it. I'm moving tracks a little bit, Ashutosh, because I'm coming to the top of the number 2 in your pecking order, which is NBFCs, and just trying to understand whether out here also, do you prefer the mid-size ones over the large-size ones, or because the cycle might just be starting after what the RBI has done, that people might prefer the larger ones, they might be the first ones off the block and gain more?
So I will prefer the mid-size one again here.
Why so?
Larger one is so larger one still has a valuation wise at much higher level. So it's more of a valuation call rather than the business call.
Okay, and what is it that you like in the mid-size NBFCs?
So if you look at, we still like Poonawalla and we like Sriram, although in the commercial vehicle segment, we expect some asset quality pressure to come in. Probably from here to next quarter, we are going to see some more positive traction in coming in. But Poonawalla is the one which I can name from that we like at this point of time.
Okay, Ashutosh, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
All right, Ruchit, just very quickly, any thoughts here on any of the or trades on any of the banks or NBFCs? You briefly spoke about it, of course, but at this hour, if, for example, if you had to trade one of the NBFCs, do the charts show positivity on any of the large or the mid-size NBFCs?
I think within the mid-size NBFC, L&T Housing Finance have shown very good strength over the last 2.5 months. There has been a consistent outperformance compared to other NBFC names in this thing, and the price up moves have also been supported by good volumes. So technically, it seems that if one has to play for a bit short to mid-term, then this outperformance could continue going ahead. So very selective within the NBFC space, looking at the momentum, but L&T Housing Finance could stand out. L&T Finance could stand out within that.
Okay, we'll leave it at that. Ruchit, thank you so much for taking the time out and being with us. Really appreciate your time. And because we need to slip into a break, but we'll leave you with a slice of a very insightful conversation with Ravi Dharamshi, founder and CEO of ValueQuest Investment Advisors, on our special segment, Talking Point Unfiltered. You've always spoken about these mega trends all through the times that we've spoken. Back from 2015-16 when I first started talking to you, when I think we were in the midst of the chemical mega trend, if you will, and the pharma mega trend, you kind of try to identify some of these and then maybe invest early in them and then ride the whole wave till you can. Would that be a good summary of one basic investing style?
So let me try and explain a bit with a little bit more nuance and a little bit more in detail. See, in any particular industry, there are phases, right? You have a tough phase, struggle phase, then you hit that inflection point, you have the great growth phase, and then you reach a kind of a plateau, then again you have a growth phase. Idea for us is to identify which that growth phase is. Everybody can name a lot of mega trends today, but even within a mega trend, you make money only when you are invested in that particular growth phase. And for that, you need to be very clear in your mind what stage that particular mega trend is. And there are markers that we keep track of, whether it is the technology curve, the cost curve, behavioral shifts, regulatory shifts, capital flow, talent flow. All these things tell us which way the wind is blowing, how strong that wind is the mass adoption reached that kind of an inflection phase? Are we going to see a J-curve kind of a growth phase? If yes, then that is the phase in which the maximum value creation tends to happen. And that is what we want to capitalize on. A mega trend can last 20 years, 30 years, 50 years, but the phase of making money might not last that long. That might be a 5, 7, 10 year phase. And that is what we want to capitalize on. I hope that's a small nuance that I had about investing in megatrends.
No, it is a good one, but just trying to probe that a bit. So this would be different for different industries, right? The growth phase, if you will, because I read a chart in your presentation that there is a start phase, a growth phase, and a scale phase, if I'm not wrong. So for every industry, its growth phase would be different.
Absolutely.
In terms of the timing.
Oh yeah, for sure. In terms of the timing, in terms of the duration, in terms of what kind of delta we can see, how much of that value can actually be captured by the participant, everything differs from one trend to another, one industry to another industry. And one trend can spawn many sectors also. It is not restricted to one sector. And for example, we have spoken a lot about energy transition, but it is actually a trend that encompasses 15-20 different sectors. It is not restricted only to solar. Solar might be the biggest, but there is power transmission, there is biofuels, there is nuclear, there is hydrogen. So many other sectors are also part of the energy transition, and not every sector hits that inflection point at the same time. Solar probably has hit that inflection point 3, 4, 5 years back. nuclear is probably some time away in terms of hitting that inflection point. So you need to be able to identify that inflection point within a mega trend to be able to ride that extraordinary growth phase where the value creation tends to happen.
What are the markers for this growth phase? I mean, are there common markers which people can take kind of?
No, so let's go one by one. I already mentioned them, but let's say technology curve. So for example, lithium-ion battery technology has hit that inflection point 3-4 years back, and it is expanding it is getting adopted very, very quickly. However, there is a competing technology called sodium-ion technology. Now the problem with lithium is that lithium is short in supply, and we might not have it in our country. So then you might still end up being facing the same problems that you face with fossil fuels, that you are at the mercy of some other nations who will, whether they will supply or not, like it is happening in the case of rare earth elements right now. Now sodium ion is freely available, but that technology has not reached that inflection point because the lithium ion by nature tends to be very dense. Sodium ion is not that dense. If it is not that dense, then you need more of the material to produce the same unit of power, and for that means maybe the size of the battery expands. So if that is the case, then the applications will be different. It might not be applicable in a transportation kind of a thing, but more stationary kind of application might be there for sodium ion. So where are we on the technology curve? Then where are we on the cost curve? It is not only about technology. Nuclear might be a mature technology, or solar, for example, is a 70-year-old technology, but it hit that cost inflection point few years back when China mass adopted it. And once China mass adopted it, the prices crashed. And when prices crashed, that's when the mass adoption everywhere else in the world has begun. So along with the technology, you need to hit that point in cost also. Then regulatory tailwinds need to be in favor. Governments need to be supporting that, no, we are going to adopt this particular technology and we are going to incentivize the user industry to deploy that. Then you need to see the money flowing in, that people deploying the money need to be able to see the IRRs, and if they can see IRR, that's when the money will flow into it, and that's how everybody will plan their capex and their capacities according to the opportunity. So a confluence of a lot of things need to happen for you to say that this particular technology has reached the takeoff stage and now money can be deployed. From primarily a listed market investor's point of view, investing in something that is 10-20 years out is not a prerogative. We don't invest in something that is loss making or not reach that kind of an inflection point. So we have a very time limited view of these trends. In next 5 years, which are the technologies which will hit that inflection point where we can make good money, and that is how we narrow down our focus.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी।
On to our next segment. It's 2:30, so that time of the show when we get you what's being heard on the street. And we are joined by Hiral Dadia to decode all the chatter from her dealing room sources. Hiral, good afternoon and thanks for joining in. What are you gathering from your sources?
Lots and lots of news because it's a day where you're seeing a lot of stock-specific action. But to start with, Edelweiss, that has been in focus over the last couple of trading sessions. Today, there is some bit of profit booking, but there is a chatter of buy flows that are coming in on large HNI desks for this one. If you see the stock, it's up nearly 5% in the last 5 trading sessions. And there is a buzz of a potential corporate announcement also that could be coming in on a Edelweiss, so watch out for this one in trade. Apart from that, L&T Finance will be reporting numbers. Now, if you see the stock performance, 40% upside in the last 6 months. Again, huge buy flows on the institutional desk in terms of L&T Finance as well. And the dealers are indicating that the first quarter could turn out to be strong in terms of the numbers. So watch out for L&T Finance as well. Two companies that are on the back of news where there is a chatter of an OFS that could be coming in there. Now again, buy flows coming in on the HNI desk at lower levels on both these counters, that is Amber and Coforge. Amber, we also know that there was a fundraise. In fact, there are conversations happening that there could be a IPO of one of its subsidiaries in terms of where Amber Enterprises is concerned, and a Coforge again only on the back of a OFS. So watch out for both these names. And lastly, a potential fundraise from a foreign investor is what Adani Green is eyeing. That stock is under pressure today, but overall, that, I mean, with the kind of interest that you're seeing in terms of renewable energy as well, Adani Green is on the cards of HNIs right now.
Okay, so all of those on the list, and
it's very interesting. I just have a follow-up to Hiral though, because I remember we speaking about Edelweiss 2 days ago as well, and it's a stock that's kind of stayed at these levels with volumes going up, of course. So what is this buying for? Any idea around that? I mean, is it because there is always this talk, right, that they have 4 or 5 subsidiaries, they're incubating more. So what is this news?
So the buzz is with a corporate announcement, so very much inclined towards what you're saying with the individual subsidiaries that they have, but no confirmation so far in terms of what are they planning to do in terms of the corporate announcement. It could be anything to do with the subsidiaries.
Okay, very interesting. So Edelweiss, let's pull that one up, and let's also have a look at L&T Finance, because you'll have numbers for L&T Finance also come through. So that one also will be in focus. 2% higher on an L&T Finance on a day like this. Buy flows seen, and Q1 could turn out to be strong is what dealers are indicating. Kunal Shah joining us at this hour. Mirai Asset Sher Khan to talk to us technicals. Kunal, let me start off with those two names within the NBFC pack, and Edelweiss and L&T Finance. What are you seeing? Are you positive on any of these?
Good afternoon to everyone. Definitely on Edelweiss, I think the structure looks quite positive. The long-term charts also indicates high top, high bottoms on the technical chart, indicating this momentum is likely to continue towards the mark of 135, 140 on the higher end. So I'm bullish on Edelweiss, looks very strong on the chart. LTF again, result based. So overall, if you look at the long-term chart, it had already given us a double top breakout on the monthly chart around the mark of 190. So now that will act as a very strong support on the downside. So any dips, I think could be a good buying opportunity. 190 should be a stop loss on the downside.
Would you trade the index at all, Kunal, or leave the index out because it's anyways not doing much?
So I think for today's trading session, what we have seen that Nifty has given us a confirmation of the downtrend, and we expect Nifty to go towards 24,700 And if we are able to sustain below that, then the next level directly comes at 24,200 on the downside. So overall, our view has been negative on the Nifty. Bounces should be an opportunity to initiate shorts on the Nifty index. We have already seen IT is an index on the technical charts where the larger term pullback is over, and now we expect further correction into the IT index. So that is one thing that could play out on the negative side. Defense as a sector, we have already seen profit booking from higher levels. So any bounce in defense could be again an opportunity to increase, to see the selling pressure. So we are negative on defense as well. So I think that will push the markets on the lower end. Now we have three big results coming up: Reliance, HDFC, ICICI. So again, that is one point where the market could have a gap up, gap down opening on Monday's trading session. But overall, there is a clear-cut divergence in Nifty and Bank Nifty, where Nifty is showing us weakness, whereas Bank Nifty is more or less trading in a range. So I think probably from next week, we'll have a directional move on the markets till the time Nifty doesn't surpass its 20 DMA, which is placed at 25,300. The view stands on the negative. Bounces should be an opportunity to initiate shorts. We are expecting short-term targets of 24,700 on the downside. As far as Bank Nifty is concerned, here I think there's a wait and watch is what I'll say. Avoid trading Bank Nifty. You have two banks coming out with results which have more than 30 to 40% weightage on the index. So I think there is no point taking a trade here. So avoid Bank Nifty index at the current levels, and Nifty is something where intraday bounce should be utilized as a sell opportunity.
What about your ideas, Kunal, for the afternoon?
Yeah, so I think I have two stocks where I'll be focusing on. One is on the long side, one is on the short side. First is Dalmia Bharat. I think that looks technically strong on the charts, where it has given us a fresh breakout, and we expect further upside into the stock. So that is a buy for me, keeping a stop loss of 2150 and looking for targets of 2400 on the upside. So Dalmia Bharat is one stock which is looking very strong on the technical chart. The second stock where I think sell side potential continues to increase in the entire space. We have already seen some profit booking and correction at the higher levels, but I think the capital market theme, this is where I think still some selling pressure is left, and I have a negative stance on BSC. So BSC has already seen a correction from the higher levels. Now there was a pullback, which we feel is over, and this pullback can again take the stock down and could make a new swing low as well. So that is where BSC is a sell for me from the current levels. Keeping a stop loss of the recent swing high what it had made. The high was 2585. 2585 should be a stop loss on the upside, and on the downside I'm expecting targets of 2360 to 2340 on the lower end.
Okay, so that is the take coming in from Kunal. But, you know, if anyone had any bets on what the stock of the day was, I wasn't betting a penny on this one. So Axis Bank is the stock of the day for us. In 5 out of the last 7 quarters, the stock has had a downward move on the day after results. And not just a downward move, it has moved down by 2.8% or more. And this 2.8% was, of course, 7 quarters ago. So of late, the volatility post the day of results has just gone up. 5% lower in trade today. There have been misses in terms of expectations. Let's pencil them out one by one. The first one is with regard to provisioning. And elevated provisioning is one thing due to technical write-offs, but that was only to the tune of 821 crore. The balance amount of provisioning was still 3100 crore plus, which was well above the 2200 crore which the average analyst on the street had penciled in. So provisioning clearly a shocker, both on the in terms of the technical write-off itself was a shocker, but even outside of that. Technical write-offs were taken largely out of prudence, is what the bank said in its commentary yesterday, and they called themselves the most prudent bank, both in terms of providing as well as in terms of reversing the provisions made. So both of those, they've called themselves out as the most prudent bank in the country at the moment. Even adjusted for technical write-offs, and I mentioned this, the provisioning was elevated. Let's talk about point number 4. Margins were a miss. It was expected to trend lower, but they've spoken about through cycle margin of 2.8%. Now we've arrived at a margin of 3.8% already. The through cycle margin, I beg your pardon, was 3.8% is what they've penciled in. So we've already arrived at that margin number, and only 25 bips of the rate cut has been priced in. So we will first see that 75 basis point rate cut getting priced in, starting likely next quarter and fully maybe next to next quarter is what the management indicated. Talking about one beat as part of the entire earnings, operating profit was a beat on the back of strong other income and lower OPEX, which was welcome, frankly, because they've spoken about that 2 to 2.1% OPEX on various conference calls over the last 8 to 10 quarters, but that's not been delivered. Maybe still not delivered, but at least a path towards lower OPEX has been delivered. So positive on that count. Let's talk what brokerages are saying. Let's pull up what Jefferies is saying. Asset quality disappoints, expects trends to stabilize. They've cut the target price to 1370. While some of those lines come on your screen, we'll keep flipping over. Slippages have surged due to new classification. Growth stays moderate with margin correction is what is being penciled in. Macquarie is saying the PAT miss is driven by higher credit costs, but Macquarie's last line, if we can pull that one up, that was with regard to the fact that the growth is actually onerous and there persists growth, there persists a risk on the return on assets estimate as well. So that's with regard to Macquarie. Let's talk about Citi, and Citi also very similar lines. They believe that there is a cut required with the way one views Axis. They maintain their neutral, they cut their target price. Let's go across to Kunal. Kunal, what's your take with regard to an Axis Bank in particular at this point?
I think definitely Axis, if you look at this bank, one of the banks which have been an underperformer, the kind of sell-off for what we have got in the stock, or you can say rejection on 27th of June, that again indicated that the stock is not likely to outperform, and has already breached this support of 1150 on the upside. So I think that's a strong resistance. So any bounce would be an opportunity to initiate fresh shorts. You can expect this stock on the monthly chart at least to go towards the mark of 1000 to 950 on the lower end. So I think it is ready to get below that 4-figure mark. So I think 950, 960 is where I'm looking the stock heading on the monthly chart.
950, 960, but it's recouped. I mean, no, actually you can't call it a recoupment because it's still down about 5% per se. I think 1100 was touted to be this big support, and anyways, we heard the technical view from Kunal, so watch out for some downside here. Neeraj Devan is with us. Neeraj, good having you. Thanks so much for joining in. And I wonder, what do you make of Axis numbers, and do you believe that fundamentally there is downside here?
Yeah, good afternoon. Yeah, Axis, if you compare the large cap private sector bank, Axis Bank will always be at a discount. So there was always a case that it should narrow the discount, but the kind of numbers which has come this quarter also, I don't think that discount is going to get narrow anytime soon. So I think it may still underperform the basket of large private sector banks. So I think there are definitely better options available for an investor. I think let's wait and see the next quarter. There's no hurry to invest only in Axis Bank, and then see if there's any improvement happening there. Then we can think of investing in Axis. So for a new investor, to put in fresh money, I don't think there's any hurry to buy Axis because it's fallen by 5% today. There's definitely a reason why it has fallen by that much today.
Okay. Neeraj, we were just marking some of the sectors which have had a slightly iffy month of July, right? It was believed to be a good month. So far it's been okay. But somehow defense stands out as a sector which is cracked quite significantly, nearly 8% downtick after the proof of concept post Operation Sindoor. So what is this? An overvalued sector getting a bit of a reality check? Or is this a dip that you would use to buy because you believe in the long term?
Yeah, both the things. Like it is definitely because it was overvalued. It has run up in the shorter term Short term, it has run up a lot. So there had to be some profit taking, some correction, because, it's a long term story. So I also believe in the long term story. I think someone who wants to put it in for a long term, I think these are opportunities whether you can add position. In this, what we were saying this earlier also when the stocks had run up a lot, that you will get opportunities because market doesn't run up in a linear way. So you are getting the opportunities. Long term story is still intact. So go for the strong companies, which have done well even on the operation front as far as the financials are concerned. So I think I think I will go with that. That there is opportunity and the profitable. The current downturn is only because of profit taking.
Okay. All right. Let's take a bit of a pause here. One of the bigger Nifty companies, or the biggest Nifty companies, all set to declare earnings today. Reliance Industries, revenue expected to fall by around 7.5%, with the biggest savior for the company being the telecom sector, is what analysts are penciling in. Swami joins us with all the details on what we can expect. Swami.
Well, a muted set of numbers are expected from Reliance Industries in the first quarter of FY26. Revenues are expected to be down by nearly 7.5%. EBITDA could increase by around 1.5%. Margins are expected to come in at 18.4%, while the net profit, that is expected to be high by around 2% on a sequential basis. Now, if you look at the segment-wise data, the retail segment, which contributes the most to its SOTP target price, that there the revenues are expected to be down by 4%, while the EBITDA is expected to be down by around 1%. However, on a YOY basis, the numbers are expected to grow on the back of the store additions and higher footfalls that Reliance Industries has seen in the first quarter of FY26. Now, if you look at the O2C segment EBITDA, that is expected to be higher by around 2% on a sequential basis. Now, largely the Singapore gross refining margin, that averaged around 77% higher, and this is the sole reason why the O2C business is expected to report a good set of numbers, because these positives are largely offset by a maintenance shutdown that happened in the first quarter, and also the petrochemical margins were weakish in the first quarter. So these two negative factors had largely offset the higher GRMs that we had seen in the first quarter of FY26. Now, if you look at the oil and gas exploration EBITDA, that is expected to be down by around 4% on a sequential basis, largely on the back of lower production number and lower volumes that we had seen in the first quarter. Now, if you look at Reliance Jio, that is a telecom arm of Reliance Industries, that is expected to report a solid growth. In fact, the highest growth compared to other segments of Reliance Industries in the first quarter of FY26. Revenues are expected to be higher by largely around 3%. EBITDA is expected to be higher by nearly 4%. Margins are expected to come in at 53.3%, while net profit is expected to be largely flat at close to 6,700 crore. The ARPU number, that is the key number for a telecom company, that is expected to be high by around 1% at close to 208 rupees, while the subscriber number is expected to come in at close to 49.75 crore. Now, the numbers are seeing a growth largely on the back of the tariff hike that company had done nearly 4 quarters back, and also because of subscriber addition that we have been seeing for Reliance Industries. In fact, this is the 4th consecutive quarter where we will see a growth in the company's ARPU on a sequential basis. Now, the key things to watch from Reliance Industries earning will be their management outlook where it comes to the refinery and the petrochemical business. What is the commentary coming in for the new energy business? What is the commentary coming in for ARPUs and tariff hike that is expected even going forward? And how has been the growth when it comes to Jio Fiber, and what is the capital expenditure plan will be important to track from Reliance Industries earnings.
Okay, thank you for that very, very detailed breakdown of what we can expect. But joining us now, Prabal Sen, Senior Research Analyst covering Indian oil and gas and part of ICICI Securities. Welcome, Prabal. Let me start off by asking you, what are the key numbers you're looking out for? Swami clearly seems to believe that telecom will be center stage when it comes to the Q1 FY26 numbers. Are you of the same view?
Yeah, I think Swami pretty much covered whatever I had to say, so I don't have much to add. I think he pretty much explained all the details that are there. But I think in the OTC segment, I think it's going to be interesting to look at how much the numbers actually improve on a QOQ or on a YOY level. I think someone did mention the fact that there was a shutdown, and a shutdown impacts not only the throughput but also the product yield for that quarter. Otherwise, you would have probably seen an even stronger number. If you just take a look at how GRMs have behaved and the fact that Petchem is broadly flattish, if not slightly better, this number would have been stronger if not for the shutdown. Telecom, you're absolutely right. Our telecom analyst, I think, had put out a note a few weeks earlier as well, highlighting that Reliance is gaining ground in BWA, enterprise, and fiber, ahead of their rivals, if my memory serves. And therefore, the improvement that we are seeing should actually gain a lot of momentum. If I look at his estimates, almost the entirety of EBITDA growth over FY27 and 28 is frankly being driven for Reliance from the telecom segment, built on an expectation of improving ARPUs, recapture of subs in mobility, as well as a growth in the enterprise and fiber space. So to that extent, I think telecom definitely will be one to watch. Retail is, I think, something that we would also watch with some interest. If you look at the trends, the last 2 quarters actually have seen a little bit of a recovery in retail momentum. Before that, we did have a couple of quarters where growth seemed to be slowing down. There was a lot more closures of physical stores where they were probably cleaning up some of their offline presence and basically optimizing their inventory. To that extent, I think the slowdown is something that had impacted numbers. That seems to be getting covered. And now again, even in retail, we are expecting that momentum should come back. So to that extent, I think this quarter should be a good indicator of what to look forward to for the next 12 to 18 months from both these high growth segments. OTC, as always, remains cyclical. And frankly, it's extremely uncertain at this point of time which way GRMs and Petchem will move. But this quarter definitely will be better from a YOY perspective.
Yes, you've also covered plenty, Probal. So tough to kind of question that. But give us a perspective. If there was one pocket which could surprise on the upside or which could prove to be a dampener, what would that be? What is it that you feel in your gut that could be a positive or a negative, on either side?
No, I think as has been the case over the last few years, retail and telecom are the sectors that people look at in terms of, and of course, the capex number as well as the cash flow number. I think that is something that should increasingly come under focus as we move to probably a situation where a lot of the capex on the telecom sector is now behind us, and it's basically new energy capex. That's the only high cap should actually start to see a little bit of a decline, ideally speaking, improving the FCF yields, improving the return ratios. So I think not just this quarter, but over the next few quarters, capex numbers, net debt numbers are something that at least I would definitely want to look at, because that has been our one concern or one slight, skepticism in terms of valuations, where we have not really seen FCF yield conversions and return ratio improvement to the extent that we would like. But earnings growth, I think, definitely led by retail and telecom. So I think metrics on those two segments will be the ones to watch out for.
Excellent. Thank you, Probal, for rounding that up. Cash flow is the other piece, absolutely spot on. And something that, of course, we'll have to keep our eye out on as the numbers come out later today evening. Thanks so much, Probal, for joining us this afternoon, giving us that perspective. But ahead of numbers, Kunal, your take on a Reliance, quickly on charts, how is it looking?
See, on the chart perspective, if you look at Reliance, the long-term chart still remains intact. Yes, there could be some short-term volatility. What we can expect is that firstly, Reliance is trading below the 20 DMA. So there's a clear-cut hurdle around the mark of 1500. On the downside, the support for the stock is placed at 1420, 1410 zone. So that's a demand zone. So probably this is a 50-point range in which the stock is stuck, and you can expect the stock to consolidate in this range post results as well. So I'm not expecting significant move on either side. Only if on the downside 1430, 1420 is breached decisively, then you expect further correction into the stock, or we might continue to consolidate between 1400 and 1500 for Reliance.
Okay, all right. It's also time to slip into a very short break as we round up this segment. The last half hour, of course, ahead of us. And of course, we'll get you the top buy today, sell tomorrow recommendations. And we'll start talking a few more stocks which are buzzing in trade. So stay with us.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ही अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Welcome back. You're watching India Market Close. Well, markets, Harsh, are still under pressure, down by about 0.6 odd points. Slight recovery from its day's low point, but we're almost at where we started the show, on 0.6% down. The Nifty IT also under pressure. Banks under pressure for sure. Axis dragging the entire index down by about 0.9 odd percent. The broader markets also seeing pressure. Let's pull up the mid cap 150 and the small cap 250 and see what's happening there. Mid cap 150 down by about 0.5 odd percent, small cap 250 also down by about 0.5 odd percent. Nifty defense seeing significant amount of profit booking there. Let's in fact try to pull up the counters on the Nifty defense and see data patterns down by about 4 odd percent, Bharat Dynamics down 3.8 odd percent. Astra Micro also down by about 3 odd percent. The only counters in green in fact are Zentech, MTAR and Dynamatic Technologies, which is almost flat as we speak. But let's move on to our next segment, that is bull versus bear. And today we put spotlight on Wipro. The tech major posted its first quarter results, and in fact it's the counter that's the top gainer on the Nifty as well today. We have Puneet joining us with a bull versus bear case on what's happened with the earnings. Puneet, what are you picking up?
Well, thank you for that. It's definitely been a very strong quarter for the company in terms of, the deal wins amongst others, and we'll be putting the spotlight on that. But there are some key challenges that could prop up going forward, and we'll put that in the bear segment as well. But first, the strong deal win momentum in this quarter. 16 large deal wins was what the company had in Q1. Last quarter, they had 17 large deals. So the momentum of large deals has continued. They also had 2 mega deals in this particular quarter. They mentioned that this was essentially one of the mega deals was conversion with a client who had been with Wipro for almost a decade. So they have been able to maintain revenue growth share with its key clients, and that's one of the key positives that the market is taking today in terms of Q1 results. But a lot of the deals that the company won even last year as well, they had $5 billion in terms of large deals in FY25. Some of them were transformational projects, and that have now been put on hold, something that we're witnessing across the IT companies. So for Wipro, that will be one of the key ones to watch out for. If the deal wins are translating into financials and showing into revenue growth, that will be one of the key challenges going forward. But the market clearly taking the deal wins as a positive factor. When you look at the second bull and bear case, they have been saying that the company was one of the biggest beneficiaries of vendor consolidation, and this is a very key point because largely we see companies like TCS and Infosys being the beneficiary of vendor consolidation, while players like Wipro as well as someone like a Tech Mahindra loses out. But now the company is mentioning that they've been able to be a big beneficiary in this space, and hence that is going to be important in terms of revenue growth going forward. So this could be one of the positive factors, but the deals may bring revenue growth at the cost of pressure, and that's something that we know that once these large deals come in the short term we see a margin impact, and we've seen the consolidated margins come to 16.03%. That's also led by the consulting aspect. So that will be one of the key things to watch out for going forward. In terms of brokerages, Macquarie as well as Morgan Stanley is maintaining a positive view. They have said, Macquarie is saying that this year target price of 290 rupees per share. And this is key because the analyst Ravi Menon has been tracking the space for the last 3 decades, and he's seeing Wipro as a turnaround story going forward. Morgan Stanley has also emanated a similar positive view. They've gone on to say that this has the potential to be a key re-rating trigger because Wipro has underperformed over the last few years compared to the large cap IT players. In terms of Jefferies, they mentioned that the improving outlook is positive, but the upside could be capped going forward with the differential that we've seen in pricing in terms of share price performance has inched up even before the results came. And finally, in terms of the valuations, at 19 times price to earnings for FY27, while it is positive and much slightly lower, at least I can say, with compared to TCS, who's at 23 times price to earnings. The valuation discount compared to the other large cap peers, which was visible 2 to 3 quarters ago, has now gone because the market is sensing positive deal wins as well as Wipro to be a vendor consolidation winner. So that's the bull and bear case on Wipro. We are seeing multiple positive factors and we're seeing the stock react today on that as well. Going forward, margins will be in focus because of these large deals.
All right, Puneet, thank you so much for giving us all those details with regards to where Wipro stands. Neeraj, hi, good afternoon to you. Your reading on Wipro, how are you, placing it against its peers?
Well, good afternoon. Actually, last couple of quarters, Wipro has definitely surprised, compared to the peers. So I think that continued this quarter also with the kind of deal win they've announced. And, the stock had taken a dip pre-results because of the other results which had not come in line with the market expectation. But generally, I'm not too positive on the large cap IT space for the time being. So that's why I have a negative bias towards the sector. Though Wipro definitely is doing better than the peers, but generally I'm not so positive because I want to see some further improvement happening across the sector. Because if Wipro is able to crack deals in this environment, definitely the margin will not be that great, and they will somewhere reflect down the line. So I want to see if those sectors doing well, deal wins are better, improving for the sector, then I can make a case for investment in the sector, which I am neutral right now.
Kunal, anything with regards to where GMDC stands? The stock is flying in trade right now. It's up 12% as we speak. Anything specific that you're observing on the charts?
I think on the technical charts today, the stock has given us a breakout above the 20 DMA. So that's positive. On the weekly chart, if I see, we have seen the 5-6 weeks consolidation high has been taken out with strong volumes. I think definitely a very strong candidate on the further upside. You can expect the stock to go towards the mark of 490, 500 in the very short term. So already the stock is quite up, so utilize dips to buy the stock. If you get it around the mark of say 410, that would be a good entry point for the stock.
Interesting. Okay. Another counter that's in focus on the back of its earnings is Polycab. It's been yet another good quarter, good growth in terms of cables and wires, as well as a good growth in terms of FMEG as well. There's profit growth that the company has seen second quarter in a row, and of course, all eyes on the counter after even Jefferies and UBS that has reiterated their buy rating and raised the target prices as well for the counter. Puneet joins us with key triggers behind this bullish outlook.
Well, thank you for that. So it's definitely been a very strong results for Polycab. They've been outpacing the industry growth, and now that's starting to reflect in the numbers as well. So we had a positive view from Jefferies, a target price of 8,180. They're mentioning 3 key points. It's the highest ever sales in quarter one, as well as profits in quarter one. So that's a key positive. They mentioned that the execution continues to be for the highest and the strongest for Polycab in the industry. and that is also leading to the cables and wires segment where the growth momentum is continuing. In terms of the fast-moving electronic goods segment, which includes fans amongst other key segments that Polycab is in, they're seeing that the profitable growth has now started to come in and it's expanding further on their target as well. For Polycab, they view it as one of the key plays in the private capex as well as the housing and infrastructure space, and they're anticipating FY26 to 28 in terms of EPS growth at 26% CAGR. So despite the valuation being elevated, the growth over the next 3 years is estimated to be very strong. We also had someone like a UBS come out with a positive view. They've actually increased their target price to 8,100 from 7,150 earlier, and they're also mentioning that Polycab is showing its growth prowess, being the leader in this space. They've said that the FMEG growth is profitable for the second consecutive quarter, and the valuation remained constructive on the positive demand scenario as well as the EPS CAGR. And we also had a chance to speak to the management of the company. So CFO Gandharv Tongya actually highlighted one of the key projects, the Project Spring, and what it will do in terms of the growth versus the cable industry is expected to be 1.5x over the next 5 years. Listen in what he had to say.
We gave our guidance for the next 5 years in Jan this year. We call it Project Spring, wherein we are trying to transform the organization. This, in a way, is an extension to our previous transformational project, Project Leap. Within the Project Spring, we aspire to grow at a rate better than the industry's growth rate in cable and wire, perhaps around 1.5x of the industry growth rate. As far as FMEG is concerned, we would like to grow at 2x of the industry growth rate. On profitability, let's split in 2 parts. On cable and wire, historically, we have been guiding 11 to 13% of EBITDA margin. We believe we should be able to maintain it, and wherever possible, probably would be able to improve it. As far as FMEG is concerned, last 2 quarters, we have been able to report profitability in this segment, March as well as June this year. Between now and 2030, we would like to get to 10% of EBITDA margin in FMEG. So overall, at a company level, it's possible that we are able to improve on our profitability predominantly because of FMEG improvement.
Okay, so that's of course the management of Polycab, but Neeraj Diwan, positive with regard to Polycab, you had a slew of brokerages which came out hiking target price by as much as 1,000 rupees. On the back of what were, of course, a very, very strong set of numbers.
Yeah, definitely the kind of number they've shown this quarter as compared to June quarter last year have been tremendous. So if you see this kind of growth coming for the year, then definitely the stock deserves the re-rating from these levels. And I think the kind of targets which the street is expecting it to reach will be reached. And this sector also generally, I think, after some consolidation has again picked up. So I think order flow has also increased for them. So I agree with the view that this definitely can be a positive sector for the year.
Okay, interesting take there. Kunal, anything on heritage foods that you're seeing? The numbers did come out, but they were not as impressive as the kind of stock movement that we've seen in trade today. It's up 7%, but we saw margins shrinking. We saw net profit down almost 30-odd%. Is there a trade there?
See, overall, the trend for the stock has been positive. You have seen a lot of volatility into the stock. Yesterday it was down by 5-6%. Today it is up by 7%. So I think it's quite a volatile stock. Overall, the trend is intact. If you are holding long or want to initiate a long on it, one should keep a strict stop loss of 440 on the downside. If that is triggered, then exit. And if the momentum continues on the higher end, it can go toward 530, 540 on the upside.
And anything on Kalamandi that you've seen? I mean, this stock has been one of those stocks that's been seeing momentum, in the past few odd days of trade.
Sorry, I don't track this stock, so I have no view on it.
No worries. Anything on Orissa Minerals that you're seeing? The stock is up 10% as well.
Yeah, I think you are seeing the mineral stocks, whether it's an GMDC, NMDC, or an Orissa Minerals. They are buzzing in trade today, and they are backed by volumes. Definitely a good bounce what we have seen from the oversold zone. So this can extend towards 5750, 500 on the higher end.
Neeraj, this clean science and the possible promoter exit, at least partial exit of the promoter, is that a concern at all? Because the stock has reacted really adversely to that, 8% lower. and promoters continue to hold 51%. The company in its quarterly earnings, the numbers didn't look bad either. So just not sure if you track it, but do you have a take?
Yeah, basically, I had a chance to look at the numbers. So numbers were not bad. And even if you compare it to other companies in the sector, the kind of multiple they are trading at, Clean Science after the fall today on valuation looks attractive. So I'll have to see and look into the news about the promoter exit and reducing stake. That's something which may have concerned the street, but purely on numbers, I think this looks like an opportunity.
Now, another set of stocks that are in focus on the back of earnings includes Shoppers Stop, Route Mobile, as well as Starlink and Wilson Renewables. We've Jasmeet joining us with more details on what's happened with the earnings of all of these three companies. Jasmeet, what are you picking up?
Well, right, thank you for that, Mahima. Yes, there are the three earnings here, and let's break down each earning and understand what's happening with the market. Firstly, it's Shoppers Stop. Well, the stock is down 5% in trade today. The key highlights from this particular result will be the premiumization has led to sales growth, while the healthy growth across all the operational KPIs was seen in this particular quarter. While the first citizen segment of the management contributes sales roughly 85%, and management also opened 4 Intune stores with a capex investment of 21 crore in this particular quarter. Now, quickly, let's look at the numbers, how the numbers have reacted for this quarter. When you look at the revenue, it's up 8.6%. While the EBITDA is up 20.2% for the management. The margins are at steady 14.8% versus 13.2% in the previous time. Well, the company has reduced the net loss. It's currently at 15 crores while compared to 22 crores in the previous year. While now when you look at the operational metrics for the company, the average transaction value per transaction has increased by 6%, while the average selling price has seen an uptick by 3%. While the next on my list is Route Mobile. While the stock is down 5% in trade today, let's quickly understand what are the key takeaways from this particular result. The decline in volume came from the communication platform aggregator, which impacted the performance in this quarter. Secondly, the low margin customer contracts were written off in this quarter. The management terminated those particular orders so that they can have better margins going forward. Thirdly, the company continues to see a softness when it comes to the SMS segment of the business, while the overseas business, which roughly contributes 95% of the overall revenue, saw an uptick, saw a downtick by 9%. When you look at the financials, the revenue is down 4.8%, while the EBITDA is down 24%. And the margins are at 8.9% versus 11.2% in the previous year same quarter, while the net profit is down 32%. The next one would be Starlink, Wilson and Renewable Energy. While the stock is down 4% in trade today, the key takeaways from this result would be the revenue uptick was by the higher execution in EPC project. The EPC is the biggest project, biggest segment of the management, which contributes roughly 95% to the overall revenue, while the EPC saw an increase of 98% on YOY basis, while the O&M segment, that's the operational and maintenance segment, also reverted to a steady state level as per management. The net debt has increased due to the higher payment to the vendors, while the company also signed an MOU with South African government for construction of 961 megawatt of project. While as per the financials, the revenue is up by 92.5% in this quarter compared to last year's same quarter, while the EBITDA is at 85.5 crore. The margins are at 4.9%. It's again an uptick from 2.7% in the previous year same quarter, while the net profit stands at 31.9 crore. Well, so much positive for this company, but the stock is still down 4%, given that on QOQ basis they have seen a downfall of net profit at 42.5 crore compared to 55.38 crore in the previous quarter. So these are the stocks to watch out for.
Okay, thanks so much for that, Jasmeet. Along with all of those, let me also quickly mark out Hindustan Zinc, because that one's numbers, Q1 FY26 revenue has gone down by around 15% Of course, you can see the volatility on that stock on the back of the numbers, but the numbers were largely in line. So while the stock tanked 1% and thereafter has recovered, that's the key positive. Margins have fallen 335 bips. The estimate was 49.5%. It's come in at 49.65%. So marginally better on the margin count. Profitability too has fallen by around 25%, but much anticipated. 2234 crore is the profit after tax number versus the 2107 crore which was estimated. So largely, in fact, above estimates, if at all I should call it that. Neeraj, some of these metal counters, including the likes of a JSW Steel, expected to declare numbers. Give us your take on something like a Hindustan Zinc. Are you liking that one? Is it on your radar? High dividend yield promoted by a Vedanta. What's the sense?
Yeah, actually, I'm positive on the non-ferrous side. So,
Okay.
I like non-ferrous metal space. Hindustan Zinc also purely on the business, zinc prices, silver prices, all, should do well going ahead also. The kind of demand which is there for zinc, silver, for industrial use, for various use. So but Hindustan Zinc had a problem in the sense that there was sale by Vedanta. So that also weighed strongly on the company. You saw the stock price drifting down after that, and plus there's no clarity on the further stake sale. That is also market has been waiting for that. So even that is not coming. So I think that is the reason why the stock is trading at these kind of valuations, because the stock is definitely cheap, and with the high dividend yield, this should be an attractive bet for a long-term investor. So I think at these prices, definitely one can accumulate this. Though in the short to medium term, there will be definitely we'll be looking forward to what is happening as far as the further disinvestment is concerned.
So that's on Hindustan Zinc, but the other one is JSW Steel, and let's quickly pull out what we can expect with regard to where JSW Steel is concerned. The India operations saw a 5% decline on a sequential basis, so volume has come off, but capacity utilization for India stood at 87% in Q1 FY26, which is decent. When you're looking at expansion, realizations are expected to expand. Spreads are also expected to expand. In fact, the EBITDA per ton is expected to go up by 23% on a sequential basis to 10,476 rupees per ton. EBITDA per ton is set to improve on the back of lower coking coal costs and better steel prices. This is as per JP Morgan, of course. Overall, the EBITDA number will rise 13.5% is the expectation. Margins to rise to nearly 17%. To 67 bip rise in margins on a sequential basis. Profits will rise 37% is what the street is indicating. Neeraj, within the metals, would JSW feature in one of the top 2-3 names that you would want to look at, both in terms of value as well as growth, both?
Yeah, there's definitely growth, but in the short to medium term, I'm a little concerned about the ferrous metal space. I think JSW Steel also is a company which has a high debt, and if there's some slowdown in the earnings, can really impact a lot in the overall profitability. So I'm not too positive on the ferrous metal right now. One, because of global issues, because of what will happen with the tariffs front is concerned, China slowdown. So all that will weigh on the metal space as a whole. So that's why I'm just positive on the non-ferrous space. But I think there the demand is more than what the supply is. So that is one space I'm still positive on.
Okay, Kunal, do you have a view with regard to a couple of these names which have either declared numbers, Hindustan Zinc or JSW Steel?
I think JSW Steel, I think it has been just consolidating since the last 1 month or so, and I don't expect any momentum to get built up over here. I think on the metal space, if somebody is looking out on the counter perspective, then I think sale that should be on your radar. Here we have seen that the stock has given us a consolidation breakout on the technical charts with volumes, and this is where 135, 130 zone, which was the hurdle that has been taken out. And I expect this can go towards the mark of 148, 150 on the hour.
Okay, Kunal, I don't think I took your view with regard to a clean science. Do you have one?
For clean science, I think overall the chart was on the negative side. The stock has given us a breakdown in today's trading session. And now we can expect further declines for the stock to fill the gap of 1230, 1240 on the downside. And I think that filling of the gap could be a good opportunity to go long into the stock. So short-term perspective, if you look at, there is some bit of correction still left. But I think 1230, 1240 should be a good level of entry on the long side.
Okay, so that's with regard to a clean science. A couple of other big buzzers, data patterns, Bharat Dynamics, both of those are down over 4%, and so is the Nifty India Defense. Kunal, your take on a couple of those names before I take a BTST call.
Yeah, I think on the defense space, in the last 2 weeks, we have been suggesting our clients to exit the defense space. It was overstretched. There was profit booking, which was clear-cut visible on the chart as well. So there is sector rotation happening, and we have been negative on the stock. In fact, we had initiated sell on HAL, BEL. That worked out very well. So I think overall we feel that still there is downside left on the defense space. So I think again any technical bounce what you get into the defense space would be an opportunity to exit. Stocks like HAL, BL, Mazgaon Dock, GRSE, this could be the stocks which can continue the downward momentum. Specifically for HAL, if you look at it, it has given us a breakdown and can still come down further towards the mark of 4,500 to 4,400 in the very short term.
Okay, your BTST trade for today, Kunal?
My BTST trade over here will be Dalmia Bharat. I think strong breakout on the technical charts what we have got, and you can expect further upside into the stock. It can go towards the mark of 2280, 2300 on the upside in the BTST trade.
Okay, Neeraj, a lot of cement companies are buzzing in trade today, and this is because Nuvoco Vistas came with its earnings today. Good EBITDA growth there. What is the kind of reading that you're taking from that particular earning, and how do you think this quarter will fare for these cement companies?
I think because the raw material pressure was low in this quarter, and so the demand is yet to pick up, which we had expected earlier, and the prices also have not gone up as far as cement bags are concerned. So, but because of the cost being low, the profitability should have improved this quarter. And I think going ahead, you'll see pickup in demand also happening for the cement for the sector. So I am positive on the sector for the rest of the year also, with raw material prices being low and demand picking up. So that will give an opportunity for the company to increase the price also somewhere down the year. So I think overall this should be a positive year for the cement sector.
Okay, so that's with regard to cement. Waaree Renewable is the other one which is in focus today. Company reported a stellar Q1 with net profit surging 3x. We spoke with Manmohan Sharma, who's the CFO, and who expressed confidence in maintaining this momentum throughout the financial year. Listen in.
Last year, if you see, our top line was 1597 crores, and prior to that 876. So if you see that on a quarter-on-quarter basis, we are 2.5 to between 2.5 to 3x in any kind of parameter. So looking at the presently what we had did in March 25, we have already done 603. So I think this pace will continue over this financial year.
Okay, Waaree SW Solar, what part of the power value chain, Neeraj, are you betting on at this point?
Yeah, I'm positive on renewable energy companies, but not these specific, like something like a Sterling Wilson, which is a purely, EPC company with, they have not been that kind of improvement that had come earlier as far as the order flow is concerned. So I'm positive on companies like maybe Tata Power, or companies like JSW Energy, which is expanding a lot into, they're coming out with a lot of capacity. Plus, they're also into storage, energy storage. So this is one sector where there is a lot of work to be done, and a lot of capacity will be created by JSW Energy also. So the Tata Power, JSW Energy, and GIPCL is another company which is going through a capex, which they're also coming out with a lot of capacity, and valuation-wise, it is quite attractive. So these are the kind of companies in the power space which I'm looking at.
Okay, that's with regards to where JSW Energy stands. Neeraj, your quick view on Newgen Software. It came out with its earnings, and the street for sure is not impressed with the way they posted their earnings. What is your reading there, and what's not working for the company?
Here's the name again, please.
Newgen Software.
Okay, no, I don't track Newgen Software. So generally, I'm not too positive on the software, the technology space right now. But Newgen Software, I don't have any specific.
Understood. Kunal, your quick view on the reading where charts are concerned for Newgen Software?
Yeah, I think for Newgen Software, again, there has been a breakdown into the stock and trading below the short-term moving averages. This can slide down further towards the mark of 800, 820 on the downside. So the short-term view continues to be on the negative side.
Okay. Okay, so that's with regards to where Newgen Software stands. Kunal, anything with regards to where JTL Industries stand? The stock is seeing pressure today also. Yesterday also, if I'm not wrong, it was under pressure. Anything on the charts that you're picking up?
Sorry, which stock you mentioned?
JTL Industries, yes.
Yeah, okay. So over here again, we have seen that the larger term trend has been on the downside where lower top, lower bottoms are there, and you can expect further decline into the stock. The next support for the stock on the downside is around the mark of 69. So it can come down towards 69 in the short term.
Okay. And anything on Sterling and Wilson that you're observing?
So on Sterling and Wilson, I think definitely the stock had given us a strong breakout on the technical charts. From the current levels, I won't recommend a fresh buy, but any dips would be an opportunity. There could be still most 5 to 6% left on the upside.
Neeraj, just wanted to get your sense on the hospitality space. You know, there's ITC Hotels that has come out with its earnings, IHCL which also posted its earnings today. Anything that you're picking up from the early trends of these earnings, and any preferred pick in the entire hotels business space?
I think the earnings will pick up only going ahead. You know, this quarter also there was some concern with Operation Sindoor happening. So, you know, in spite of that, the numbers have been pretty good, even from ITC. ITC numbers are exceptionally good. Even Indian Hotel has come out with very good set of numbers. So there was slight pressure on the margin, but still the numbers were good. So I think going ahead also, and as we progress in the year, things will improve for the hospitality industry. So I like EIH Limited, which if you compare it on valuation front to other to peers, it is trading at a discount, and it has really good properties, and they're into the luxury chain of hotels where they own also some of the properties. So this is one which I'm positive on purely if you compare it on valuation with the peer group.
Okay, Neeraj, thank you so much, for giving us those insights, and thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you.
Kunal, your quick view on Shopper Stop. You know, when I was going through the earnings, it's not been a very bad quarter for the company as such. You know, the net losses have narrowed down. There's margins that's picked up, but something's not right, in terms of where technicals are concerned. Anything that you're seeing on the chart specifically?
Yeah, I think overall the stock has been facing resistance at 580, and we have seen rejection at those levels. So I think that is a crucial level which needs to be surpassed decisively on a closing basis. Once that is taken out, then you can expect the momentum to come back. The stock can go towards 700, 720 levels on the upside.
Okay, Kunal, just before we close for the day, what's your pick within the private banking pack? There's an HDFC, there's an ICICI coming out with numbers. We've still got 2.5 minutes. Would you pull a trade?
I think definitely not on the two big boys. No need to take out any trade. I think you might have a decent amount of gap up or a gap down opening. So over here, I'll be more bullish somewhere on Kotak Bank on declines. I think that is looking positive to me. The support for the stock is at 2100. So if you get around those levels, I think good opportunity to enter on the long side. And one can expect again a rally towards 2200, 2250 on the upside.
What about something like a Shriram, some of the NBFCs, Kunal?
I think Shriram Finance again looks on the negative side. It has already given us a breakdown in today's trading session from a rising trend line, and it has also breached the 100 DMA, and you can expect further decline into the stock towards 600, 620 on the downside.
Yeah. All right. Thanks so much, Kunal. We'll let you go on that note. We're a minute and a half from close, and we have JSW Steel's numbers, which are out. They'll come on your screen in just a moment. We're down 0.5% on the Nifty, down 140 points this Friday. So that weakness from Thursday carrying forward to Friday. JSW Steel is a stock on our radar. But before I get there, the Nifty Bank is what's causing the severe weakness on the index itself. 1% lower on the index at close and 1% lower on the Nifty Bank as well. So broadly, that's the take. Let's pull up, 0.5% lower on the Nifty 50 index, around 140 points, but 1% lower on the Nifty Bank index. Let me pull out the heat map on the Nifty, and that will give us a sense that the breadth was weak today. That's a second consecutive day where the breadth has been weak, Mahima. And Axis Bank was, of course, the key contributor, 5% lower contributing to the woes on the Nifty private banking index, which is down 1.5%. So that's where a lot of the pressure has come from. Bajaj Finance, though, standing tall on a day like this, 2% higher. Some of the other names which have actually done okay in trade, and we'll pick those out, especially from the consumption and the metal basket. Tata Steel has done okay. Wipro is the other one on the back of numbers which has done okay. ICICI Bank within the private banking pack has also done okay. Some of the PSUs, something like an ONGC, has been okay. On a day like this, Reliance in focus because you'll have results coming through, so positive bias on that stock as well. Within the Nifty, that's the roundup. But let's look at sectors as well before I toss it to Mahima for broader markets. And within sectors, the metal index is perhaps the only one which is standing tall. Outperformance from IT, but absolutely flat. And some weakness still persisting on the technical charts is what we were told. But defense is where the weakness persists. 2.5% lower, now 8% lower for the month of July on the defense index. Private bank we did speak about, so I won't delve deeper. 1% lower on the finance index, and well, the other one, the consumption index, also down around 0.6% thereabouts. Those were the main ones, frankly. But can we have the advanced decline, and Mahima, the broader markets?
Right. So let's try to pull up the advanced decline ratio. You know, even in the start of the show, it was the same ratio. It's almost 1:2 there, and the gap has not narrowed since then. So that's with regards to where the broader end of the spectrum is concerned. But let's pull up the mid cap 150, probably trading at its day's low points now. There you go. Market in terms of the Nifty 50, we already tried to pull that out, down by about 0.6%. But the broader markets also being under pressure. The mid cap, the small cap 250 down almost 0.7%. And the mid cap 150 also down by about 0.6%. Let's try to pull up the weekly charts as well, you know, before we go towards the end of the show and see as to what's the factors to watch out for during the weekend. There you go. The weekly chart of the Nifty suggests that we'll be closing 1%, 1.2% down on the Nifty 50. Nifty Bank closing around 1.2% down, and most of it probably is because of the trade today. In terms of the Nifty Bank, there is 0.8% downtick. Mid cap 150 closing 1% higher. The small cap 250 closing 1.5% higher. So not a very interesting week of trade for sure. 4 days we saw a significant amount of consolidation. Today we're seeing the downtick in trade that we're seeing. But factors to watch out for during the week, or
let's quickly pull it up. Those are corporate actions for you, adjustments in terms of dividend which will happen Monday. Quickly looking at numbers, those are earnings today. The big boy Reliance along with IndiaMart, L&T Finance, all of those will come through. Bandhan Bank is the other lender which will come through. MRPL, Aarti Drugs, Hudson Agro. That's earnings today for you, ladies and gentlemen. The other one is earnings tomorrow, and this is the big one. HDFC, ICICI, AU Small. You'll also have an RBL and a Yes Bank. So it's a slew of banks coming out with numbers along with the Canfin Homes. All of those earnings happening tomorrow. Likely reactions Monday. The Nifty Bank is going to have a fun day on Monday. Trust me.
Not a fun weekend for you, for sure.
there's going to be just so much to dissect.
Yes.
And all of those numbers will come through. But Monday as well. And this is, of course, for your perspective, so that any trades that you make, you keep some of these names in mind, because these are all the earnings coming out on Monday for you. So those are some names for you. Completely out of time on this edition of India Market Close. JSW Steel earnings flashing at the bottom of your screen. Looks like an inline set, maybe a slight bit of a beat. On the other side, we'll dissect those numbers. Stay with us.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ही अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real plan? Welcome back. Thanks for being with us. You're watching Market Express. I'm Harsh Saida. Let's get straight into the show. Well, JSW Steel's numbers out, and we spoke about that. And let's pull those numbers out for you. In fact, the Q1 PAT has come in at 2,184 crore versus the sub 2,050 crore, which was the expectation. Seen PAT surge on the back of much better margin outlook. We have Vansh with us, standing by. Vansh, first give us a deep dive of the numbers itself. What's leading the beat?
Yeah, so the numbers are better than the estimates. The revenue has fallen by 3% at 43,400 odd crores versus the estimates of 42,800 odd crores, and the EBITDA has risen by 18% at 7,500 odd crores versus the estimates of 7,200 crores, and the margins have risen to 17.5% versus 14.23%. The estimates were of 17%, and the net profit has surged 46% at 2,200 odd crores versus 1,500 odd crores. If we talk about the EBITDA per ton, now the EBITDA per ton for the company stands at 10,375 rupees versus 10,475 rupees estimates. So these are the numbers, and the numbers look good on the front side.
Got it. Vansh, could you quickly repeat that EBITDA per ton number, because that's something I missed.
EBITDA per ton for the company stands at 10,435 rupees versus the estimates of 10,476 rupees.
Okay, so largely in line with estimates on that EBITDA per ton. But the top line leading the beat overall in terms of both EBITDA as well as profitability. EBITDA standing at 7,576 crore versus the 7,200 crore estimate that we had, and margins at 17.6%. So 7,234 crore was the NDTV profit estimate. So a good set of numbers overall coming in from a JSW Steel, Nifty 50 company, something that we'll have to watch out for on Monday for a reaction. But let's pull up the stock price intraday. Can I just see it? Because these numbers came at the last few minutes of trade, and the stock obviously perked up 1%. What I'd want to know is, was it up all through the day or not? I'm just going to quickly look at that, and then maybe, well, the stock did see a sharp spike in the last few minutes of trade that you can see, and that's why it's closed 1% higher. Otherwise, we were trading around the 1,027 to 1,035 levels. So that was lower. That 1% spike that we saw was largely on the back of numbers. So some bit of it built into the numbers already. But of course, we'll have to wait and watch for Monday on the full reaction of the counter. And of course, you'll have the earnings call as well as brokerages and analysts commenting on this, which will obviously spark a reaction. But back to you, Himakshi.
Yeah, and so Harsh, I think we are joined by Parthiv Jonsa.
Okay.
Okay. So, let's go ahead with the bulletin now. So, I'd like to address how the markets have fared today. So, benchmarks closed in red for the day as Nifty ends below 25,000 mark, dragged by financials. Sensex also loses over 500 points. Most sectoral indices closed lower for the day. Nifty Media, Metal and IT only ones to close in the green. Now, if you look at how the markets, benchmarks closed lower, so they have been, they've closed lower for the third consecutive week and underperformed the mid and small cap indices as, okay, so I think there's some one more news that we're getting in, that 361 VAM has released its Q1 of FY26 results, showing a mixed bag of performance there. While overall revenue saw a decent 10% jump to 725 crore rupees, and profits also climbed 15% to 374 crore rupees. Operating revenue growth was sluggish, increasing by only low single digits. The company's assets under management showed strong growth, rising 14% to 6.63 lakh crore rupees. LTI Mindtree starts the year on a strong note with margins in line at 14.3% and deal wins of $1.63 billion, slightly above the last quarter. So management expects that margin expansion to continue into Q2, supported by strong traction in the large deals. The consumer business shows healthy growth, and the company remains confident in sustaining momentum despite macro challenges. CEAT reports solid top-line growth of over 10% with material cost staying stable. Margins dipped slightly, likely due to increased marketing activity. While net profit also falls, EBITDA shows a modest rise. The company also announced a 450 crore rupees capex for expanding its Chennai plant. Afcon's infrastructure emerges as the lowest bidder for two major highway projects in Croatia, valued at over 4,500 crore rupees. So the contract's part of the A1 motorway connecting key Croatian cities mark a significant milestone in the Afcon's international expansion. Both projects are also expected to be completed within 42 months. Now let's look at the brokerage notes. Now, as per the Jefferies, Indian pharma majors show mixed performance across the key generics. Cipla gains share in albuterol but loses ground in the hydrocortisone injectables. Sun Pharma maintains double-digit growth in the Illumia and Sequa, though Givance remains flat. So Dr. Reddy's gains in GCI products but loses in Guasepa. So Revlimid sees sharp market swings there as firms rush to use up allocations amid this rising competition. Despite a very disappointing quarter, Jefferies maintains a buy on Axis Bank but trims its target price to 1,370 rupees, citing weak Q1 results. Asset quality disappoints due to a spike in the slippages from new classifications. Though trends are expected to stabilize from Q2, Jefferies believes that although the growth remains moderate, with margin pressure, the valuation discount continues to support the bullish stance. Wipro Q1 performance is mixed, with earnings under pressure and revenue growth faltering. However, strong deal wins help offset the weakness, signaling robust client demand. Jefferies remains positive on the stock despite trimming its target price, citing potential recovery in the second half as large deals begin to ramp up. Tata Communications posts a mixed quarter. Revenue remains flat sequentially, while EBITDA edges up slightly, improving the margins. However, net profit also plunges sharply due to exceptional items, including those profit before tax grows over 50%, indicating underlying business strength. The company also announces a 1,000 crore rupees fundraise via NCDs to support future growth. Now, if we look at Bajaj Auto Credit, which is a wholly owned subsidiary of Bajaj Auto. So they've approved a fresh issuance of non-convertible debentures worth 5,000 crore rupees. It also enhances its commercial paper limit to 3,000 crore rupees and sells 750 crore rupee cap for subordinated tier 2 debt. So these moves aim to strengthen its financial flexibility and support future growth. Godrej Properties acquires nearly 48 acres of land in Bengaluru, marking a strategic expansion in South India. So the land offers development potential of around 1.1 billion square feet for residential plotted projects. As per the exchange filing, this move aligns with the company's focus on premium housing and strengthens its presence in a high-growth market. Heritage Foods reports its highest ever quarterly revenue in Q1, hitting 1,137 crore rupee, which is up 10% year on year. Despite the early rains impacting value-added product sales, the company shows steady growth in the milk sales volume and realization. So EBITDA also rises 21.2% to 73.8 crore rupees, though margins dip to 6.5% from 9.1%. Net profit also falls 30.7% to 40.5 crore rupees. Milk procurement grows nearly 10% to 17.8 lakh liters per day. So with raw milk prices up 4.7%, value-added products contribute 36.1% to the revenue, which is slightly down. So product-wise, milk revenue rises 6%, value-added products grow 6%, and fat products surge 73%, and ice cream business gains 8%. So this is reflecting strong broad-based growth despite the challenges. Now let's look at Reliance Retail. So Reliance Retail acquires iconic home appliance brand Kelvinator in a strategic move to boost its consumer durables business and accelerate growth in the India's premium home appliances market. So Kelvinator, a pioneer in the electric refrigeration with century-old legacy and famed in India since the 1960s for its durable, high-quality products, now joins Reliance's expanding portfolio. This acquisition aligns with Reliance's vision of democratizing aspirational living by combining Kelvinator's innovation with Reliance's unmatched scale, comprehensive service, and vast distribution network. So the company aims to deepen consumer engagement, expand its market leadership, and unlock substantial long-term opportunities in the rapidly growing consumer durable sector. Nuvoco Vistas report a strong Q1 with revenue rising nearly 9% year-on-year to 2,872 crore rupees, driven by 6% growth in the cement volumes to 5.1 million tons. So EBITDA surges over 50% to 518 crore rupees, with margins improving by 500 basis points to 18%. So net profit jumps sharply to 133 crore rupees from just 2.25 crore rupees last year, boosted by a 3.2 times increase in the other income to 14.8 crore rupees. So the company also completes the acquisition of Vadra Cement, with current capacity at 25 million tons per annum, poised to expand to 31 million by Q3 of FY27. So this marks the highest first quarter EBITDA in Nuvoco's history, signaling robust operational performance and growth momentum. Now, Infibeam Revenues approves allotment of 70 crore shares through a rights issue priced at 10 rupee per share, raising 700 crore rupees. So the issue is oversubscribed by 1.4 times, reflecting strong investor confidence despite the stock being down 40% over the past year, though up 18% in the last month. So the proceeds will support strategic investments including Phronetic AI expansion of Rediff Pay and other digital payment initiatives, aligning with the company's focus on AI-driven fintech solutions. This move strengthens Infibeam's position in the AI and digital payment space while enhancing its growth potential. Clean Science and Technology post a mixed Q1 with revenue rising 8.4% year-on-year to 243 crore rupees, but results miss estimates and softness in the demand is seen. EBITDA grows modestly by 5.5% to 99.8 crore rupees, nearly 100 crore rupees, with margins narrowing slightly to 41% from 42.3%. So net profit increases 6.3% to 70 crore rupees. Over 25% of revenue comes from newer product launches, and the company gains market share despite the challenging quarter. So management lowers full-year EBITDA growth guidance to 15 to 18% from 18 to 20%, citing demand softness and global headwinds, while expecting better clarity after Q2. Promoters indicate that plans to sell a minority stake to support family estate planning, creating additional pressure on the stock. Indian Hotels report strong Q1 results with revenue up 31.7% year-on-year to 2,041 crore rupees and EBITDA rising 28% to 576 crore rupees. Net profit also grows 19.3%, while margins hold steady around 28%. So the company sees double-digit growth in the key metrics with RevPAR up 11% and average room rates rising 12%. So despite a slight 90 basis point dip in the occupancy, the international portfolio shows solid improvement there, with 78% occupancy and RevPAR growth of 13%, led by strong performances in London and the US, especially San Francisco. Now, management reaffirms double-digit growth guidance for FY26, maintains a capex plan of 5,000 crore rupees over the 5 years. Now, plans to also invest 1,200 crore rupees this year in the asset upgrades and new projects, including opening over 30 new hotels. State GST departments across at least 6 to 7 states are cracking down on nearly 60,000 unregistered businesses. Now, these businesses, primarily in the B2C sector like salons and eateries, are now receiving notices to pay up back taxes, some running into lakhs. States like Karnataka, Gujarat, Tamil Nadu and Andhra Pradesh are actively scrutinizing these businesses for operating outside the tax net despite exceeding mandatory turnover thresholds. India's smartphone industry, represented by the India Cellular and Electronics Association, has appealed to the government for urgent intervention to counter informal Chinese sanctions threatening $32 billion in FY26 exports. Now, over the past 8 months, China has imposed restrictions on exporting high-precision tools and equipment essential for electronics and manufacturing, creating significant production hurdles. So, additionally, curbs on critical minerals have triggered input shortages, risking supply chain disruptions for manufacturers. Now, compounding these issues, travel restrictions and the recall of Chinese technical teams working in India have hampered technology transfer and production scaling. Japan's inflation eases in June, with headline CPI falling to 3.3% from 3.5% and core inflation matching expectations at 3.3%. So the slowdown is driven by lower fuel prices, though food inflation is there, especially rice remains elevated. Despite the cooling, inflation stays above the Bank of Japan's target, keeping rate hike expectations alive amid trade tensions and economic fragility. US solar manufacturers are seeking new tariffs on solar imports from India, Indonesia, and Laos. So the Alliance for American Solar Manufacturing and Trade claims largely Chinese-owned companies in these countries are flooding the market with unfairly cheap products. Now, this action triggers a US government investigation into whether these imports are unfairly priced or subsidized, and if they are harming the American solar industry. India's ONGC has teamed up with global energy major BP to drill a series of stratigraphic wells across the country. So the move aims to boost exploration, improve geological mapping, and identify untapped oil and gas reserves. ONGC says that the partnership will help unlock India's hydrocarbon potential and support the long-term energy security as well. Daikin Air Conditioning India has launched a new office in Chandigarh as it moves to expand aggressively across North India with a focus on Punjab, Haryana and Jammu. So the company has invested 2,800 crore rupees in India so far and plans to boost sales, service and technical support operations to meet the rising demand. So last year, Daikin sold over 2 million rooms AC units and now aims for 2.5 million units this year. Tech Mahindra plans to invest heavily in sales, marketing and learning infrastructure across key global markets over the next 2 to 3 years, as revealed by the chairman Anand Mahindra at the company's AGM. He said that the firm aims to strengthen its competitive position in the strategic verticals. So, INCL, including AI, manufacturing, BFSI and telecom. Prime Minister Narendra Modi launched development projects worth over 1,200 crore rupees across Bihar and West Bengal, with 7,200 crore dedicated to Bihar and over 5,000 crore to West Bengal. So in Motihari, Bihar, he inaugurated rail and road upgrades and incubation facilities, fisheries initiatives and flagged off 4 Amrit Bharat Express trains. In Durgapur, West Bengal, he kick-started projects in power, oil and gas, rail and road infrastructure. The US State Department has designated the Resistance Front, so a Lashkar-e-Taiba offshoot linked to the April 22nd Pahalgam terror attack, as a foreign terrorist organization and especially designated global terrorist. So India welcomed the move, with External Affairs Minister S. J. Shankar calling it a strong affirmation of India-US counter-terrorism cooperation. The move imposes legal and financial restrictions on TRF and comes amid international scrutiny of cross-border terror networks. Justice Yashwant Verma of the Allahabad High Court has petitioned the Supreme Court to challenge the findings of an in-house 3-judge panel that alleged that he had large amounts of cash stored at his official residence. So Verma claims the panel, appointed by former CJI Sanjeev Khanna, denied him a fair chance to respond and drew conclusions without full investigation. His plea comes as Parliament prepares to introduce a removal, which is the impeachment motion against him during the monsoon session. Well, with that, viewers, it's a wrap on Market Express, but please don't go anywhere as Sanjana Chauhan takes up with Profit 360 on the other side of the break.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डबल ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देख
The market closes lower for the second consecutive day. The Nifty closes below 25,000 and Sensex loses 500 points. Nifty Defence is the top sectoral loser. As India and the US enter the fifth round of trade talks, sources say the ongoing negotiations are focused on securing preferential access for India, raising the question of whether India could land a better trade deal than its Asian peers. Indian smartphone manufacturers have written to Telecom Minister Ashwini Vaishnav highlighting how China's informal trade restrictions are disrupting their supply chains. They identified choke points that are slowing production, raising costs and threatening India's global export competitiveness. Starlink is set to appoint its India CEO as it builds a core team in Delhi ahead of a planned launch by the end of 25. India welcomes USA's move to designate the Resistance Front as a terrorist organization. External Affairs Minister S. Jaishankar calls it a strong affirmation of India-US counter-terrorism operation. The Prime Minister's office convenes a crucial meeting to address India's growing rare earth magnet supply crisis as manufacturers across the auto and electronics sector warn of severe production risks due to China's tightening export restriction. An Israeli strike kills over 90 in Gaza in one day, including aid seekers. Israel says it deeply regrets the strike on Gaza's only Catholic church. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's take a look at how the markets fared today. Benchmarks ended lower for the second consecutive day. Nifty closed below 25,000 as financials dragged it lower. Most indices ended in the red with Nifty Defence as the top sectoral loser. Let's go across to Harsh Saita for a wrap of the day's market action.
Well, the Nifty 50 was down 0.6% at close today, and frankly, the overall market mood was also not the best. The breadth on the Nifty was just about 2 advances or maybe less than 2 advances for 3 declines that we saw. So the breadth wasn't favorable. Very similar kind of a breadth even on the exchange. So if you pull up the advanced decline, broadly all through the day, that's the kind of breadth that we saw. Start of trade was okay, but we fell from the highs and we sustained at below the 25k levels. So now we've started to see maybe 24,900 start to emerge as possible levels we're looking at, and if that gets breached, you could well see levels of 24,500 or 600 as well. So those are the levels we're talking about probably next week. But what was the big drag? It was large private sector banks. The index was down 1.5%. Sectoral, largely led by Axis, but then you also saw HDFC, IndusInd, and Kotak, all three contributing to the losses on the large private sector banking index. You also saw ICICI though, but move in the other direction. And mind you, HDFC, ICICI both to declare numbers tomorrow, which is on Saturday. So you'll likely see a reaction on those counters in any case on Monday and on the index as well. Now let me talk about the other big boy, Reliance, also in focus just prior to results. Stock not really doing much, frankly, in trade today. So, but that was one counter in focus. Let me talk about sectors and stick with that. Metals was the one which was in the green today, and therefore you saw the likes of a Tata Steel or JSW Steel, both of them perked up in trade. JSW Steel's numbers also came out right at close, and the stock perked up 1% at close. What we also saw was IT as an index outperformed today on the back of Wipro and its numbers. In terms of the larger underperformers, well, you saw the Nifty India Defence Index down another near 2.5%. You saw the private banking index, I did speak about that. The Nifty Bank was also down 1%. The Nifty PSU Bank outperformed both of those indices, the private bank as well as the Nifty Banking Index. So the PSU banks were relatively better off. But outside of that, consumer durable stocks were also under pressure. That index was also down. But broadly, that was the theme. I did mention that both the mid cap and small cap index largely in line with the Nifty 50. So that's how it played out. Some names, of course, let's pull those out within the BSE 500, top gainers, top losers. Clean Sciences being one of them. But outside of that, plenty of movers on the index. Not too much on the positive side, more on the negative than the positive.
Meanwhile, we had a conversation with Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors earlier today, and we explored the mega trends driving markets and how investors can spot pockets of value amidst the noise. Let's listen in.
You've always spoken about these mega trends all through the times that we've spoken. Back from 2015-16 when I first started talking to you, when I think we were in the midst of the chemical mega trend, if you will, and the pharma mega trend, you kind of try to identify some of these and then maybe invest early in them and then ride the whole wave till you can. Would that be a good summary of one basic investing style?
So let me try and explain a bit with a little bit more nuance and a little bit more in detail. See, in any particular industry, there are phases, right? You have a tough phase, struggle phase, then you hit that inflection point, you have the great growth phase, and then you reach a kind of a plateau, then again you have a growth phase. Idea for us is to identify which that growth phase is. Everybody can name a lot of mega trends today, but even within a mega trend, you make money only when you are invested in that particular growth phase. And for that, you need to be very clear in your mind what stage that particular mega trend is. And there are markers that we keep track of, whether it is the technology curve, the cost curve, behavioral shifts, regulatory shifts, capital flow, talent flow. All these things tell us which way the wind is blowing, how strong that wind is the mass adoption reached that kind of an inflection phase? Are we going to see a J-curve kind of a growth phase? If yes, then that is the phase in which the maximum value creation tends to happen. And that is what we want to capitalize on. A mega trend can last 20 years, 30 years, 50 years, but the phase of making money might not last that long. That might be a 5, 7, 10 year phase. And that is what we want to capitalize on. I hope that's a small nuance that I had about investing in megatrends.
Now, India's strong growth story has global investors watching closely for a rebound. According to Taimur Beg, chief economist at DBS Bank, 2025 could mark a key turning point for the Indian economy despite recent slowdowns. He points to a dynamic shift in private capital flows during 24 to 25 and highlights that India's promising medium-term market potential even amid ongoing uncertainty over global tariff wars. Let's listen in.
We do look at the Indian markets on a cross-asset basis, and the equity market dynamic has been super interesting. At a time in 2023 when global investors were selling equities around the world, including India, Indian domestic investors themselves propped up the Indian market in a massive manner. And at that time, I started questioning whether the FII flows are even relevant for India, given the amount of domestic liquidity and domestic excitement we have with respect to the Indian market. On the 2024-25 dynamic, I began to see tremendous amount of dynamism on the private flows side. You talk to lawyers in Bombay and what they're seeing in terms of deal flows, M&As and FDI, just, extraordinary. But 2025 now is a bit of a sobering moment. private or public side, we don't see that much excitement, whether it's domestic sentiment or deal flows coming from the outside. So the lawyers that I talk to on the corporate side are not as busy as they used to be. So overall, I think there is a bit of a stock taking momentum, loss of momentum type dynamic in place as far as India's financial markets are concerned. I would not attribute all of that to impatience about GDP growth. I think some of the deals that I'm talking about and some of the IPOs that I've been seeing, they basically talk about India over the next 10 years. It's not about what happened in last quarter or where inflation is going or what RBI would do. It is about the medium-term potential. And that, in my view, remains very attractive for global investors, independent of the uncertainties we have with the trade war right now.
Meanwhile, Puneet Chhatwal, Managing Director and CEO of IHCL, says the company's business has grown strongly and is set to surpass 1,500 crore rupees soon. He said that serving meals in the sky will be an important growth area going forward, and the company looks to diversify beyond aviation.
As a business has done well in the last 3 years. It has become more than 1,000 crore business, expected to get to 1,500 crores soon. And, you know, we all know the news with the number of new planes coming into India. Serving meals in the skies will be a very important business going forward. And also TajSATS is diversifying into non-aviation business, using those kitchens and utilizing the capacity that we have for institutional catering contracts. So I think over time, we will see that the dependency on just airline catering will be reduced from 100 to 80%, and 20% of the contribution will come from non-aviation business for TajSATS. It is doing phenomenal margins for the business that it is in. It's at around 23%. 23% EBITDA margin in this kind of business is very healthy.
And now on to some news on the ongoing India-US trade talks. Official sources have said that this deal will be all about preferential access. Now, this is the 5th round of negotiations between India and the US, and the sources suggest that the deal will likely be announced next week. My colleague Rishabh joins in with what he's picked up from his sources.
What we're picking up from government sources is the fact that this trade deal, which has been imminent for a very, very long period of time, what we're hearing on that about now is that the main theme is going to be preferential access. That is something that Donald Trump has also pointed towards in terms of his deals with Vietnam, his deals with Indonesia. But this is something that we'll also see now with India. That's what we're hearing from the official government side. The Indian negotiating team, led by Special Secretary of the Commerce Department, Rajesh Agarwal, continues to be in the US. This will now be the 5th day of negotiations for them. And there is some sort of an outcome that is expected ahead of the August 1st deadline, roughly about 12 days left for that, and that is something that we're keeping our eyes peeled on so far as well. An update on the UK FTA signing as well. Remember, this FTA was finalized about a month or two back, and now the final formal signing of this deal will take place, post which the operationalization of this deal will take about an year or so. So that's what we're hearing, is that the Prime Minister, India's Prime Minister Narendra Modi, is likely to visit the UK for this signing sometime next week, perhaps July end, is what NDTV Profit also reported. But what we know so far is that there's no finalized date, but July end, India's Prime Minister might go for a formal co-signing of the UK FTA with UK Prime Minister Keir Starmer as well.
Rishabh, stay with us because there's a possible pattern of informal and targeted trade restrictions being imposed by China, which is being flagged by India's top smartphone and electronics manufacturers. Now, they claim that this pattern is putting India's booming electronics manufacturing ecosystem at risk. So tell us more about what you've picked up on that.
This was a letter that was sent by the ICEA. This is an industry association of electronics manufacturers and smartphone makers. They sent out a letter to Ashwini Vaishnav, India's IT minister, India's IT and electronics minister, on July 1st, asking for an urgent meeting. And also they flagged off 3 very interesting specific choke points that the Chinese have been informally administrating. So these are not curbs that the Chinese government is doing on paper. These are all off paper, informal stuff that is being done by the Chinese administration to stifle India's growth in terms of electronics and smartphones. Now, the 3 choke points that I have here with me, we reviewed a copy of this letter that was sent. The first choke point is, of course, the restrictions on exports of high precision tools and machinery. So that is something that the Chinese government has been doing for a very long time now, and this is across sectors. But over the last 8 months or so, these choke points, these restrictions have now been extended to electronics manufacturing. Choke point 2 is the critical mineral risks that has been the talk of the town for a while now. We've seen with rare earth magnets, but this is going to impact electronics manufacturing as well, not just EVs. And 3 is the travel restrictions and recall of Chinese technical workers. This is something that we saw happen with Foxconn very recently. And now we're seeing this on a broader basis as well across manufacturers, across smartphone manufacturers, because this leads to some sort of stalling of technology transfer, as well as the new sort of product development that Indian companies want to do. So these are the sort of informal Chinese sanctions that have been affecting this electronics industry, and this body really wants to set up an urgent meeting and also find some solutions to mitigate these issues.
Thank you so much for that update, Rishabh. We'll continue tracking this update and bring you all of the details. Meanwhile, moving on, big updates coming in from the satellite broadband space as Elon Musk's Starlink is inching closer to its India debut. Sources exclusively tell NDTV Profit that Starlink is set to appoint an India CEO ahead of its anticipated commercial launch by the end of 2025. Let me quickly go over to my colleague Aishwarya, who's joining us with all of the details. Aishwarya, take us through what we know. This is as Starlink is eyeing the India CEO.
Well, that's correct. End of 2025 is what we've been hearing from our sources, that Starlink will make its India debut. Ahead of that, what they are aiming at is what our sources are telling us is that they will be setting up a core team and an India CEO hunt is ongoing as we speak before the commercial launch in 2025. So far, if you've seen, the one name in reports and in news is their global licensing head, which is Padmil, who has been in talks with the government and also going through all the paperwork to set up its India business, starting from their unified license and their in-space authorization as well, that he has been negotiating with key stakeholders, the DOT and TRAI as well. In fact, about 10 months back, the one hire they made was for their company secretary based out of New Delhi. In fact, the copy of the LOI that NDTV Profit had reviewed earlier showed that their initial office will be set up in New Delhi for, of course, public policy and talks with the government, the proximity to the ministry and the officials as well. So in most likelihood, they will be headquartered out of Delhi. And post all of this regulatory hurdle, which they have already cleared, the next step, of course, is applying for a test spectrum. A request will very, very soon go to the DOT for a test spectrum approval and setting up of their earth stations as well going forward. They've identified locations across India. So that's the update so far. We'll hopefully bring you the name of the first Starlink India CEO very, very soon here on NDTV Profit.
Right, Aishwarya, stay with us because now we also have some other news coming in, this time from the Prime Minister's office, where sources are telling us is actually convening a high-level meeting with key stakeholders, including the Mines Secretary, to address the escalating rare earth magnet shortage that is threatening critical industries, whether it's EVs, smartphones, and renewable energy technologies. So take us through that, Aishwarya, because this is an issue that has been constantly plaguing the Indian exporters and, of course, all of these industries as well.
That's correct. It has plagued a whole lot of industries. What we're hearing and picking up from our sources is that the Prime Minister's office is in fact holding a key stakeholders meeting, probably went through this afternoon on the rare earth restrictions from China's export of rare earth minerals and rare earth magnets having impacted a whole lot of business, especially the hearables business, what we heard from a couple of weeks back from industry sources also. What we've also been given to understand is that the Mine Secretary, Kanta Rao, is likely to be present in this particular meeting and may have been part of the consultations that have gone through this afternoon. If you remember, on the 11th of July, in fact, H.D. Kumaraswamy's ministry, the Ministry of Heavy Industries, had said that the government is taking steps to tackle this situation by setting up an over 1,300 crore scheme in order to bump up our rare earth magnets production. And there are two companies who will get subsidies and will be beneficiaries of that particular scheme. And hopefully we will be able to fix some bit of the shortage of rare earth minerals and rare earth magnets that have impacted sectors across the board. So that's the update so far, and we'll keep you posted on what were the outcomes of the meeting also going forward.
Right, Aishwarya, thank you so much for bringing us those updates and definitely looking forward to what the outcome of this extremely crucial meeting is. Moving on, with geopolitical turmoil and trade wars escalating, crude has seen its share of volatility, and OMCs such as Indian Oil have their contingency plans in place. In an exclusive NDTV Profit, spoke to A.S. Sani, chairman of IOCL, who tells us that their latest challenge close to reality was when the Strait of Hormuz was at stake. Listen in.
OPEC, in fact, has hinted that they will be boosting. So far, there was a trimming of production. They will be boosting supply going forward. How are you looking at that macro situation and crude impact on crude overall on the pricing as well?
Actually, it is basically not increasing, I will say. It is a partial restoration of what was cut down earlier. It was earlier cut down to a much larger extent. Now slowly every quarter or every few months they are bringing back those figures, and still they have not reached to where they were 3 years back or 4 years back. So it is basically restoration of whatever was earlier kept as capped. And that is what the hint that we got, or that is the sense that we got, that they are also trying to bring a stability to the whole oil market, which is in their favor also, because they also get a sense of what kind of revenues they are going to get in coming future or in the coming year for their budgeting. And it gives a good sense to us also, because we also understand where do we stand in terms of what amount of outgo will go in terms of billions of dollars that we will be going to spend as India or as Indian Oil in the coming year or coming.
Meanwhile, the Ola and Uber driver strike has entered its 4th day with no breakthrough yet. Drivers are staging a sit-in at Azad Maidan, sticking to their main demands: fairer fares and equal rates with metered taxis. My colleague Shubhana was on ground speaking directly to the protesters. Let's listen in.
Mumbai's lifeline, the app-based cab services have come to a halt. Now that's because Ola and Uber cab drivers are off the road and commuters are in pain. We are here surrounded by the cab drivers who are in a sit-in protest at Azad Maidan. This is the 4th day of the protest. Sir, I wanted to ask, this is the 4th day of the protest. What are your demands? What is the problem? If you could just explain it to us.
we have a very basic demands. I mean, actually the fun fact is that we have zero demands. All that we are asking is execution of the existing laws that we have in place. But unfortunately, the startups who boast about employment generation, and we in everyday newspaper we read about the fundings they are getting in millions and $billion. You can witness here they are misusing that funding and they are exploiting passengers and drivers, and that's why lakhs of drivers in all over Maharashtra, in Pune, Mumbai and Nagpur have stopped working, and we are protesting against the basic demands, the livelihood that we should get, that is the rate that has been fixed by RTO of the every district, by the RTA, that is Road Traffic Authority.
हमको जो गवर्नमेंट ने रेट दिया है वो अभी तक ओला उबेर रैपिडो इन्होंने उनके जो ऐप पे और लगाया नहीं, आया नहीं। जब तक वो ऐप में नहीं दिखेंगे तब तक हम यहाँ आंदोलन करने वाले।
कस्टमर से कंपनी कितना लेता है? 400-500 लिया तो हमारे हाथ में कितना आता है? 250-300 आता है। हाँ, उसमें CNG जाता है, उनको AC भी चाहिए तो AC से माइलेज घटता है बराबर। दूरी का 1 घंटा लगेगा, 1-1.5 घंटा 2 घंटा ट्रैफिक में चला गया, हमारे जेब में क्या बचता है?
Since July 15, thousands of drivers are off the road as they are staging in a protest at Azad Maidan. This is the 4th day of the protest and they're demanding a right fare per kilometer rate and relief from steep commission cuts. Well, they're not just asking, they're making demands. Now, a committee is set to meet the representatives of Ola and Uber today to negotiate on the same. But for stranded riders and frustrated drivers, the wait still goes on. This is Subhana Sheikh with camera person Prahlad from Mumbai.
Right, thanks for that, Shubhana. And moving on, in a major development, the US State Department has officially designated the Resistance Front, also known as TRF, as a foreign terrorist organization and a specially designated global terrorist organization. Now, TRF is widely recognized as a proxy of the Pakistan-based terror group Lashkar-e-Taiba. The move comes in response to the devastating April 22nd attack in Pahalgam, in which 26 civilians lost their lives. Reacting to this, External Affairs Minister S. Jaishankar called it a strong demonstration of growing India-US counter-terrorism cooperation. He also acknowledged the US State Department's action and emphasized on India's zero-tolerance approach to terrorism. And that's a wrap on Profit 360. Stay tuned to NDTV Profit for more news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ही अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trade.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
Hello and welcome. You are watching KYC. Today we have a unique company in the oil and gas space that we'll be covering. We're talking about Deep Industries today. Let me first start off with what I want to know with regard to where Deep Industries is concerned. They've guided for a 25% growth. They're seeing good growth tailwind, but for how long is really the question, because it's a small company, 3,000 crore in terms of market cap, and therefore the tailwind can be very strong. The question is, as the base starts to creep up, and it's done a decent growth clip over the last 3 years, and you'll see those numbers, as the number, absolute number in terms of top line goes up, for how long can they grow at 25%? Really, that's going to be my question. The second one is they've announced a 500 crore capex. Now, I want to know everything about this. The funding, I also want to know what this does to capacity, and maybe not capacity per se, but in terms of top line capacity, how much bandwidth in terms of top line does this capacity expansion give to Deep Industries? And the third piece is with regard to ROEs, therefore, because it's such a large capex project, what the ROEs will be at the end of it, or maybe a year or two as this fully starts to kick through. Margins at 40% plus, they've guided that this is sustainable, but of course there's a possible downside risk from maybe a raw material price or otherwise. I'd want to explore that and understand that better. Now, Dolphin Kandla, this is the big piece, because there is a huge one-time knock which the company has taken in FY25. Likely that will not trickle through, but is there absolutely any additional risk with regard to Dolphin and Kandla, or is it fully provided, is what I would want to know. And what the possible upside to it is also something I'd want to know. So both set of risks, downside as well as upside. Then I'd want to know how much will Dolphin and Kandla contribute to margins, because this is more backward integration. So how much will this contribute to the margin number of Deep Industries, and how much otherwise can the margin number go up by in any case, is what I'd want to know. They've guided for maybe a 2% inch up in margins this year. 40 to 43% is the band they've given for margins. Last off, client concentration. Of course, very few players in the space, and therefore the clients are concentrated, but is there a thought process to diversify at all, and if so, how, is what I'd want to know. But let's start off with what the company is about. And we did say, and I did mention, that it's in the oil and gas exploration and drilling industry. It provides 70% of or rather covers 70% of the value chain in oil and gas post exploration, and that value chain is largely what drives the numbers for a Deep. So let's understand the products and services better. One is the natural gas compression. This boosts gas pipeline pressure, and it calibrates the gas pipeline pressure, and that is one of the services that it provides. Second is gas dehydration, that removes water from the natural gas, making the pipeline safer. Third one that they do is workover and drilling rigs. Now this is of course for new rigs and maintenance of old rigs as well. So both of those is what this service covers. The fourth piece is integrated project management, end-to-end project execution when it comes to oil and gas. Charter hiring gas facilities is also what they cover. Full gas processing systems end-to-end is what they take care of. Production enhancement contracts, takeover and boosting oil fields already existing is also the other piece that they take care of. And then there is offshore marine services where they provide supply vessels, tugs, and accommodation barges as well. So all of those are provided by Adeep Industries. Then there's equipment manufacturing, and this is basically compressor boosters which they provide among other equipment that they manufacture as well and they provide as well. And then of course it's trading. Specialized equipment is what they trade via international arms that Deep Industries has. So all of this is what they do. In terms of business model, let's understand that as well. They manufacture some compressors, chemicals via subsidiaries based mainly out of Gujarat, but the core is renting services equipment to oil and gas firms, and a lot of them are Indian PSUs. So you have a decent recurring income which continues to come through as well. They also do selling, or rather they operate sites, they sell services, or rather they operate sites through in most Indian oil states. They also have forayed into global expansion, UAE, Africa, Mexico. How much of that diversification is actually playing out is what I also want to know. So that's going to be a key. Last one is with regard to raw materials, whether there's any risk of that. Well, in a nutshell, the risk is extremely low. Those are some key inputs for you in front of you. That's with regard to raw materials. Certain suppliers as well, let's pull those up, and those are fairly standard. And commoditization, yes, chemical spares, there is some bit of commoditization but not too much. Price fluctuations are surely a possible downside. Timely availability of specialized machinery is the other big downside. So if you don't get machinery on time, you aren't able to execute all the contracts that you have. That's something you want to keep in mind as well. So that's broadly the understanding of Adeep Industries. Let's start off with the 8 metrics that we will talk about today with regard to Adeep: income statement, balance sheet, cash flow, return ratios, shareholding, street cred. We look at guidance that the company has given and thereafter derive valuations and try and see where it is, where the 5-year average price to earnings is concerned versus what valuations currently sit at. All of that on KYC today. Let me start off with the income statement. Now, in terms of top line, it's done 21% on a 3-year CAGR basis on the top line. You see the way in which top line has moved. It's moved from around 322 crore to 576 crore in FY25. There's been a consistent growth. The guidance continues to be 25%. We'll come to that when we come to the guidance metric. EBITDA has gone up by 26%. In the same time period on a CAGR basis. From 116 crore, it's come to 231 crore now, so doubled. Margins have also inched up from 36% to 40%, and profitability has gone up from 71 crore to 134 crore, which is a 24% CAGR. But something to keep in mind is you have a one-time knock on that net profit number of 251 crore in FY25, which we have ignored for the purpose of this calculation. Why have we ignored it? Because it was due to an acquisition, or rather a couple of acquisitions that Deep Industries made of assets where the assets weren't fully, the receivables reflecting in the assets and the inventory wasn't correctly valued. So they've done an accounting adjustment, consolidated all the assets into Deep Industries itself to try and work out efficiencies, and that's why there was an exceptional loss. The point being It's a one-time exceptional loss. That's something to keep in mind. That's the trajectory in terms of margins that you are seeing. Now let's look at the balance sheet, and in the balance sheet as well, first off, this is a 3,000 crore market cap company with a near 1800 or 1900, 1850 crore book value. So that's for your reference with regard to the price to book. The borrowing number is also fairly low at just 205 crore. Very strong capex is what they've penciled in. And the cash and bank balance currently sits at around 51 crore. So fairly healthy in that sense. For a 3,000 crore market cap company, borrowing is not too high. This includes short and long-term borrowing. So 100 crore roughly each. So that's the whole picture with regard to the balance sheet. We've given this a thumbs up as well. No concerns. Let's talk about cash flow now. And when you're looking at cash flow, largely we've given this a neutral only from a perspective that cash flow, yes, very, very healthy. But the CFO to EBITDA in FY23 was slightly lower. So there's been some bit of choppiness with regard to CFO to EBITDA. That's something you want to be mindful about. But unwind has happened in FY24-25. So it doesn't look as bad at this point. Net cash flow, not exactly the metric you'd want to look at in a company which is investing quickly into capex. So that's something to look out for as well. They will continue to invest in capex, so net cash flow may not really come through, but again, not the appropriate metric. Operating cash flow is what we will look at, but we've given this a neutral out of abundant caution. Let's look at return ratios now, and you'll see the return ratios are on an upward trajectory, but they've not crossed 12%, and that's for me a bit of a concern. Can it cross 12? That's a question we'll pose to management as they continue to ramp up on capex. But 8, 10, 12, at least there is some bit of consistency to it. There isn't wild choppiness. We've given this a neutral, giving the management a little bit of benefit of doubt with regard to return on capital employed. But broadly, this is one metric which you really want to look out for, because if you're doing large capex, you want to see that the ROCE of the company is solid. So you want to keep your eye out on this one if you're looking at Deep Industries. Let's look at shareholding now, and you'll see a decent shareholding sitting with the promoters. Very low interest from FIDIs, public hold the rest, and even in terms of number of shareholders, they've jumped substantially from FY22, where there were just 17,000 shareholders. You're currently sitting at 38,000 shareholders overall. So that's one metric you want to kind of consider if at all you are an investor. The number of shareholders has gone up, no FIDI participation, but a thumbs up nonetheless, because the promoters own a very solid 63.5% in the company. Let me now talk a little bit about street cred. And the street cred, 1 month the stock is up 9%, but you look at the 6-month trajectory, negative 21%. Year to date, negative 16%. 1 year, the stock is up 50%. And 5 years, it is up 22x. So what we've seen in a nutshell is that over the longer period of time, as the performance has really picked up with regard to this one, you've seen very strong returns. But in the near term, we've seen that there isn't as much return that investors have made. Is it time to be cautious or not? Well, we'll look at valuations, of course, and that will give us a better picture. But that's the street cred that we see at this point. Now let's look at the commentary that's come through. And this is an important one, because you want to see and you want to be sure that the commentary that's coming through is good. FY26 top line, 25 to 30% growth is what they've guided for. 40 to 43% margins is what they've guided for. They've also guided for PAT to grow faster than top line. We'll extrapolate some of these numbers when we look at valuations. Kandla and Dolphin's receivables are nearly fully provided is what they've said, but I want to know whether there's a downside or upside risk to that. Contracts with Indian PSUs are fixed, so there's visibility with regard to where growth is concerned. And you also want to therefore understand where do return ratios stack up at the back of all of this, if at all that is the case. But we've given this a neutral out of abundant caution. That is on the guidance. Now let's look at valuations. You've got FY25 to FY26. If top line were to go up by 25%, that's the top line number you'll see, which is 720 crore. EBITDA at 40%. We've been conservative here, lower end of the band, but likely this will be slightly higher. I will give you the number if it's slightly higher as well. So EBITDA margin at 40%, you got an EBITDA of 288 crore, very close to 300 crore. And this is only in a case where you are virtually doing a 40% margin. If you're doing a 43% margin, it's a little in excess of 300 crore. So maybe 310 crore is what the top line will be. And revenue also, I'm building in lower end of the band at 25%. If it's 30%, then the revenue number will stand at 750 crore and the EBITDA number will stand at 330 crore. So that's something you want to keep your eye out on as to where it stands, and maybe we'll get some color from management. Now, profit at 30% growth versus the current year, removing the one-offs, will be around 175 crore. That places the price to earnings multiple at around 17 times. If profit were to do, say for example, 35%, then the number will be 181 crore and the price to earnings will be around 16.5 times 1 year forward. That's just 1 year forward I'm extrapolating for, or rather 9 months forward. Now let's talk a little bit about the market cap to EBITDA as well. That stands at less than 10%. The 5-year average price to earnings on a Deep Industries is around 15 or just below 15. So it's trading roughly at the right price point when you're looking at the 5-year numbers versus the 1 year forward price to earnings. That's the way one should look at it. Maybe a 10% premium on the price to earnings number, but an upside surprise to earnings could well reverse that. And mind you, we're looking at just 9 months forward. So FY27, that's what most analysts currently are looking at, then maybe this number changes a bit. So something again to look out for. But that's valuations. We've given that a neutral. Let's stack up now all of the metrics and give it the final KYC rating. Let's look at, okay, so those are the first 4 metrics. Income, balance sheet, that's how it's stacked up, and those are the last 4. One thing that stands out here is probably no thumbs down. And if at all, and it's 5.5 on 8, but if at all one were to just try and give a possible one big monitorable here, it's the return ratios, and we'll quiz the management with regard to that. Let me bring on board Rohan Shah, Director Finance and Group CFO, Deep Industries. Rohan, we've spoken earlier. Thanks so much for joining. It's a pleasure having you here. Sir, give us the color. You've won a couple of contracts as well this quarter. And I don't want to talk about Q1 FY26, understandably on silent period. But what is the top line shaping up as? You've guided for 25 to 30. My question is, can it exceed 30? Is there a positive bias to that top line guidance that you've given?
Hi, good morning, Harsh.
Good morning.
Definitely, the way we have guided in past, the growth is appearing very promising. And we are gunning towards year-on-year growth of more than 30%. So this year also we are expecting growth somewhere above 30%.
So how long can you grow at this 25 to 30% kind of band? So FY26 will be a strong growth here, 30% plus. What does that do to FY27, 28? Give us a slightly zoomed out picture, 2 to 3 years.
So based on our current order book, whatever we are just giving a guidance is based on existing order book itself. And based on this existing order book, we expect that next 2 financial years, we would definitely grow above 30%. And for FY28, if we'll have to talk, whatever new projects we would be adding in our existing order book, that would help us in growing FY28. So there is a clear visibility of next 2 years, which should be more than 30% growth.
Got it. So you should be at 1,000 crore in terms of top line by FY27, if I'm getting this math right. Let me, sir, talk to you a little bit about EBITDA. You've acquired Dolphin Kandla. What does that do to your margin number? And you started off also on a lower margin base in terms of FY25. So how much will be the organic margin pickup as a result of this and the inorganic margin pickup from the acquisition of Dolphin and Kandla?
See, organically, our EBITDA margins have been in range of 40 to 42%. And with acquisition of this companies, we are anticipating to improve it further. So organically, 40 to 42% is growth we are anticipating going further. And with these acquisitions, this EBITDA margin can go as high as 45% as well.
Got it. So okay, so upward bias to margins. How quickly can it go to 45 in the next 2 years, sir?
We are expecting in next 2 years, yes.
Got it. Understood. Okay. I'll pull out the numbers as well. So on the 500 crore capex that you're doing, what is the kind of funding that where are you going to get that funding from? You're sitting on around 50 to 60 crore rupees of cash, maybe a little bit more at the end of Q1. Where does the 500 crore come from? Are you planning a QIP? At what value will you plan a QIP?
See, the capex we have planned would be funded with mix of all different resources. One is, of course, as you rightly mentioned, the internal accruals. We will definitely take some amount of debt as well, because we are fairly, or I would say highly, very confident on taking debt, because our debt equity is very much in control. And we may think of raising equity as well. We have taken all approvals for raising equity through QIP, and we might go for QIP as well, depending on the market conditions.
Sir, give us some color. So if you were to do a QIP, you've suggested at the end of Q4 in your con call that you will do the QIP at the right price. What to you is the right market capitalization?
See, based on the growth which we are envisaging, based on our existing order book itself, year-on-year growth of more than 30% is something one cannot ignore. And with such improved margins, the valuation which currently we are getting, we believe it is quite on lower side. And we'll definitely look for some good P multiple and some good valuation to come in by market recognizing our growth and the margin prospects.
Okay. I won't push you on that count, but would it be something in the range of 20 to 25 times 1 year forward? Is that something that you're more comfortable with? And if you get that valuation, will you do an equity raise?
Yes, we can look.
Oh, understood. What happens if the equity raise doesn't go through? You do a debt raise, and that is a large amount of debt to take on your book. You have around 200 crore of debt already. How much will be the debt raise? Because you plan to do this entire 500 crore capex in FY26 itself.
See, as I said, we are quite comfortable on taking debt because our existing debt is very minimalistic. Probably we are the only company in this industry who is having such low leverage on their balance sheet. And so taking debt of 300-400 crores is not an issue at all. So if in case we'll not be able to raise equity, we can definitely fund this capex through internal accruals and debt.
So, sir, what is your current cost of debt? Give us that picture.
Our current cost of debt is in range of 8.2 to 8.5% per annum.
Understood. And you'll probably add another 300 to 400 crore of debt if at all you don't get equity, or if you don't get the right valuation in equity. Is that what you're saying?
Yeah, we are pretty much comfortable in raising debt.
Understood. So another 400 crores of debt at around 8.5%. Even if I take that as 9%, that's around 40 crore of EBITDA shaved off in interest cost. That's broadly the take, right? That's how one should look at it. And therefore your profitability and so, okay, what does this 500 crore capex do to your top line? Give us that picture. For how long does this capex suffice, and what is the max top line you can do on the capex that you're undertaking?
See, in our business, the mobilization time for deploying any particular asset in a project is ranging from 4 to 8 months. And so whatever capex we do in a particular year would fairly start earning in next financial year. So the capex which we are planning in this financial year will definitely start earning probably in Q4 or in next financial year. And this capex will definitely add to a great amount contribution in our top line. and this would be additional to what we are envisaging as of now.
What would that top line be? Would it be 1,500 crore? Can you give me a number?
See, in our business, generally 500 crores of capex would give you annual revenue of to the tune of 350 to 400 crore.
Understood.
And these particular assets have a useful life of more than 20 years. So we can use these assets for 20 to 25 years.
Got it. And the 1,000 crore top line that you're guiding for in FY27, without this capex, can you do 1,000 crore, or what is the outlook with regard to that? Give us that color.
Yes, as I said before, this growth of FY26 and 27, we are envisaging on existing order book only. And for that, there is no need of any further capex. So 1,000 crore we can achieve without capex.
Understood. So if you do the capex, your top line can easily go from 1,000 to maybe 1,500, 14 to 1,500 crore, or 1,350 crore at the very least, 1,500 crore at the most. Am I right when I assume that?
Yeah, you can assume that.
Point taken. Okay. Sir, give us color on Kandla and Dolphin, the receivables as well as the inventory that you carried over there. You've provided a certain number. Any more provision which may be required, or any amount that you haven't provided for? That's my first part of my question. Second part of my question, is there any upside, which means will any of that money actually get realized or come back? Do you see that happening?
See, we have experience of acquiring now more than 3 companies from insolvency, and we have seen that we have been fairly able to recover their old receivables to the extent we can. And with regards to Kandla and Dolphin Shipping, we have already taken write-off of inventory which was not there in their books. So that has already been written off. With regards to receivables, we will give our best efforts to recover out of this old receivables of these targets. And we are quite hopeful that we can recover at least 25 to 30% of it in current financial year. Probably we'll give a try for next 2 years to recover, and then can take a decision.
Wow, that's amazing. So, sir, what was that receivables number? Give us that perspective. 250 crore is what you wrote off. But how much of that was inventory? How much was receivables?
So whatever we had written off was majority was inventory. Okay. We had written off almost 250 crore, of which 240 crores were inventory and 10 crores were receivables.
Got it. So, sir, on a 500 crore capex, if you're doing 350 crore at the very least in terms of top line at a 40% margin, right, that gives you a ROE of maybe 20%. How quickly do you get there? Because you're currently at 12.
See, in our return ratio, I would request you to evaluate in a way that there is one item of goodwill is lying in our balance sheet, which is a non-cash item of almost 400 crore. So while calculating any return ratio, one should exclude that part, because that is a non-cash goodwill, and we haven't paid anything to acquire that. And so to my mind, calculating correct return ratio, you should exclude that. So that will give you the correct picture of return ratio. And the existing return ratio which we are at would definitely tend to improve going forward, with an increase in top line as well as margins, because going further, we are expecting to improve on margin fronts as well.
Got your point, sir. Thank you so much. This is super insightful. You've been very, very candid with me. Thank you for that that conversation and that perspective that you've given to us and our viewers. But thank you, sir. But that's all the time we have, viewers. Thanks so much for tuning in to KYC from myself and the whole team that puts the show together. Thanks so much for watching.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
If you talk to anyone who lives in Bangalore, you talk about, hey, what is your biggest issue? Apart from their boyfriend, girlfriend, spouses, etc. They will say, oh, this is traffic. I hate this traffic.
You've had quite a journey through the whole startup maze, I would call it. You were in InMobi, you've worked on quite a few ideas, you've done the corporate bit with Citi, and then how did you land on the idea of Yulu?
During my journey with InMobi, I thought I would be retiring at the age of 40.
Retiring at the age of 40, okay.
And as I was approaching 40, started thinking that what does it mean, and the idea was not going really well.
Sir, hota hai. When you have that hunger and that appetite, when it's no longer just about the money.
Yeah, it was actually never about the money. My journey when we started in Mobi office in that outer ring road area used to take close to 8 to 9 minutes from my home, and that started becoming 15 minutes, half an hour, sometimes 45 minutes. So I thought, maybe this is a problem I should be working with.
Give us the elevator pitch.
Sure.
What is Yulu and why is it important?
85% people in India do not have vehicle of their own. They don't have driving license. Other side of the business is now the gig worker. Today, from a revenue perspective, it is almost 90% plus.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ही अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly
A lot of responses said mind your own business, and a few even said ask for a referral.
He had certain circumstances which forced him to get into multiple contracts with different people.
Dual employment is fine in two circumstances.
You cannot justify something which is illegal.
During this period of time that you're working with me, you'll exclusively work with me.
You have to understand you're not the only one in this situation. If you cannot afford the premium, you most certainly cannot afford the
hospitalization, right?
The Soham Parekh story went viral for various reasons. But most importantly, it was the concept of moonlighting. Is it legal? And if it is legal, is it ethical? If you're a freelancer, there are a few important questions to ask. What is the right way to draw up a contract? One that is not unfair towards you, the professional, and the company. And if you are a professional, chances are that you're not receiving a regular income. How do you manage your financial goals and responsibilities? What are the right things to do financially in order of priority? This is MoneyWise on NDTV Profit, and I'm Alex Matthew. Joining me on this conversation is Ankita Ray, partner at Cyril Amarchand Mangaldas, and Harshvardhan Rungta, CFP Rungta Securities. Thank you so much to the both of you for joining in. I want to set the context for this conversation with the results of a poll that we did on social media, and I think that the results are quite interesting. We asked, do you think that moonlighting should be allowed? And very interestingly, the two responses that got the most votes are
yes, always. And second, depends on the contract. The second question we asked was, have you ever had a secret hustle? 20% said yes, thriving quietly. And the most responses, however, were thought about it. The third question we asked, if your team member had a side hustle, you would 1, support them, warn HR, mind your own business, and 3, ask for a referral. A lot of responses said mind your own business, and a few even said ask for a referral. So we got a few very interesting responses. It kind of gives you a sense of what people are thinking. But the most important question at the start of this conversation, and that's to you from a legal standpoint, is moonlighting legal?
So if you see, Indian law does not really define moonlighting, right? It's basically understood that in addition to your primary employment, if you have another job, or in the case of Soham Parekh, multiple jobs, right? Now the legal standpoint therefore has evolved by way of various case laws going up to the Supreme Court. And the position is pretty clear that moonlighting, or shall I say dual employment, because when you say moonlighting, there's always a connotation that it's without the knowledge of the employer. So the more legally acceptable term is dual employment. And dual employment is fine in 2 circumstances. 1, as long as your employment contract provides for it, and 2, if you have sought the prior approval of your employer. Right? Barring these 2 conditions, it is not supposed to be legal. Now, of course, we have to remember here that we are talking about an employer-employee relationship, right? Now, why is that important? We need to draw a distinction between the term employee and that of a consultant.
Or professional.
Or a professional, or
freelancer.
An independent contractor, freelancer, right? Now, when you talk about, say, an employee, you're on the rolls of a company. The company pays you a salary, makes your social security contributions. As opposed to that, if you're a freelancer or if you're a consultant, you are hired on a service contract, which means you're hired to do a particular service and you're given a fee in exchange of that. Right? Now, how that usually plays out is the contracts are quite different for both these categories of professionals. When we talk about, of course, moonlighting, you will see you're talking about an employment contract and someone having multiple employments, right? So that's the way we kind of approach it.
Okay, so we'll circle back to a couple of these things, and I've gotten my initial answer, is it legal or is it not? The answer I have gotten is that it depends. It depends
Absolutely.
on whether you're an employee and whether your employer knows.
Yeah.
One, and 2, if it's a
to-
contract. If it's a contract, if it's available as an option in your contract, then you can do that.
Yes, but even if you're not an employee, it depends on your contract.
Sure.
Right?
So we'll circle back to that type of contract. The question to you is, one of the things that Soham Parekh has said is that he was living hand to mouth. He had the need to go out and sign all of these multiple contracts. Now, I don't want to debate that. The point is that it draws to light the reason why a lot of people do this, which is that they have an urgent need for capital. They have an urgent need to generate more income. And that stems from the fact a lot of the times from not receiving money on an ongoing basis, Harsh. Is this the biggest challenge that a professional that is in this kind of scenario faces? The inability to have a regular income?
So, Alex, there are 2 parts to this. The one is irrespective of what reasons you give. So, as in this case, where he said that he was hand to mouth, etc., he had certain circumstances which forced him to get into multiple contracts with different people. You cannot justify something which is illegal.
Yeah.
So there could be a situation, you cannot say that, look, I was in a financial problem, that is why I did this. That does not exempt a person from doing something illegal.
Sure.
So that's the first part of it. Now come to what your second question was. Does being hand to mouth or not having sufficient cash flows instigate a person or motivate him to do something else? Well, if there is a survival, kind of a threat, then maybe that a person may look for any source that he can generate extra income. Now, Still, that does not justify, if I may say so. I mean, it's not fair if it's in your contract, as Ankita mentioned, if it's in your contract to be an exclusive engagement, if it's in your employee agreement for that matter. So then you cannot justify it by any means.
Sure.
Now, what do you do in such a case? So one, you have to understand you're not the only one in this situation who's trying to manage cash flows. So do not let these circumstances, hit onto your morale, where you're going to say that, or your moral for that matter, and to say that, okay, let me now do something which is illegal. Now, you have to very consciously, okay, it's easier said than done, but you have to very consciously, try and arrange your cash flows. You may approach your employer or that person whom you're working with for, say, advance payment for your services.
Sure.
Right? Rather than do something which is illegal and that backfires upon you so badly.
Yeah. Okay. So that's the way to deal with a situation where you are hand to mouth. But beyond that, generally, and this is a general statement or a general question, would you agree that a lot of professionals face the problem of not having money when they need it? And so famine and fortune or famine and surplus is something that they're constantly dealing with, because there will be protracted periods of time when they're not earning, but then they get a bulk of their money. So cash flow is the biggest issue. Would you agree?
Absolutely, yes. So in fact, things have become better now. So in my own experience, we are dealing with our own clients. We have many freelancers and professionals who are now engaging with us. We constantly face this problem of sorting out their cash flows because they get money sometimes when they contract and when they execute a particular project, they get their funds immediately in their hand. And all the next payment cycle is almost a year or 6 months later. So for those 6 months, they're not going to have a salary kind of an inflow. So they have to manage their cash flows in that period with the lump sum that they already received. Now talk about merchant navy. Talk about all sailors who are in merchant navy. So they are by their employment contracts not working for 12 months. Sure. They work for like about 6, 7 months or 8 months, and they are on shore for the rest of the period, where they're not even engaged, where they're not even getting their salaries. So when you get money in that period of 6 to 8 months, now that money has to be surviving for 12 months at least. So these are very common circumstances. It's not something unusual for freelancers.
In your opinion then, from that perspective, before we dive deep into the way that contracts should be constructed, what in the order of priority, what are the steps that somebody in this situation needs to take? It's possible that a lot of people listening in are either starting down this path or contemplating it. So what are the things that you should strike off your list in order of priority?
So first and foremost, you have to be very clear and accept and acknowledge the fact that you will not have a steady cash flow. Many people whom we interact with, they're so positive in life, which you should be, but they're so positive in life saying that, okay, now I've got X amount of money in this quarter, say for example, let's go buy a fancy car. Next quarter, we'll look at it that time. We'll manage something. So this kind of a pushing your problems for the next quarter or the next year is not going to solve problems. So you need to be very conscious and aware that this is a payment that you received in this quarter and you may not have any cash flows for the next 2 to 3 quarters. So you need to have enough provisions made for surviving during those periods where you don't have cash flows. So your basic expenses, so you first make an estimate of what are your basic expenses for your food, clothing, shelter. I mean, these things which you need to just pay off for sure. And that much amount you need to make sure that you've kept it aside. Now, anything over and above that you have, that you may think of, spending on discretionary items.
Sure.
Like you may want to upgrade a phone, whatever you want to do.
Or buy a car.
Or buy a car for that matter. So buying a car is again tricky because there's an EMI.
So I will circle back on insurance, for example, and sometimes in fact, if you have enough of an amount that you're receiving, the ability to pay yourself a salary, you can actually work that out. I'll circle back to that. But Ankita, I want to dive into the nature of these contracts. And here I'm specifically not talking about employee-employer relationship. I'm talking about consultants. So I'm talking about professionals that, as you pointed out, are on service contracts.
Right.
And there are various ways in which these are drawn up. I've heard of some novel ways in which these can be drawn up. When you're looking at such a contract, what are the things that are normally contained? And if you do want to stipulate that you want the freedom to take up additional sources of income, what should you look at as a professional in these contracts?
Right. So I understand we are approaching it more from the perspective of consultants.
Yes.
But I think the clause that we are looking at will remain the same whether it's an employee-employer contract or a consultancy, which is called the exclusivity contract. As the name suggests, it basically means that during this period of time that you're working with me, you'll exclusively work with me. Right? So the first thing that anybody who wants to do another job in addition to the one that is primary for them should look out for that exclusivity clause and what it says. Right? Now there are various ways in which it can be handled. Some clauses will say that okay, during your working hours you cannot work for anybody else, right? Some employers who want to be more sanguine about how this clause will play out, they will say that during the tenure of this agreement, right? So it's not working hours. It's as long as you're working for me, whatever the hours, you cannot work for anybody else.
Sure.
Now, these are very watertight clauses seen in employer-employee contracts. These are also now finding a mention in the consultancy agreements also. But this is where it helps when you speak to the service provider and have a dialogue with them. In cases, both parties can even negotiate to see the contours that they want to plan out. For example, it can be that, okay, you cannot work for certain of my competitors.
Sure.
Okay, but you can work for everybody else.
Right.
As we are increasingly seeing in some sectors, depending on the kind of talent or the lack thereof, if you want to hold on to people, some companies may actually be okay with you doing other jobs as long as you inform them, or in some cases take their prior approval. So these are the basic aspects that need to be looked at. I mean, recently we are also working with many employers, for that matter, in drawing up dual employment policy, because they also realize that, okay, we are fine with them having another source of income as long as our interests are not hampered in any manner.
So would you say, Ankita, from a legal standpoint, that it's becoming much easier for individuals to find work outside of the traditional sources, to say, for example, in the IT space, if you're coding for somebody, or in the content space, if you're writing for somebody, if you're ghostwriting for somebody, or if you're doing a voiceover, nobody's going to be able to point out and say, hey, or maybe voiceover if you're known well enough. But if you've written for somebody, nobody's going to be able to say, hey, you know what, I know you're writing, I know you wrote. So I guess employers from that perspective are becoming wiser to the fact that they need to get ahead of this problem, because people might just do this anyway. You saw the results of the poll, so you want to be a little more accommodative. Is that the perspective?
Yes and no. Depends on the sector largely, and again depends on whether that sector hires more of employees or more of independent contractors or consultants, right? Employers typically tend to be a bit more protective of their employees, and for obvious reasons, right? You are completely within the system of the company, you have access to their confidential information, etc. But you are right, they are thinking about it. We are seeing many employers actually thinking this idea that, as long as they tell me or take my approval and they are not with a competitor, I'm fine with them having a side hustle. That's fine. And
it can be social media as well, right? Because a lot of people are both social media influencers and professionals.
Correct. And in that kind of a situation, what also matters is the kind of information you're putting out there as a social media influencer.
Right.
Because nothing that you say should damage the reputation of my company, right? So that is also a valid reason that employers often have.
And people codify that?
Oh yes, they do.
So can you give me an example? I mean, not with a company name, but how this would be drawn up?
That to say that if you're releasing any content, they have guidelines on the kind of content that you should not put out.
Sure.
For example, with the geopolitical times that we are living in, many employers are actually coming out with policies to say that please be careful about what you say about the geopolitical situation. Ideally, do not even go out there and make a statement
about it,
because you are our employee and that reflects
on the company,
on us. Right? So these are slight shifts that we are seeing. Now, of course, if we come to the space where a consultancy or a freelancer is the norm, then we see things to be slightly more relaxed.
A little looser, yeah.
But at the same time, companies are very careful about whether you're working with a competitor or not.
Sure.
And I'm sure there are valid interests, right, on both sides. Of the coin.
Yeah, it makes a lot of sense and very interesting conversation on the legal aspects of it. But Harsh, to circle back to that insurance, and you've said on conversations with me, even for the regular salary earning individual, you would put insurance in certain cases above even making an investment. It's the first thing that you suggest doing. And for somebody that's not earning a regular income, therefore it becomes much more important. So how do you go about this? Should all professionals have, for example, a term insurance if they have a dependent? Should they always have health insurance? How much cover do they have?
Yeah, so actually speaking, I mean, not only for people who have regular income, who have irregular income, every family should have adequate insurance in some form or the other. It could be life insurance. Health insurance is of course a must. But as you said, term insurance, is that mandatory? Well, it is mandatory for people who are earning members of the family and who have financial dependence on them. So if there is somebody in your family who's dependent financially upon you, it is your responsibility to ensure that if anything were to happen to you, there is an emotional loss to the family that cannot be replaced. But if there is a financial loss, there is a provision, there is a product that helps you replace yourself financially for your family. So it's a question you need to ask yourself. You love your family until you are alive, or you love your family until they are alive. Okay, so you may not be around, but your family still needs those requirements, financial requirements, which needs to be solved. So many of the times we believe that those people who in employment have a belief that because we are insured by our employers, we don't need to buy independent covers for ourselves.
Health insurance, right?
Yeah, so that's not true. So you just need to make sure that you are independently covered for yourself. It could be your term insurance, which is life cover. Now, health insurance is a very, very important, cover to buy, especially in case you have irregular income. So I'm saying it is a necessity for everybody, but
even more so
for people who have irregular income. Now, let me highlight this with an example. Now, if you are a person who's on contract and you make your money only in certain periods of the year, and if there was any kind of a health issue where you or any of your family members were to be hospitalized, and all that savings that you had or all that income that you generated goes into paying for that health treatment, then what happens? Right? So everything that you've done till now can completely be exhausted only with one hospitalization. Now, health insurance in that context becomes the most important cover to buy, and adequate health insurance, not just health insurance.
Okay,
so just make sure that, and many of some people come back to me and say, look, medical premiums have gone up exponentially. I cannot afford it. Should I not pay for it and not take a cover? The only statement that I would make in all such cases is, if you cannot afford the premium, you then most certainly cannot afford the treatment.
Hospitalization, right?
Yeah, so non-affordability of premium is the smallest problem that you have. Imagine if there was a hospitalization, you would most certainly not be able to afford the treatment cost.
So, and the second part of what I wanted to ask you was, can you pay yourself a salary? And there are ways in which you put a lump sum in a particular product. And in the mutual fund space, for example, you can do a systematic withdrawal plan if you set something up like that. Is that a feasible approach to have?
Of course. So what we're talking about is ensuring a regular cash flow, because our expenses are going to come month on month, right? So if I have money in my bank account, this is usually what we do. So I can narrate that and illustrate that as well. So if there is a freelancer who earns in, say, particularly in the first quarter, say, for example, and we know in visibility that next 2 quarters there is no regular income because they're working on certain projects, and once the completion of the project happens, then they will be paid. So if you earned in the first quarter, for example, you park that money out, get it out of your bank account, because if it lies in your bank account, then it's usually seen as a habit that you tend to spend it. But if you're taking one step, you create one leg of this transaction, which is you park that money in somewhere else. It could be mutual funds, it could be anywhere else. In some cases, we have another bank account in which it is transferred. So let's not get into the details of where it is transferred, but let's just put one wall in between you and you're spending that money.
Sure.
Now you know that whatever expenses that you're incurring in this month, you have money in your bank account. Now something that is going to happen next month, might as well come into your bank account in the next month. So that is where the SWP works. That you set up a systematic withdrawal plan and you say that I want the next tranche of redemption to be done only on the first of the next month. So it works like a salary for you.
Yes.
Though you're paying yourself, in the words that you used, you're paying yourself, just ensuring I get the money when I need it, rather than keep it in my bank account and restrict myself from accessing it.
I do want to ask about escalation of cost. Of course, from the perspective of the employer, but from the perspective of the professional, you're talking about being remunerated for the work that you're doing. In your opinion, are these getting more common, or should there be conversations once again between the company or the employer and the individual to work that into a contract, to say that you have regular escalations for the amount that you're being remunerated for example, being paid for the work that you do? I met an interesting individual who has a credit-based system, for example. He has his defined amount of work, and beyond that, anything that is done is, say I give you 10 credits for the year, each activity is 1 credit, and beyond those 10 credits, you pay me as per the credit basis. So you can have novel contracts as well.
Oh, absolutely. But, this is not common, or I would say even required that much in a employer-employee situation, right? Because you're getting a regular salary, you have your scope of work, there are year-on-year increments, your bonuses. This all forms part of your company policies, which is a part of your contract, right? But yes, it is relevant when we are looking at freelance contracts or consultancy contracts, like we discussed right up, that these are very project based or service based contracts, right? So to have a clear idea of which project it is, what are you required to do under it, and how much will you get paid for it, and what happens thereafter, or if there's any additional scope of work. Yes, we are seeing contracts being drawn out in a more expanded fashion, taking into account these contingencies as well.
Okay. And we're rounding out the conversation now. Oftentimes, and I've spoken to a few professionals, this is not really a widespread feedback that I've gotten, but anecdotal evidence, they don't really stop working, right? They continue working for as long as they can. They don't have a stop at 60, especially if they're doing a service. But how do you plan for when you stop working? That regular SIP becomes a problem. Is there a workaround?
So, well, Alex, the point is, ideally, every human should work until they are physically able to work. Because there's no point sitting at home at any point in time. I mean, it doesn't work well for your mind. It doesn't work well for yourself in any case. So how do you keep yourself engaged, whether professionally, whether productively, or whether it's social work? Okay, so you need to keep yourself occupied. The question is, how do you manage your cash flows? That is the very specific area that we're talking about. You need to be sure that post-retirement or post-working life, nobody's going to pay you anything.
Sure.
So you need to have adequate provisions and reserves made so that you can survive with dignity for the rest of your life. You don't want to go, asking for financial support from your children or from your relatives because you've been supporting them all your life. Imagine a situation post-retirement, you have to be dependent on your children for funding yourself. I mean, if given a situation, let's not walk into that, right? So plan well in advance so that you have enough reserves where you can live your life with dignity until you're alive.
Fantastic.
Okay. Now, just one point on, if you'd be interested to know, what is that line that you draw in terms of ethics with work, right? Yeah. So I have a very interesting example that I just recalled, if you permit me.
Of course, please.
Okay, so I hired a cab once for the entire day. Okay, and the driver who was driving me around, the cab did not belong. He did not own that cab. He was only driving for the day. Now, every stop that I took, and when I came back, I saw him cleaning the car every time. The taxi, he was cleaning that every time. So out of curiosity, I just asked him, because you're only driving it for the day. In the evening, you're supposed to return it back to the owner. Then every time that you're dropping me somewhere, I come back, you're cleaning the car. It's like an OCD kind of a problem or something else? He made a very interesting statement to me. He said, this is the car because of which I earn a living. Though it does not belong to me, I don't own it. But I'm just out of respect making sure that the source of my income needs to be respected and taken care of. So now coming to whether moonlighting can be legally organized in contracts, otherwise, I think anybody working for anybody in fiduciary responsibility to anybody just needs to ensure, if this is the source of income for me, how morally right can I be to that organization or that person or that client, so that I don't violate my own moral ethics, not to do with what is there on contract. You can have everything written and still do things. You can have nothing written and still do it correctly.
On that beautiful note, thank you so much to the both of you for taking the time. It's been an insightful conversation. And that brings us to the end of this edition of MoneyWise. It's been an absolute pleasure bringing it to you. Let us know what you think about moonlighting and otherwise, and do stay tuned. Lots more coming up on NDTV Profit.
Brought to you by Canara Bank. Together we can.
Sir, try berry pulao. Too good. Good, no? Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analysis.
Soch kar, samajh kar, invest kar.
Fresh air. The roof, but different. The grill, but different. The alloys, but different. The seats, but different. Different is in the XUV 3XO Rev X series, starting at rupees 8.94 lakh.
जानते हैं क्यों पूरा इंडिया सिर्फ एनडीटीवी देखता है?
क्योंकि सही खबरें और सही इरादों की मिसाल है एनडीटीवी।
ठीक ऐसे इरादों की कहानी है हमारी मूवी तन्वी द ग्रेट।
पापा used to call me
तन्वी द ग्रेट
रिलीज हो रही है 18 जुलाई को मूवी थिएटर्स में।
और फिल्म से जुड़ी हर अपडेट सिर्फ एनडीटीवी पर और वेबसाइट पर।
कैश कम है, विड्रॉ करना पड़ेगा।
ट्राई एसबीआई डोर स्टेप बैंकिंग, कन्वीनियंट है। बैंक आएगा, करेगा कैश डिलीवर, टिक। टीडीएस सर्टिफिकेट, टिक टिक। अकाउंट स्टेटमेंट, टिक टिक टिक। हैट्रिक। सबको पता है एसबीआई डोर स्टेप बैंकिंग कन्वीनियंट है, सबको पता है।
Well, hello and welcome back to NDTV Profit. We're now in conversation with the management of Wipro post their Q1 earnings. We're now joined by Mr. Srini Palia, who's the MD and CEO of the company, Mr. Aparna Iyer, the CFO, as well as Saurabh Govill, who is the CHRO. Gentlemen and ladies, thanks so much for joining in today. Largely, one of the key aspects of the results and something that I came across was vendor consolidation that all of you spoke about, in the press conference as well yesterday. In this aspect, what has been one of the key aspects to have several large deals as well as look at vendor consolidation as a theme? And what do you think, according to you, has been Wipro's strength in this aspect when the macro environment is so uncertain to actually be a biggest beneficiary of vendor consolidation? Because traditionally, there has been some kind of weakness in that for Wipro, but with you coming in over the last year, what has changed which has benefited you specifically in vendor consolidation to start with?
So, Puneet, if you look at it, we called out consulting-led AI-powered Wipro. I think that's a strategy that we have adopted last year. Having said that, if you look at the mega deal wins that we won, 2 of them were in the banking financial services and 1 of them was in the technology and communication. So what mattered to us and what mattered to the client is our understanding of their landscape, our understanding of their business, our understanding of where they want to go with the technology trends that's happening, especially with AI. So we brought in the consulting aspect of it, we brought the domain aspect of it, and more importantly, the solution is based on how the client was looking at and how they wanted to implement going forward. So all these factors really helped. Of course, our long-term partnership with them and the way we have delivered as well.
Well, the other one was deal wins, because we've seen that as one of the strengths in this quarter as well. Last quarter you had the Phoenix deal win, a large one. This one again, 16 large deal wins in this particular quarter. But in the last year also you had $5 billion of deal wins, but that kind of translation into the financials, if has not happened, or maybe it's going to happen and we're going to see that in the next couple of quarters. What factors do either of you see as that of those deals which you won last year? Because these ones are going to, of course, take some time, 4 to 6 quarters to come into numbers. Of the last 2 years, your deal wins actually has been very strong. But so what could be one of the key reasons where you're seeing those deals also take some time to ramp up to reflect in these near-term numbers that we've seen?
I think your question has some of the answers that I was looking for, Puneet. So number one is you talked about the Phoenix deal, right? While we announced it in Q4, we'll start executing that in Q3 because there's a lot of planning phase that happens. Also, some of the deals that we won now, it may take a quarter for us to ramp up and get to execution mode. Having said that, there are certain changes that happened, which I talked about in the last quarter results, wherein some of the large transformation programs, the client actually put on hold because of the situations that they went through tariffs. And that was specifically in certain industry segment, which was around consumer and energy and EMR sectors. I think once those come back, once a situation certainty comes back, hopefully those transformation programs will kick in. But having said that, most important for us now are the deals that we have won. How do we execute on day one, and how do we deliver the value for the clients that we are committed to them?
So you had some deal wins in this particular quarter also in the weaker segments, first to say the retail, the consumer. Has that largely been shifted to cost takeouts or some new features that the client wants specifically? Has that change now happened?
Yeah. So if you look at our deal wins, there are a combination of both cost optimization, vendor consolidation. There are also some of the new programs that they want to start. For example, Aparna talked about the B2C opportunity, right? They want to see how they change the customer experience, especially the digital customer experience. So that's a new project or a program that particular retailer is starting to take off. Second, there are certain areas of the back office that they want to actually bring in agentic AI and transform their business process so that they get in the velocity and productivity and experience for their end customers as well. So it's a combination of both, Puneet.
And the one aspect also was the capex of IT companies. You've had a new dividend policy earlier this year, 70% distribution over the next 3 years of profit. So how does that align with your capex which you have to do on new technology? Essentially, the incremental capital which you say, and in finance we love to throw the term of sales to assets. Essentially, how will that? I'm sure that won't take a backseat, but how will that transform over the next few years, maybe 3 years, since you have the dividend policy for that aspect, in terms of going into new areas, and what is the strategy for that?
Maybe Aparna, if you could.
Yeah, so we do have, even as we started the fiscal year, we're about $6.2 billion of gross cash. That has only improved in the first 3 months already. We had been generating consistently about 120% and upwards, north of that in terms of net income. So cash flow generation has been robust, and we expect it to be robust even going forward. And we starting off on a very, very solid base of cash on the balance sheet. And that gave us the confidence to increase our capital allocation. And even while we've increased it, we made sure we have enough of a war chest to pursue both organic and inorganic investments. We feel very, very confident that we will be able to support this increased capital allocation and meet the strategic needs of the business.
So how long could you, now there's a timeline, but how long do you think your new investment today, $1 invested today in new technology, how long do you think that will take into conversions of either a deal win or in your financials? Has that gotten longer? Or
I think those cycles have actually got much shorter, especially from a technology standpoint. Technology cycles are getting extremely quick. We started with generative AI and then it became agentic AI, and now, there's going to be, I'm sure, the next big one that will come through. So I do think that these investments that we make are very here and now and pay off here and now. And that's been the nature of how IT services has worked, and we just expect it to get faster and faster.
No, just taking a long-term view, and if you all three of you can comment on this, because during Y2K we did see coding as one of the key expertise for which IT companies wanted that kind of talent, and we saw a lot of regional hubs within India created across states where coding became such an important thing, and that kind of went into the 2010s itself. Last 20 years has been that. My question largely is that with AI you might not see that case anymore of coding, or it has transformed in that role. So what do you actually see right now in an ideal employee when you're hiring? Because Gen AI and everything is changing so quickly, so you won't find that employee who will know everything about that, because it might be old in 3 months. So what are you looking at in an ideal employee, and if what from each one of your perspectives?
Sure. Maybe I'll take the first business. Saurabh can add to that. If you look at the way the world is, the programming world is changing for the engineer, right? Earlier it was about pure play coding. Now we're talking about prompt engineering. But what is important when you get into prompt engineering is understanding the business context, right? And only then you can prompt the right one, right? So the way I see it is the new hires that we have, their understanding of the business landscape, understanding how the data works, and then how you implement the AI. I think that aspects become more important in addition to basic programming language. And please understand, when you're doing a coding, the tools can do so much in code generation, so much in testing, so much in deployment. The human involvement could be there, because when you're getting into production environment, you have to be extremely careful how that the application will happen and how do you monitor that. So there are definitely certain tasks that can be automated, but there will be very important tasks in the context of the business, prompt engineering and so on and so forth, that an individual must have.
And if I look at it, apart from the technical skills, today is anyone who wants to become part of us or anywhere, two aspects come out very clearly. One is learnability. Given the changes happening in the macro environment and in the technology landscape, how quickly people are able to learn. I think that's a very key aspect which we try to look at it. Communication. How do you? Srini spoke about understanding business. You have to work with the clients. You might be extremely good in your technical knowledge, but how are you able to communicate to the people? I think all these things come together, when you're looking at a person. And the last point I'm saying is that we are still not there. We still need people who understand basic language skills also, because there is coding happening right now. 100% is not AI driven. But we are evolving as we move forward. But these tenets would continue as we look at people.
Just final couple of questions on, the fresh hirings has been one of the key aspects you mentioned before, 10,000 new fresh hires, you want to do it this year. But the net headcount addition number, when I see over the last 3 quarters and remove the quarterly aspect, it's not been that in terms of, addition. And now with Srinivasa coming in over the last year, what is the strategy over the medium term, if not numbers? With fresh hires coming in, you will be looking at new verticals from the clients that you want to challenge, and you need that people. So what would be the net headcount addition be in the medium term?
So I think if you look at headcount, it's a function of the entire people supply chain. There is how much we hire, how many people are attriting, what is the bench. And I think if you put all these 3 things together is what we need to look at it when you look at headcount number. Today, if I look at, we have a good bench. Our utilizations, while for the quarter has gone up, for the year on year we are down, and we think we have had space to improve. We are looking at hiring attrition which is flattish so if you keep all we will continue to hire depending on demand, depending on requirement. We have won some large deals. We need to make sure we execute on them. We deploy people. We have in fact, utilization has come down because we are keeping people ready for those big deals. So we will hire depending on the demand, both from campuses as well as experienced people. But it will keep changing as we move forward over the business scenario. That's how we look at it.
Well, one final question, in terms of margins, because we've seen some impact this quarter, but again, over the last 8 to 12 quarters, we've seen a strategic increase from 15 to 17%, and this quarter has been the first where we've seen some impact on that. Do you think that for this year, the margin, you will try to manage the margins in a difficult environment, while on the medium term, the 17% margin to 18% margin is the target for Wipro going forward?
We've, like you rightly said, over the last 8 quarters, we've shown a lot of strength in the fact that we can improve margins. Right now, we are very, very focused on converting some of the deals that we've booked. We're very excited about the bookings we've had. This will translate to a good potential in the quarters to come. And, converting those deals into revenues will need upfront investments. We've spoken about how some of these are vendor consolidation wins, which are, by nature of it is very, very strongly contested. And, clients do want a share of the savings, right? So in some sense, there are pressure on costs as well, as we start. But, we go back to what we have done in the last 8 quarters. We will continue to put those levers at play and offset some of these pressures. I'm not calling out a band at the moment. We're very, very excited about the deals that we've secured. We're focused on better growth.
Well, gentlemen, thanks so much for joining and giving us perspective on a whole host of topics apart from the recent quarter. We wish you the best and look forward to our next conversation.
Thank you, Puneet.
Thank you.
Thanks for tuning in to Talking Point Unfiltered. And my guest today is Ravi Dharamshi of ValueQuest. And the idea of doing the conversation with Ravi, as I told him as well, was to try and understand that how do large investors think of mega trends? And how do they chase these mega trends? How do they diversify their portfolio between 4 or 5 concurrent mega trends that they might be seeing at any given point of time? Ravi, such a pleasure having you here.
Thanks, Neeraj. It's my pleasure to be here.
So, you've always spoken about these mega trends all through the times that we've spoken. Back from 2015-16 when I first started talking to you, when I think we were in the midst of the chemical mega trend, if you will, and the pharma mega trend, you kind of try to identify some of these and then maybe invest early in them and then ride the whole wave till you can. Would that be a good summary of one basic investing style?
So let me try and explain a bit with a little bit more nuance and a little bit more in detail. See, in any particular industry, there are phases, right? You have a tough phase, struggle phase, then you hit that inflection point, you have the great growth phase, and then you reach a kind of a plateau, then again you have a growth phase. Idea for us is to identify which that growth phase is. Everybody can name a lot of mega trends today, but even within a mega trend, you make money only when you are invested in that particular growth phase. And for that, you need to be very clear in your mind what stage that particular mega trend is. And there are markers that we keep track of, whether it is the technology curve, the cost curve, behavioral shifts, regulatory shifts, capital flow, talent flow. All these things tell us which way the wind is blowing, how strong that wind is. Is the mass adoption reached that kind of an inflection phase? Are we going to see a J-curve kind of a growth phase? If yes, then that is the phase in which the maximum value creation tends to happen. And that is what we want to capitalize on. A mega trend can last 20 years, 30 years, 50 years, but the phase of making money might not last that long. That might be a 5, 7, 10-year phase. And that is what we want to capitalize on. I hope that's a small nuance that I had about investing in megatrends?
No, it is a good one, but just trying to probe that a bit. So this would be different for different industries, right? The growth phase, if you will, because I read a chart in your presentation that there is a start phase, a growth phase, and a scale phase, if I'm not wrong. So for every industry, its growth phase would be different.
Absolutely.
In terms of the timing.
Oh yeah, for sure. In terms of the timing, in terms of the duration, in terms of what kind of delta we can see, how much of that value can actually be captured by the participant, everything differs from one trend to another, one industry to another industry. And one trend can spawn many sectors also. It is not restricted to one sector. And for example, we have spoken a lot about energy transition, but it is actually a trend that encompasses 15-20 different sectors. It is not restricted only to solar. Solar might be the biggest, but there is power transmission, there is biofuels, there is nuclear, there is hydrogen. So many other sectors are also part of the energy transition, and not every sector hits that inflection point at the same time. Solar probably has hit that inflection point 3, 4, 5 years back. Nuclear is probably some time away in terms of hitting that inflection point. So you need to be able to identify that inflection point within a mega trend to be able to ride that extraordinary growth phase where the value creation tends to happen.
What are the markers for this growth phase? I mean, are there common markers which people can take kind of?
No, so let's go one by one. I already mentioned them, but let's say technology curve. So for example, lithium ion battery technology has hit that inflection point 3-4 years back, and it is expanding it is getting adopted very quickly. However, there is a competing technology called sodium ion technology. Now the problem with lithium is that lithium is short in supply, and we might not have it in our country. So then you might still end up being facing the same problems that you face with fossil fuels, that you're at the mercy of some other nations who will, whether they will supply or not, like it is happening in the case of rare earth elements right now. Now, sodium ion is freely available, but that technology has not reached that inflection point because the lithium ion by nature tends to be very dense. Sodium ion is not that dense. If it is not that dense, then you need more of the material to produce the same unit of power. And for that means maybe the size of the battery expands. So if that is the case, then the applications will be different. It might not be applicable in a transportation kind of a thing, but more stationary kind of application might be there for sodium ion. So where are we on the technology curve? Then where are we on the cost curve? It is not only about technology. Nuclear might be a mature technology, or solar, for example, is a 70-year-old technology, but it hit that cost inflection point few years back when China mass adopted it. And once China mass adopted it, the prices crashed. And when prices crashed, that's when the mass adoption everywhere else in the world has begun. So along with the technology, you need to hit that point in cost also. Then regulatory tailwinds need to be in favor. Governments need to be supporting that, no, we are going to adopt this particular technology and we are going to incentivize the user industry to deploy that. Then you need to see the money flowing in, that people deploying the money need to be able to see the IRRs, and if they can see IRR, that's when the money will flow into it, and that's how everybody will plan their capex and their capacities according to the opportunity. So a confluence of a lot of things need to happen for you to say that this particular technology has reached the takeoff stage and now money can be deployed. From primarily a listed market investor's point of view, investing in something that is 10-20 years out is not a prerogative. We don't invest in something that is loss making or not reach that kind of an inflection point. So we have a very time limited view of these trends. In next 5 years, which are the technologies which will hit that inflection point where we can make good money, and that is how we narrow down our focus.
Got it. Okay. So So, okay, so by the way, viewers, we've done a very exhaustive conversation with Ravi and his colleagues on the energy transition piece. So I'm not going to spend so much time on this episode talking about energy transition as much as I thought we'll talk about two other themes and two other mega trends and try and take Ravi's understanding of those mega trends and want to understand whether the technology markers or other markers, if permissible in these industries, how do they suit or how do they fit in? So let's talk about let's talk about financials and a particular subset of financials, Ravi. You've been selectively constructive in that bucket. 2025 has marked a new Reserve Bank of India, and people are very constructive on NBFCs. But I remember a conversation with you wherein you spoke about how the non-lending financials, and particularly the capital market plays, is a mega trend that people should have caught ideally early, but maybe right now, is it too late to latch onto it, or is it still in the early cycles?
So definitely we are not at the beginning of it, but at the same time I don't think we are at the end of it also. I think this particular trend has a long way to run, and we will see a lot many more players emerging out of here. And case in point, my own firm, which is an AMC, right? We might see a lot of AMCs. We are witnessing one of the first private equity, pure play private equity player filing for DRHP, and they might get listed. Tomorrow there will be other alternate asset managers that will also get listed. And I think this is still the beginning of the trend. But let me dial back. What are the drivers of this trend? Number one, India is getting formalized. India used to have a huge informal economy. With the advent of GST, with the informal sources becoming less and less because we are going towards cashless, less cash economy, let me put it that way. So the avenues for the cash deployment are going down and down, and that means you have to go through the formal channels in terms of borrowing or lending or doing any kind of business transaction. So formalization is underway. Second trend is the financialization is underway. And when I say financialization, essentially India used to be a 35% savings economy. We have dropped to being a 25% savings. 25% of the GDP is what we save, but 25% is also a huge number when you put it in context with some of the developed nations. They barely save. So of that 25% bucket, large part of it used to go towards real estate, gold, nothing against that. But as you create more and more wealth, it's only so much real estate that you can handle, and it's only so much gold that you can have. All these, the billionaires and the wealth family offices that have come up in the last 5 years, they are not incrementally going to buy more and more real estate or more and more of gold. So they naturally are gravitating more towards financial assets. Now it might be so that some people might prefer alternate assets, some people might prefer mutual funds, some people might want to invest overseas, but that's fine. Incrementally the money is going more towards the financial assets. So one is the formalization, second is the financialization. So any financial product which is fee based will see a big tailwind over the course of the next 10-20 years. In some way, this is a moment you can compare with the 1980s in US, where in their what is it called, 401k. They were allowed to invest in equities, and that trend caught up, and it became bigger and bigger portion of the American public's portfolio. And I think it went from some less than 10% to more than 40-50% kind of a number in a 20-year time horizon. I think we are in year 4 or 5 of this. The way we have seen the money come into equities, and particularly in SIPs and mutual fund, is, I believe, a beginning of a trend. For a long period, since say 2008 till 2020, almost a 12-13 year period, we did not see that pie grow at all. Markets were more driven by foreign flows rather than by domestic flows. But because of allowing EPFO money, because of more money getting into the financial channels and into the market, now we have enough pools of capital domestically to be the main driver of this whole trend. And I think this is still the beginning. So any business that is in and around the capital markets, it could be bond markets for all you know, but in and around the capital markets should do well over a 10-20 year period. And of course, like any other industry, we will also have our cycles, and there will be consolidation also at some point of time. Right now it is all very fragmented because the numbers are large. More and more people. In fact, we are going to witness one of the largest top 3 players in the AMC industry getting listed. If this is the beginning of the trend and the player is still getting listed, I mean, I'm sure the trend is not over. But of course, it doesn't mean you will make money necessarily from the next 1-2 years perspective. You have to have a slightly larger perspective over there, is what I feel.
Fabulous show, Ravi. Thank you so much for this one today. Lovely conversation. And imagine, viewers, what a conversation the defense and the aerospace one promises to be. I look forward to doing that, and I'm sure you all look forward to tuning in for that. But thanks so much for tuning in today, and Ravi, once again, thank you so much.
Thank you so much for having me.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
If you talk to anyone who lives in Bangalore, you talk about, hey, what is your biggest issue? Apart from their boyfriend, girlfriend, spouses, etc. They will say, oh, this is traffic. I hate this traffic.
Had quite a journey through the whole startup maze, I would call it. You were in InMobi, you've worked on quite a few ideas, you've done the corporate bit with Citi, and then how did you land on the idea of Yulu?
During my journey with InMobi, I thought I would be retiring at the age of 40.
Retiring at the age of 40, okay.
And as I was approaching 40, started thinking that what does it mean, and the idea was not going really well.
Sir, hota hai. When you have that hunger and that appetite, when it's no longer just about the money.
Yeah, it was actually never about the money. My journey when we started in Mobi office in that outer ring road area used to take close to 8 to 9 minutes from my home, and that if you talk to anyone who lives in Bangalore, you talk about, hey, what is your biggest issue? Apart from their boyfriend, girlfriend, spouses, etc. They will say, oh, this is traffic. I hate this traffic.
You've had quite a journey through the whole startup maze, I would call it. You were in InMobi, you've worked on quite a few ideas, you've done the corporate bit with Citi, and then how did you land on the idea of Yulu?
During my journey with InMobi, I thought I would be retiring at the age of 40.
Retiring at the age of 40, okay.
And as I was approaching 40, started thinking that what does it mean, and the idea was not going really well.
Sir, hota hai. When you have that hunger and that appetite, when it's no longer just about the money.
Yeah, it was actually never about the money. My journey when we started in Mobi office in that outer ring road area used to take close to 8 to 9 minutes from my home, and that started becoming 15 minutes, half an hour, sometimes 45 minutes. So I thought, maybe this is a problem I should be working with.
Give us the elevator pitch.
Sure.
What is Yulu and why is it important?
85% people in India do not have vehicle of their own. They don't have driving license. Other side of the business is now the gig worker. Today, from a revenue perspective, it is almost 90% plus.
Urban mobility. It seems like a no-brainer. When you have so many people in the larger cities in India struggling in traffic, pollution issues, the idea of a company that helps people travel in an eco-friendly way seems like an idea that was waiting to happen. Yet, nearly 8 years later, Yulu is one of the few companies, or perhaps the only one, that is actually in this space. So, why this idea and how will this be causing a disruption? To speak on this, I'm pleased to invite Amit Gupta to the episode today. Amit, thank you so much for being here with us.
Thank you, Tamanna. It's a pleasure to be with you in this show.
Okay, tell me about the idea of Yulu, because you've had quite a journey through the whole startup maze, I would call it. You were in InMobi, you've worked on quite a few ideas, you've done the corporate bit with Citi, and then how did you land on the idea of Yulu?
Yeah, so call it the entrepreneurship journey, which certainly started with InMobi. And as you know, things were going very, very well. And even my InMobi journey started with some promise of mine with myself that at the age of 30, I should be on my own. So InMobi happened. There was no logic why InMobi and why that point of time. And during my journey with InMobi, I thought I will be retiring at the age of 40.
Retiring at the age of 40. Okay.
You see all of those crazy stories of plenty of successful people. And back then, okay, 10 years are good enough. So 40 years milestone sounded good. And as I was approaching 40, and the whole promise to myself and to my wife that, okay, 40 years, everything is done, dusted, we'll have chill life. Started thinking that what does it mean? And the idea was not going really, really well. So a vacation for a week is okay, but vacation for life, that too early. And then started asking myself, what is one thing I don't do today? When I'm 50, I'll regret. And this whole feeling about that, hey, you have to still do something truly big, not for yourself, but for the others. And if you talk to anyone who lives in Bangalore, you talk about, hey, what is your biggest issue? Apart from their boyfriend, girlfriend, spouses, etc. They will say, oh, this is traffic. I hate this traffic. So that's how the idea of Yulu came into picture, where my journey when we started in InMobi office in that outer ring road area, if you're familiar with Bangalore, used to take close to 8 to 9 minutes from my home. And that started becoming 15 minutes, half an hour, sometimes 45 minutes. And sometime I'll say, okay, I'm not even going. I'll take a U-turn, go back to home. So that's how situation of traffic started deteriorating. And then you hear the horror stories of air pollution, AQI going to the roof. In Delhi, even in Bangalore, people don't talk about it, but our air quality is also bad. So I thought, maybe this is a problem I should be working with. So while things were going really well with InMobi, my last 2 years with InMobi, I developed another product called Glance. You might have seen there's a content platform on lock screen, which became very, very also big. And but at the same time, myself was, okay, if I don't do this, this is the time. So that's how Yulu got started.
Yeah.
It started with a
pain point. I just want to hit that pause before we go to the rest of the story and come back to a part which you mentioned, that you wanted to retire at 40.
Yeah.
And then when you were approaching 40, you said, what will I do with all of my time? I don't know, maybe your wife said, please don't come sit at home right now.
maybe that also fear actually worked out well.
But now the point,
please go.
The point I want to come in on is ये अक्सर होता है at the start of your career.
Yeah.
A lot of people feel, oh, this drudgery and how long will it go, and let me just make enough money to sit back and then retire. But it never happens. I see this in story after story. So just talk a little bit more about that when you have that hunger and that appetite, when it's no longer just about the money.
Yeah, it was actually never about the money.
Yeah.
And this is truth, by the way.
No, but if you want to retire at 40, then you need the money to do it.
So thankfully, enough money for me to not worry about money. So yeah, it was not about money. Even with the InMobi days, at least come from the mindset that whatever you have, you try to set up yourself. Don't get into the other side where you are under debt and so on. So I remember I bought my first house in Bangalore, and it was less than 15 lakh. I come from actually well-to-do family, but I just like any other kid. Okay, Papa, I don't need your money.
Was there a family business?
Yes. So
was there any pressure to ever join it?
Always. So I always dodge that question. Just similar to, when are you getting married, when you're having your kids. So you have those pressures, and I dodged all of the questions. So especially, when are you coming back? And I grew up in Kanpur. So every phone call, every month, you will have this question. And I'm like, okay, give me one more year, I'll come back. And that day never happened. And thankfully, I think my parents also accepted after a point of time that this guy is not going to come back, so let's not waste time. But the negotiation was, okay, at least get married. So fine, there was a trade-off. Okay, so I got married pretty early in my career. And but I think that was a good, I enjoy it. I think I'm thankful to my partner who has been with me and really supporting me in this journey. Coming back, so this whole piece that you have to do something, that was an urge, and it was not about money, and kind of learn to live with whatever resources means I had.
It's not easy to do that.
Yeah, it is not easy.
It's not easy when you have the fallback. You always have the cushion. In fact, you have the pressure to go back to a very set path. And you say that I will not go back to Kanpur. I will try and build this business that no one else has ever done in Bengaluru. Your very close friends and family must be thinking, why? What is wrong with this guy?
Actually, very real. My parents, my father particularly, when I first of all did not even tell him that I've left this job, which was really high paying, and doing something on my own. And back then, 2006, it was not a known phenomenon of you're doing some kind of startup.
It was not cool.
Call it cool, and a lot of my friends and relatives must be thinking that something has gone wrong with this guy. But I'm like, fine, this is what I'm doing. And after my parents visited me in Bangalore, and they saw that he's doing something real. Whether he's getting paid or not, how much, no one cared. But they knew that I am happy and I'm like working hard. And back then, who understood mobile internet, right? A small little phones, they will only use it to call someone. And I'm talking about building something on top of it. It was an alien concept. So it took us some time for them to understand that what I am doing, why I'm doing. So you're right, it was not easy.
Yeah. Let's come back to the Yulu journey. One is the personal journey of, getting your friends and family to understand your passion as an entrepreneur. The other one is to get investors on board. And so with an idea like Yulu, you want to build a low-cost, environmental-friendly mobility solution. First, you need the bike. Then you need the permissions. Then you need the place where to put it. And then you need someone to entrust you with money in it. Perhaps not in that order.
And you're right, actually, it was not easy. More importantly, when you talk about building anything in India, where you have to do all of the hard work, money does not come very easily. Typically, a mindset of VCs, if I may use that word, because there are different types of financial institution investor, but in the beginning, you need venture capital money.
Yeah.
So for them, when everything is already set, you just have to, connect some pipes and you start making money. So that is a business model they really, really adore. But unfortunately, when everything is broken, you're trying to build a category, then the journey cannot be easy. So no journey is easy and quick when you have to build something from the ground up. And that's not something which is very suitable for venture capital money, because they have a fund life. As you know, they have to return the capital back to their LPs in 8 to 10 years. And when you're saying that, hey, I will take another 10 to 15 or 20 years, that's not something that suits them.
So were the first few pitches very tough when you came in with this story?
Luckily for Yulu, I must say that I was privileged one, coming from InMobi background.
So the bet was on you because of the
actually,
pedigree of
look at
InMobi.
any investor, good investor, their bet is always on the founder, because your first pitch deck, what you're trying to say and you're trying to do, always changes. It was true for InMobi when we were M-Coach, and then business model pivoted to InMobi. Yulu was no different. Our first product was bicycle, and we were saying we'll put millions of bicycles in every part of the country. That did not work. In 6 months, we realized that no one gonna pedal the bike to office coming sweaty. So from our funding perspective, since you asked this question, we were able to raise $7 million in a seed capital 8 years back, when the seed round used to be a couple of million. So initial money was easy. But then the second series, which we say Series A, I go talk to all VCs, they're all friends, but the business model will not work. So while we were again lucky to have some interest from VCs, but then we realized that this journey, if I take this money, what next will I do? Okay, I have to go to some OEM who can make my bike. The problem was, do I know what I need? Answer was no. So rather than we trying to go find out a vendor who can make this bike for me, we needed a vision partner. And that's where my meeting with Mr. Rajiv Bajaj was very special, where met him, told him that this is a problem we're trying to solve. And he got very excited about the vision and the future and the role which Bajaj can potentially play. And we are one of the very rare companies which Bajaj actually has invested into. So KTM is one company they've invested. And I think barring KTM and Yulu, I have not heard many companies. So they are not like a financial investor.
Yeah.
But they came in, they knew what role they have to play, what role Yulu has to play. We got capital, we got a very, very good partner who can actually help us build this company. So our capital approach was very different than most of the startups in the ecosystem.
Yeah, so for those who are not very sure what the company is, and of course a lot of our viewers would have seen the Yulu bikes parked in various parts of the cities, and largely large cities. Give us the elevator pitch.
Sure.
What is Yulu and why is it important?
Sure. So if you look at India, 85% people in India do not have vehicle of their own. They don't have driving license. And we believe that mobility is such a fundamental thing. For you and I, we have to go to office. But at the same time, we also saw one more customer segment. For them, mobility was the only way they can earn money, aka delivery person or service professional. So we saw this opportunity really, really amplifying at the time of COVID, where we are all grounded. We needed our food, our vegetables, our medicines, and we needed to click a button and something can come up. So we saw an opportunity to build or fix this problem of access to mobility, where anyone can come, can go to their office without any trouble in a sustainable manner, as you rightly mentioned. And for us, answer was not the car. Answer was not, even taxis for that matter. Because when you come in the taxi, you're taking the same amount of space on the road, which is very limited in our country. So we thought of this problem solution only through public transportation integration. So we want everyone to use metro, buses, carpools, by the way. And then the problem of first mile, last mile, we thought, this is probably the best way for us to take someone to a metro, and then they can do the mid mile, the long one. And then when they get their destination, maybe they can walk or they can again take a Yulu. So that was the idea behind the whole solution.
So Yulu is a mode of transport you use,
Yes.
a two-wheeler. It runs only, the speed limit is 25 kilometers per hour. You don't have to own it, you don't have to rent it. You just pay at that point and then you take it and you dock it, right?
So we have two type of users now. The one you articulated very correctly, that this is a pay as you go. So you pick up Yulu next to your home. We have able to create that Yulu zone, what we call the parking area. Every major apartment complexes, shopping areas, offices. So you just basically are 300 to 400 meters away from that. So you go pick up the Yulu bike, scan the QR code on the bike opens, it is yours. And typically we users use it for 20-25 minutes. They drop it next to their destination, click a button, everything gone, and you are just good to go. Just like your Uber experience, right? But the other side of the business is now the gig worker, where they come, they pick Yulu once again, but they keep it with themselves for longer period of time. So typically they keep it for 3 to 4 weeks in one go, and then there's a whole battery swapping that comes with that. So these are the two modes where our business is being right now used.
And what is the portion of the gig worker 3 to 4 weeks longer tenure usage of the business right now?
So today, from a revenue perspective, it is almost 90% plus.
Oh, so that is the primary
It is the
business.
now bread and butter. It used to be zero, but COVID exposed this beautiful opportunity for us. And financially, we thought that's far more rewarding because the asset sweating, if the word we call in our business model. So for the moving people use case, they typically use it for 15 to 20 kilometers per day. So the bike changes hands 4 to 5 times per day. But for the gig worker, they typically use for 80 kilometers per day.
Right.
So almost 4 times. And if the bike is used for 4 times, then the economic goodness that comes along with that is far better.
So the rentals on it are higher. So then what happens to the original dream about decongesting traffic and giving people an option for last mile and first mile travel?
Yeah, so that has not gone for sure. That's the reason we still have almost 10% of our bikes dedicated for that business model. And we are planning to scale it again, most likely next year. Whole idea was that, we should achieve certain profitability milestones. So we have been EBITDA profitable. And then the next milestone.
Since this financial year?
Yeah, so we hit positive EBITDA a few months last financial year, but this financial year we have been EBITDA profitable from almost day one. And idea is that we will hit profitability on the EBIT front, which is also kind of taking our depreciation in our business is important.
What is the top line looking like right now?
So we have not talking about the current numbers, but last financial year we were doing close to 30 million ARR.
That's for FY24. Okay. Just in terms of the mobility solution for gig workers.
Yeah.
Is there a lot of competition coming in from Chinese-made vehicles right now? What is the kind of market share there? Because that has just been an explosion, right? And it's a very crucial part of our economy because it's also employment generating. It gives autonomy to a lot of people on how many hours they want to work, where they want to work. What is the competitive landscape looking like there?
Sure. So let me break down this question into 2 parts. One is on the vehicle itself and second one is the business model. Now let's talk about the vehicle first of all. So we are not selling vehicle, just to be very clear. We are a mobility as a service company. So imagine Uber, which is a mobility as a service company, and then you have Ford, GM, Toyota, who are the car manufacturer. If I talk about the first problem, which is what is the landscape looking like from a Chinese-made e-bikes in our country, whether a person is buying it or Yulu buying it, I'll come to that in a moment. But what is the future of a Chinese-made bike in our country? I would say it is not very promising. It's not very bright. Reason being, our country, automobile contributes to a lot of our GDP. It actually provides a lot of employment opportunity. So this sector actually is a very important sector for the country. And I will not say that our government has done anything to curb it down, but they have rather incentivizing Indian production.
No, I'm just saying this in the back of what you see on the road. You see a lot of Chinese-made bikes.
I'm coming to that, right? So forget my business model. But if you look at the two-wheeler side, look at the top 4 players. Who are the top 4 players in the two-wheeler side? Bajaj, TVS, Ather and Ola. None of them are actually doing anything Chinese. Everything is done in India. There's a dependency on China with respect to the cell which is coming because we are not making the cell at the moment and maybe a little bit of electronics here and there. But India two-wheeler market, 80% of it is dominated by these 4 players. No Chinese, right? So on the road, if you look at the bikes, it is primarily made in India. They are Indian bikes. So as far as Chinese bikes are concerned, they're coming on the lowest end, and
No, but I'm not conflating. You're conflating entire two-wheeler space.
Yes.
I'm talking about the e-bike segmentation, the segment in which your product is.
Yeah. So yes. So I'm coming to that. Now talk about the My segment, which is a e-bike which goes low speed.
Yes.
None of these four players actually have a product for someone like us, except for Bajaj, who has made exclusively for Yulu.
Correct.
So in a sense, you're right. There are a lot of Chinese-made electric bikes which someone can take and do the delivery or go for the small commute. But if you now come to my business model, where the competition is not about the scooter, it's not about the bike,
It's about the
it's
renting
about
it, the
it's
service.
about the business model and the infrastructure. So when we basically give our bikes to a gig worker, we are not giving or renting a bike. We are giving the entire mobility as a service. It includes the bike, it includes the battery swapping stations, it includes repair maintenance and insurance. So when we give this service, it's a absolutely hassle-free, trouble-free and the highest uptime product. So if it is your own product, then you will have a lot of challenges in downtime. Where will you charge? How will you maintain it? We take care of that. Now, layer this with a Chinese-made bike. If it is a low-quality Chinese-made bike, the bike will actually have a lot of breakdowns. And our business model is all about durability, predictability, and so on. So, if someone wants to start a Yulu with a cheap bikes, let me not frame China here, but let's say very cheap type of bikes,
Yeah.
then their business model will not work.
What is, let me
Because
come
they
back to
will
my
have
core
lot
question.
of-
What is the market share you have
Sure.
right now?
So we have, if I look at only the rental space, in our kind of business model, we have actually 70% plus market share in the country. So we are the largest one. We have 45,000 bikes. There is no one who will have even more than 1,000 bikes in the country. So we have leaps and bounds ahead of everyone else.
You talked about 45,000 vehicles on the road. What is the roadmap? To what does this number grow? Now that you've got your target one out of the way, you no longer want to retire at 40. You want to
50?
You want? I don't know. Have you hit that
I don't
milestone
know.
or not?
I don't say 50 is a retirement age, but yes, I think within next 2 to 3 years, when I become 50, I will try to get Yulu to some good milestone for sure.
Okay, so now that's the good milestone. So let me put it that way. What is the milestone for Yulu in the next 2 to 3 years, coinciding with your half
So
century?
clearly, next financial year, we will be PBT positive. And we believe by end of next year, we will be kind of an IPO ready state where companies thriving, market leadership, good volume, profitability, and almost a hockey stick jump. What is constraining us today is the access to capital, which is non-dilutive. So we can raise a lot of capital, but we don't want to keep on raising equity capital. So we need to get to that state of the business where we are just generating cash. And that's where we say, okay, now go. So depending on how large is quick commerce and quick service, industry, which we are by the way very bullish about,
Yes.
we see a hockey stick jump for us.
So
And
will the IPO come first or this PBT?
PBT has to come first for our business model, which is not too far. So I think tough to say because there are so many things related to IPO. You have to time it. There's a lot of alignment. And but from a board perspective, where we have Magna and Bajaj, both companies are very supportive of Yulu going public. They themselves are like long-lasting organization. Both of them are public, so they are supportive of that. We think that that's the right thing for us as well. If we want to see this company beyond us, living beyond all of us, all the founders, then we should make that as an institution.
What is that one milestone or dream that you have for Yulu?
Yeah. So on a professional front, clearly we think what we started when we started Yulu, we saw cities breathing, we are breathing clean air. There's no sound pollution, like no one is just hanging. And almost like everyone is moving in a very frictionless manner. And while that picture of that is very, always you dream of that, I think we have a long way to go. But now we started seeing the trace. when we see, particularly when you move around to certain areas of Mumbai or Bangalore, every minute you see 3-4 Yulus. It's very heartening. Although the use case is that someone is trying to get your food or your grocery, but it's just matter of time where a lot of such commercially running vehicle will have something related to Yulu. I'll give you one statistics. Almost 10% of vehicles in India, they are used in commercial setting. This 10% are attributed to 70% of the miles which are kind of running. So if we get ourselves into that 10% vehicles, it can be two-wheeler, three-wheeler, whatever wheeler, then we can actually make a 2/3 of the impact. And that's where in some shape or form,
two-wheelers?
Certainly, why not? So we do see a word of Yulu. So for example, with our sister entity called Yuma, they've started, by the way, supporting battery as a service for e-rickshaws. For as long as there's a value addition from our side, we can get something out of that. We would like to participate.
Okay.
So we see Yulu everywhere.
So here's to a future of cleaner mobility, which is environment friendly. Thank you so much, Amit. It's been an
Thank you,
absolute
Tamani.
pleasure.
Thank you very much.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात का खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
Namaste, hello, and welcome to the World Report. I'm Priyanka Deo. Our top story of the day, India has welcomed the US's move to designate the Resistance Front, or TRF, the group behind the Pahalgam terror attack, as a terrorist organization and described the effort as a, I quote, strong affirmation of India-US counterterrorism operation. This as the United States has officially designated the Resistance Front, or TRF, a known offshoot of Pakistan-based group Lashkar-e-Taiba, as a foreign terrorist organization following the Pahalgam terror attack, which killed 26 people. NDTV's Arjun Mahendran breaks down what the TRF is. Arjun?
At the top of the world's terror lists, they also carry millions of dollars of bounties on their head. However, in Pakistan, they're not hiding. In fact, they're speaking up, they're leading, and they're even recruiting and, of course, walking free. We start with Hafiz Saeed right here on your screens, viewer. He's the founder of Lashkar-e-Toiba and the man behind the dastardly 26/11 Mumbai attacks. He's a UN and a US designated terrorist with a 10 million bounty. However, he still delivers public sermons in Lahore. He's guarded and not been arrested. Then the next up we have for you Masood Azhar. He is the mastermind of the Pulwama and the Pathankot attacks. He was declared a global terrorist by the UN back in 2019. And what has happened? Well, cut to today, he is officially untraceable. But somehow he's still preaching from terror hotspot Bahawalpur. It's the same place where Daniel Pearl, the US journalist, was abducted and later killed in 2001. Next we have Zakir-ur-Rahman Lakhvi. He is the Lashkar-e-Toiba, in fact he's Lashkar's military chief and another 26/11 plotter. In fact, he was briefly also jailed, but now he is back rebuilding Lashkar's network and also recruiting, and that too with sheer impunity. Next up we have Sayyid Salahuddin for you. Who is this guy? He's the head of the Hizbul Mujahideen, has long been on America's terror list as well. And yet he leads anti-India rallies in Pakistan-occupied Kashmir, waving Pakistani flags and calling for jihad against India. Next up, of course, how could we forget Dawood Ibrahim, the fugitive don behind the 1993 Mumbai train bombings, one of the most wanted men not only in India but on the planet. He in fact also has a 25 million bounty on his head. But intelligence agencies have tracked him to Karachi, where he remains untouched, of course under the security and of the Pakistani administration, the ISI and the army. Also in Pakistan, we have Iqbal Bhatkal. He's the key Indian Mujahideen bomber in the 2007-8 attacks. He also lives under ISI protection, far from justice. Now we move on to his brother, Riaz Bhatkal, on your screens right there. He's the co-founder and the financier, in fact, of the Indian Mujahideen. He's also believed to be in Karachi, remote running sleeper cells inside India. Now viewers, these are some of the world's most wanted terrorists. However, in Pakistan, they are the most free citizens. Back to you.
Most wanted indeed. Thanks for that, Arjun. An Indian-Canadian gangster has been arrested in the US for running a transnational drug operation along with a notorious Irish gang. That's according to local media. The gangster, identified as Upinder Singh Sian, smuggled methamphetamine and fentanyl precursors at an international level. Global News is reporting. Check it out. 2 international students from India have been sentenced to 3 years in prison and will possibly be deported after they serve the term after they killed an indigenous man last year in a hit-and-run case in Surrey, Canada. The victim was of Cree heritage and was a 43-year-old father. Maha Siddiqui brings you more. Maha?
They were on a student visa since 2022, and this incident took place last year when, as you pointed out, they hit the pedestrian. And more than that, it was a hit-and-run case which has landed them with a 3-year prison term and deportation. This is because, as the court observed, that it would have been an accident. This is what the prosecution said, and a tragic one. But the fact that they tried to flee, the fact that the victim, was dragged for 1.3 kilometers, and one doesn't know whether he died immediately because of the hit or whether it was him being dragged by the car for over a kilometer is what caused the death. And this is what has landed them with this 3-year prison term because of their behavior after they hit the person. The decision that they took at that moment to flee rather than step out, help, and get the victim's support and help at that time has led to the death of the person, an indigenous person from the Cree community identified as GJ on the request of his family. They didn't want his details revealed in the media. And this is what has landed them, that is Gagan Preet Singh and Jagdeep Singh, this 3-year prison term and deportation after that. Both of them are international students, both hail from India.
Counsels for Save Nimisha organization requested the Supreme Court to permit members of the petitioner org to travel to Yemen to negotiate with victims' family. Now, the family of Talal Abdul Mahdi, this is the deceased Yemeni national, remains firm in their demand for retribution, even as attempts to convince them to pardon Kerala nurse Nimisha Priyar are underway. The Yemeni national's brother, Abdel Fattah Mahdi, has opposed to any reconciliation whatsoever or pardon to the Kerala nurse in the case. The Air India crash investigator has called out the international media for, and I quote, selective and unverified reporting on the June 12th Air India crash and said that such actions are irresponsible. This came after the American publication Wall Street Journal claimed that a cockpit recording of dialogue between the two pilots of the Air India flight that crashed last month indicates the captain cut the flow of fuel to the plane's engines. Now, slamming the international media, the AAIB said that this was not the time to create public anxiety or angst towards the safety of Indian aviation industry, particularly on the basis of unfounded facts. AAIB further flagged the reporting as irresponsible, especially given that the investigation still remains ongoing. The United States has deported 1,563 Indian nationals from the country since January 20th of this year. That's according to the Ministry of External Affairs, who said that on Thursday, adding that most of the deportees have been sent on commercial flights. In April, the government told the parliament that a total of 682 Indians have been deported from the U.S. since January. The government said that a vast majority of those deported were those who attempted to enter the U.S. illegally. Here's what the Indian government has to say.
Since 20th of January this year till yesterday, we have some 1,563 Indian nationals have been deported from the United States so far. Most of these Indian nationals have come via commercial flights. So that is the update, and we, as and when we receive list of people who are to be deported, we confirm their nationality, and once only where their nationality is confirmed, as you know, then we do the documentation part, and thereafter they are sent back to India.
In a sharply worded response to NATO Secretary General Mark Rutte's warning that countries like India and China could be hit very hard by secondary sanctions if they continued to do business with Russia, the Ministry of External Affairs has cautioned against double standards here. Do note that India and China are the top importers of Russian crude. Listen to India's response.
Regarding NATO chief's articulation, we have seen reports on the subject and are closely following the developments. Let me reiterate, and I've said this in the past as well, securing energy needs of our people is understandably an overriding priority for us. In this endeavor, we are guided by what is there on offer in the markets, as also by the prevailing global circumstances. We would particularly caution against any double standards on the matter.
Brazil's President Lula da Silva on Thursday night condemned U.S. President threats to raise import taxes on Brazil, mainly because he didn't like the way it was treating former Brazilian President Jair Bolsonaro. Speaking on a recorded national statement, Lula criticized the U.S. for what he called, and I quote, unacceptable blackmail following failed trade talks and accusing Trump's government of making false claims about Brazil trade practices and threatening national institutions. The president also condemned Brazilian politicians who support the U.S. stance, labeling them traitors to the nation, and defended Brazil's commitment to peace, multilateralism, and the interest of its people.
O Brasil sempre esteve aberto ao diálogo. Fizemos mais de 10 reuniões com o governo dos Estados Unidos e encaminhamos em 16 de maio uma proposta de negociação. Esperávamos uma resposta. E o que veio foi uma chantagem inaceitável em forma de ameaças às instituições brasileiras e com informações falsas sobre o comércio entre o Brasil e os Estados Unidos.
U.S. President Donald Trump and Ukrainian President Volodymyr Zelensky are considering a deal that involves Washington buying battlefield-tested Ukrainian drones in exchange for Kyiv purchasing weapons from the U.S. This is according to Zelensky, who said this in an interview with the New York Post. Zelensky said his latest talks with Trump focused on a deal that would help each country bolster its aerial technology. Four people have died and more than 1,300 evacuated as torrential rain pounds South Korea, with authorities warning that the unseasonal deluge will continue. More than 400 millimeters of rain poured down just in half a day in Seosin, the worst affected city along the country's west coast. The weather agency described this as a once-in-a-century event. Now, authorities have urged people to stay away from riverbanks, steep slopes, and underground spaces, warning that the risk of landslides and flash floods remains very high. Protests against President Donald Trump's immigration crackdowns and cuts to social safety nets swept across the United States on Thursday, with over 1,600 events planned in public spaces, including courthouses and city streets. The National Day of Action, titled Good Trouble Lives On, was organized to honor the legacy of the late Congressman and civil rights icon John Lewis. Lewis, who died in 2020, was the youngest member of the Big Six civil rights leaders and famously led the 1965 Bloody Sunday March in Alabama. Reflecting on his lifetime of activism, Lewis once urged Americans to get in good trouble, necessary trouble, and redeem the soul of America. The protests, led by a coalition of advocacy groups, including Public Citizen, focused on Trump's controversial policies, especially his expanded deportation tactics and cuts to Medicaid and other aid programs. Protesters called for nonviolent demonstrations and a renewed commitment, according to them, to democratic values.
First and foremost, it feels good to be together in community and shout about what's happening and to speak truth to power. We will not be silenced. We have to stand up and speak out about what's happening in this country to our immigrant communities and to the people who were brought here as slaves. Their ancestors were brought here as slaves, who are being mistreated in our prisons that are already existing, let alone the new prisons that are being built, the for-profit prisons. We need to tax the rich.
Minutes after announcing that he intends to sue the Wall Street Journal and Rupert Murdoch for reporting that the unreleased Justice Department files on Jeffrey Epstein include a body letter to the late sex offender from Donald Trump, the president said that he has asked the Attorney General Pam Bondi to release a different set of documents from the investigation onto Epstein. Despite the fact that the grand jury testimony is a different set of documents and could include information on Epstein's victims, Trump suggested that doing so would end the controversy over his administration going back on its word to release all of these files. The White House has announced that President Donald Trump has been diagnosed with a chronic but benign vein condition amid ongoing speculations over his bruised hand. The White House said the president sought a medical examination for swollen legs, which came up with the new finding. Let's move to a break. Stay tuned for more.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense force.
Welcome back to the World Report. Let's move on straight to our next story. India meets Italy in a powerful new alliance set to redefine premium electric mobility. The Kinetic Green and luxury lifestyle brand Tonino Lamborghini have joined forces to launch a new line of high-end electric golf carts, merging cutting-edge Indian EV engineering with iconic Italian design. My colleague Osama spoke with founder and CEO of Kinetic Green, Dr. Firodia Motwani, and Vice President of Tonino Lamborghini, Ferruccio Lamborghini. Listen in.
Motion. This is what this partnership between Kinetic Green and Tonino Lamborghini is bringing to India, and especially in terms of electric vehicles and more importantly, in golf carts. We have with us Sulajja Firodia Motwani, the CEO and founder of Kinetic Green. I also have Ferruccio Lamborghini, the man who is taking forward this message to the Gen Next. A very warm welcome to NDTV. First of all, I want to understand this. Why golf carts, and what is this partnership all about?
As you know, Kinetic Green has been one of the leading electric vehicle makers in India. And having made a mark in electric two-wheelers and three-wheelers, we are now setting our sights on the global markets. We feel that this opportunity, together with the Lamborghini family of golf and lifestyle carts, is something which will really redefine not just Kinetic Green's future, but also the future of electric mobility.
As Sulajja mentioned, that there was a gap, there was a lack of the correct product from our perspective, so the correct golf cart up to date, because now when it comes to electric mobility, we know it's a very vibrant market and there are a lot of changes and a lot of good ideas for the future. So we want to be part of this change.
Extreme athlete Felix Baumgartner, the first skydiver to fall faster than the speed of sound. during a 24-mile leap through the stratosphere more than a decade ago, died in a crash Thursday along the eastern coast of Italy. He was 56 years old. Now, Italian firefighters who responded said a paraglider crashed into the side of a swimming pool in the city of Porto Sant'Elpidio. Canada forward Olivia Smith has become the most expensive signing in women's football history by completing a £1 million move to Arsenal from Liverpool. The 20-year-old, who made her international debut at just 15 years old, has signed a 4-year deal with the Champions League holders. Smith's move breaks the record set by Chelsea in January when they signed USA defender Naomi Girma for £900,000 from San Diego Wave. Astronomer, a startup that sells data operations software, received a ton of attention on Thursday, but not for its products or technology. At a Coldplay concert in Massachusetts, a crowd cam zoomed in on a couple with the man's arms around the woman's waist. The duo were identified on social media as Astronomer CEO Andy Byron and HR Chief Kristen Cabot. A TikTok video from the concert has garnered more than 34 million views since it was uploaded late on Wednesday night. Coldplay frontman Chris Martin noticed the couple on the big screen, and as the man ducked out of the camera's view and the woman hid her face, Martin quipped, and I quote, "Either they're having an affair or they're just very shy." Byron, who is married to Megan Kerrigan Byron and has 2 children, has since disappeared from public view, and Megan reportedly removed her last name or his last name from her social media before making her accounts private. Cabot, recently divorced, has also gone offline. Both executives have been removed from Astronomer's leadership page, and the firm has made no official comments since this video has and continues to explode. The Late Show with Stephen Colbert will end in May 2026. This is according to the CBS television network, who announced this in a surprise statement on Thursday. Paramount and CBS executives said in a statement that the cancellation is, and I quote, purely a financial decision against a challenging backdrop in late night. It is not related in any way to the show's performance, the content, or other matters happening at Paramount. Now, this announcement comes just 2 weeks after Paramount settled a lawsuit with President Donald Trump, stemming from a CBS interview with his 2024 election rival Kamala Harris. The move brings a close to more than the 3-decade-old program, leaving the network without a late-night comedy talk show for the first time since 1993.
Before we start the show, I want to let you know something that I found out just last night. Next year will be our last season. The network will be ending The Late Show in May. And yeah, I share your feelings. It's not just the end of our show, but it's the end of The Late Show on CBS. I'm not being replaced. This is all just going away.
Her role as Rinki in popular OTT show Panchayat has won hearts, but the road to fame was not easy. From skipping meals to sharing a flat with 6, Sanvikaa gets real about her Mumbai hustle and surviving on vada pav. Listen in.
You came here and you started working on Panchayat. Of course, nobody thought Panchayat will become so big. Do you remember, or your parents have ever shared something that somebody came and told them, oh, aapki beti ko dekha? And what was that moment like when they realized that, oh my God, my daughter is known?
So I think it happened in season 2 when my parents didn't see season 2 like when it released. They saw like after a few months. So everyone, like all the relatives, they were calling and telling कि अरे आपकी बेटी इसमें है, बहुत अच्छा काम किया है, बहुत अच्छा काम किया है. And पापा को a lot of his friends were telling him, calling him and telling him that your daughter has done a very wonderful job. So at that point they had this thing कि oh good beta, you are doing good. But right now the kind of reaction they are having, It is unbelievable. Matlab, they are so happy, so happy.
You know, let's go back to the time when you came here, and everybody has their journey. What was your journey like?
So the major problem once you come to Mumbai is that you have to figure out your rent. So when I came initially, so for me, I just thought that I'll stay somewhere in Kandivali, Borivali, because the rents are like very low over there. But it was like I was like very fortunate enough that I found a place in Andheri, and it was like just 6,000 because it was shared by like 6 people. It was like 1 BHK shared by 6 people. So for me, that was like kind of affordable thing, and that is the major thing. You know, if you come from like a very lavish background, you don't have to bother about like your rent and your food and like your basic things, because as an actor you also have to groom yourself. You also need to have like good clothes. You have to be like well groomed.
The expenses are huge because especially as an actor, you have to maintain a certain lifestyle. You have to look a certain way. And when you're going for an interview, you have seen the expenses. Like if you can tell our audience, like a makeup artist or a stylist, and it just keeps growing. So how did you manage that? Or how still manage it?
So initially I used to take up like every kind of roles that used to come to me, like good roles only, so that my like income is like on roll.
The struggle is real and the hustle is real. Thank you for watching the World Report on NDTV World. Until next time, this is Priyanka Deo signing off. Namaste.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम. डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ. कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है. जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है. ऊपर से ये अलग फाइट है. कोई पूरा लेफ्ट तो कोई पूरा राइट है. बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए. इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी. मैं शुभांकर मिश्रा. मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or
Market closes lower for the second consecutive day. The Nifty closes below 25,000 and the Sensex loses 500 points. Nifty Defence is the top sectoral loser. As India and the US enter the 5th round of trade talks, sources say the ongoing negotiations are focused on securing preferential access for India, raising the question of whether India could land a better trade deal than its Asian peers.
Exporters flagged delay in US orders amid tariff uncertainty. Sources cite slowdown across sectors such as plastics, pharma and engineering goods. We also understand that US clients are now cautious over new orders as they await clarity on tariffs in China, Indonesia and Vietnam. Indian smartphone manufacturers write to Telecom Minister Ashwini Vaishnav, highlighting how China's informal trade restrictions are disrupting their supply chains. Starlink is set to appoint its India's CEO as it builds a core team in Delhi ahead of a planned launch by the end of 2025. India welcomes USA's move to designate the Resistance Front as a terrorist organization. External Affairs Minister S. Jaishankar calls it a strong affirmation of India-US counter-terrorism operation. The Prime Minister's office convenes a crucial meeting to address India's growing rare earth magnet supply crisis as manufacturers across the auto and electronic sectors warn of severe production risks due to China's tightening export restriction. An Israel strike kills over 90 in Gaza in one day, including aid seekers. Israel says it deeply regrets the strike on Gaza's only Catholic church. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's take a look at how the markets fared today. The benchmarks declined for the second straight session with the Nifty closing below 25,000 as stocks weighed heavily on the market. Most sectoral indices ended in the red with Nifty Defense emerging as the biggest loser. Let's go over to Harsh Saita for a wrap-up of today's market action.
Well, the Nifty 50 was down 0.6% at close today, and frankly, the overall market mood was also not the best. The breadth on the Nifty was just about 2 advances or maybe less than 2 advances for 3 declines that we saw. So the breadth wasn't favorable. Very similar kind of a breadth even on the exchange. So if you pull up the advance decline, broadly all through the day, that's the kind of breadth that we saw. Start of trade was okay, but we fell from the highs and we sustained at below the 25k levels. So now we've started to see maybe 24,900 start to emerge as possible levels we're looking at, and if that gets breached, you could well see levels of 24,500 or 600 as well. So those are the levels we're talking about probably next week. But what was the big drag? It was large private sector banks. The index was down 1.5%. Sectoral, largely led by Axis, but then you also saw HDFC, IndusInd, and Kotak, all three contributing to the losses on the large private sector banking index. You also saw ICICI though, but move in the other direction. And mind you, HDFC, ICICI both to declare numbers tomorrow, which is on Saturday. So you likely see a reaction on those counters in any case on Monday and on the index as well. Now let me talk about the other big boy, Reliance, also in focus just prior to results. Stock not really doing much, frankly, in trade today. So, but that was one counter in focus. Let me talk about sectors and stick with that. Metals was the one which was in the green today, and therefore you saw the likes of a Tata Steel or JSW Steel, both of them perked up in trade. JSW Steel's numbers also came out right at close, and the stock perked up 1% at close. What we also saw was IT as an index outperformed today on the back of Wipro and its numbers. In terms of the larger underperformers, well, you saw the Nifty India Defense Index down another near 2.5%. You saw the private banking index, I did speak about that. The Nifty Bank was also down 1%. The Nifty PSU Bank outperformed both of those indices, the private bank as well as the Nifty Banking Index. So the PSU banks were relatively better off. But outside of that, consumer durable stocks were also under pressure. That index was also down. But broadly, that was the theme. I did mention that both the mid cap and small cap index largely in line with the Nifty 50. So that's how it played out. Some names, of course, let's pull those out within the BSE 500, top gainers, top losers. Clean Sciences being one of them. But outside of that, plenty of movers on the index. Not too much on the positive side, more on the negative than the positive.
Thanks, Harsh, for that. And earlier today, we also caught up with Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors, to get his perspective on the current market landscape. In our conversation, we delved into the mega trends shaping markets right now and discussed how investors can identify pockets of value amid all of the market noise. Here's what he had to say.
Thanks for tuning in to Talking Point Unfiltered. And my guest today is Ravi Dharamshi of ValueQuest. And the idea of doing the conversation with Ravi, as I told him as well, was to try and understand that how do large investors think of mega trends and how do they chase these mega trends? How do they diversify their portfolio between 4 or 5 concurrent mega trends that they might be seeing at any given point of time? Ravi, such a pleasure having you here.
Thanks, Neeraj. It's my pleasure to be here.
So, you've always spoken about these mega trends all through the times that we've spoken. Back from 2015-16 when I first started talking to you, when I think we were in the midst of the chemical mega trend, if you will, and the pharma mega trend, you kind of try to identify some of these and then maybe invest early in them and then ride the whole wave till you can. Would that be a good summary of one basic investing style?
So let me try and explain a bit with a little bit more nuance and a little bit more in detail. See, in any particular industry, there are phases, right? You have a tough phase, struggle phase, then you hit that inflection point, you have the great growth phase, and then you reach a kind of a plateau, then again you have a growth phase. Idea for us is to identify which that growth phase is. Everybody can name a lot of mega trends today, but even within a mega trend, you make money only when you are invested in that particular growth phase. And for that, you need to be very clear in your mind what stage that particular mega trend is. And there are markers that we keep track of, whether it is the technology curve, the cost curve, behavioral shifts, regulatory shifts, capital flow, talent flow. All these things tell us which way the wind is blowing, how strong that wind is. Is the mass adoption reached that kind of an inflection phase?
And looking beyond short-term volatility, India's strong growth story continues to capture the attention of global investors, many of whom are closely watching for the signs of a rebound. Now, according to Taimur Beg, chief economist at DBS Bank, 2025 could mark a pivotal turning point for the Indian economy, even as recent slowdowns persist. Let's listen in.
We do look at the Indian markets on a cross-asset basis, and the equity market dynamic has been super interesting. At a time in 2023 when global investors were selling equities around the world, including India, Indian domestic investors themselves propped up the Indian market in a massive manner. And at that time, I started questioning whether the FII flows are even relevant for India, given the amount of domestic liquidity and domestic excitement we have with respect to the Indian market. On the 2024-25 dynamic, I began to see tremendous amount of dynamism on the private flow side. You talk to lawyers in Bombay and what they're seeing in terms of deal flows, M&As and FDI, just, extraordinary. But 2025 now is a bit of a sobering moment. Private or public side wouldn't see that much excitement, whether it's domestic sentiment or deal flows coming from the outside. So the lawyers that I talk to on the corporate side are not as busy as they used to be. So overall, I think there is a bit of a stock taking momentum, loss of momentum type dynamic in place as far as India's financial markets are concerned. I would not attribute all of that to impatience about GDP growth. I think some of the deals that I'm talking about and some of the IPOs that I've been seeing, they basically talk about India over the next 10 years. It's not about what happened in last quarter or where inflation is going or what RBI would do. It is about the medium-term potential. And that, in my view, remains very attractive for global investors, independent of the uncertainties we have with the trade war right now.
And turning to major earnings, JSW Steel delivered a standout performance in the first quarter with net profit soaring 158% year-on-year to 2,184 crores, sharply beating expectations. Sequentially, we also saw profits surging 45% over the previous quarter, supported by improved cost efficiency and steady domestic steel sales. My colleague Vansh now joining us with a quick review of the numbers. Vansh, take us through how these numbers look and more importantly, what it signals.
Yeah, so let's quickly understand the entire picture. The numbers have beaten the estimates and the EBITDA has improved on the account of the lower coking coal and the better steel prices. There has been an inventory build-up due to the fall in the export volumes of the company, and in regards to the Bhushan Steel case, company has already filed a review petition and they believe to have strong grounds to pursue the review petition. In terms of financials, the revenue is fallen by 3% to 43,400 odd crores versus the estimates of 42,800 odd crores. EBITDA is risen by 18% to 7,500 odd crores versus the estimates of 7,200 odd crores. Margins are at 17.4% versus estimates of 16.9%, and net profit has risen by 45% at 2,100 odd crores versus the estimates of 2,000 odd crores. If we talk about the EBITDA per ton, now the EBITDA per ton for the company stands at 11,300 odd rupees versus the estimates of 10,400 rupees per ton. If you talk about the production volumes of the company, the Indian operations saw a 5% sequential decline and the operations for US remained flat, and the capacity utilization for the Indian operations stood at 87%. Now if we talk about the outlook that the company has given, the company expects the volumes to improve in the Q2 FY26 and they expect healthy performance from the international operations. They also expect muted steel prices in July and also expect the coking coal prices to further lowered by $5 per ton. And the offset will be led by the cheaper imports and the seasonal factors that is coming in for the company. So this is what the overall picture is looking like for the JSW Steel.
Right, Vansh, thanks so much for those updates, and we'll continue tracking all of these key earnings that are coming in. Meanwhile, let's see what to expect in the next few days. Several major banks are set to report their quarterly earnings in the coming days, drawing very keen market attention. My colleague Jasmeet now joining us with a quick preview of what to watch for in these crucial earnings releases. Jasmeet, over to you.
Well, right, thank you for that, Sanjana. Yes, a bunch of earnings coming up tomorrow as well as on Monday. So here are key things to watch out for when it comes to HDFC Bank earnings. Firstly, the net interest income. It's expected to rise 7% on YOY basis but remain flat on QOQ. When you look at the operating profits for the bank, it's expected to rise 12% YOY basis, and while on QOQ it's expected to be up 1%, and the gross NPA is expected to remain flat at 1.33% on both QOQ and YOY basis. When you look at the key monitorable, what to watch out for in HDFC Bank preview, first thing would be the cost ratio, which is expected to aid the operating profit. Secondly, the asset quality of how it has been stable over this quarter. Thirdly would be the guidance for credit growth. That's something very important to watch out for. And lastly, the provision when it comes to the agriculture segment. While the next one would be the ICICI Bank. So here's the preview and what to watch out for. What is expected out of the Q1 earnings? Firstly, the net interest income is expected to rise up by 8% on YOY basis, while be down 1% on QOQ basis. When you look at the operating profit for this bank, it's expected to rise up by 8% on YOY basis and go down by 2% on QOQ. When you look at the gross NPA, and that's expected to inch up by 12 basis point on QOQ basis and expected to be around 1.79%. Now, what to watch out for when it comes to the ICICI Bank? First thing would be the margin, how they have been performed and the decline, and any guidance going forward for Q2. Second thing would be there might be a slight inch up expecting in an NPA ratio. That's something to watch out for. Thirdly, the provision expected to rise off on a low base. That's thirdly. And lastly, what to watch out would be the loan growth to be just double digit. That's some number to keep an eye for. It'll be interesting to watch out how this particular earning turns out tomorrow in trade.
Right, Jasmeet, thanks so much for that. All eyes are, in fact, on the weekend as we can expect all of these key earnings. Thanks so much for that, Vansh and Jasmeet. Now, in a move to simplify mutual fund investments, SEBI has proposed categorizing all schemes into 5 clear groups: equity debt, hybrid solution oriented, and other schemes. Now, what is this aim to bring for investors? My colleague Charu now joins me on the phone line for further details. Charu, take us through all of these details and simplify and break it down for us.
Hi Sanjana. So mutual funds had about 36 categories earlier. Actually, even now we are following the 36 category format, and this has led to a lot of technical confusion of sorts for the investors and even for the asset management companies. It is something that leads to a lot of confusion. So that is why the regulator was of the view, ever since the new chairperson came on board, that some rationalization has to come into place so that we know what kind of schemes we are investing into. The number of classification terms need to be reduced, and that is why only 5 classification categories are there. 5th category being other, which means any new or other unique sort of a scheme will be under that. Now SEBI has allowed for sub classification. That means that classifications within a category is allowed. But there are some strict conditions attached so that thematic proliferation or any sort of accumulation of similar kind of schemes does not take place. Another important thing here is that, true to label has been brought in terms of the name of these schemes. So if it is a large cap fund, the name also has to suggest it in a way that the investor also understands it. So this is more like a rationalization of sorts, but also something which is going to help the investors in the long run. Apart from this, several changes have been made to lock-in periods and to the conversion of residual amount in a scheme into equity. And these are other technical factors that SEBI has suggested for a change, and the public is allowed to give their consultations and their views about these changes up until August 8th.
Right, Charu, thanks so much for those updates. This is as SEBI has proposed the easing of mutual fund rationalization. We'll continue tracking this and bring you the latest developments. Now let's move on to some of the news that's coming in with regards to the ongoing India-US trade talks. Official sources have told us that this deal will be all about preferential access. Now, this is the fifth round of negotiations between India and the US, and sources are suggesting that the deal is likely to be announced next week. My colleague Rishabh sent in this report earlier with what he's picked up.
What we're picking up from government sources is the fact that this trade deal, which has been imminent for a very, very long period of time, what we're hearing on that about now is that the main theme is going to be preferential access. That is something that Donald Trump has also pointed towards in terms of his deals with Vietnam, his deals with Indonesia. But this is something that we'll also see now with India. That's what we're hearing from the official government side. The Indian negotiating team, led by Special Secretary of the Commerce Department, Rajesh Agarwal, continues to be in the US. This will now be the fifth day of negotiations for them. And there is some sort of an outcome that is expected ahead of the August 1st deadline, roughly about 12 days left for that, and that is something that we're keeping our eyes peeled on so far as well. An update on the UK FTA signing as well. Remember, this FTA was finalized about a month or two back, and now the final formal signing of this deal will take place, post which the operationalization of this deal will take about an year or so. So that's what we're hearing, is that the Prime Minister, India's Prime Minister Narendra Modi, is likely to visit the UK for this signing sometime next week, perhaps July end, is what NDTV Profit also reported. But what we know so far is that there's no finalized date, but July end, India's Prime Minister might go for a formal co-signing of the UK FTA with UK Prime Minister Keir Starmer as well.
Meanwhile, tariff uncertainty is weighing on India's exports as US buyers pause new orders ahead of the August 1st tariff deadline. Key sectors including plastics, pharma, engineering goods, electronics, gems, all of these are seeing a slowdown, with exporters now bracing for a sharp dip in shipments over the next few months. To tell us what exactly our sources are telling us, my colleague Rishabh now joining in with all details.
What we've picked up on this US tariff uncertainty is the fact that it is now impacting the export plans and the confidence, and rather the order books of Indian exporters. What we've picked up from several exporters is the fact that they have flagged delays in US orders amid tariff uncertainties. What we're seeing is that there is a slowdown in orders across sectors, and that is pharmaceuticals, plastics, as well as engineering goods. What is causing this is, of course, the unpredictability in tariff rates across Southeast Asia. So you're seeing a lot of India's competitors in terms of manufacturing economies, Cambodia, Thailand, Vietnam, Indonesia, a lot of them having a bunch of tariff back and forths with the United States. We saw Vietnam go from a higher rate to a lower rate. Same for Indonesia, expecting something similar for Cambodia and Bangladesh as well as Thailand. So that is something that is impacting the long-term plans of these exporters. What we're also picking up is the fact that the US clients that these exporters have, they are now very cautious over these new orders, and especially over long-term orders, given that there was some sort of front-loading in these couple of months ahead of the August 1st tariff deadlines before additional tariffs come into play. you did see a lot of front loading, but it is the longer term orders that are seeing some sort of an impact. They are awaiting clarity vis-a-vis the tariff differentials that India has with China, Indonesia, Vietnam. And what we're also seeing is that engineering goods exporters also foresee some sort of a dip coming in because of this front loading, and then they see some sort of a slump coming in starting from August, starting from next month. So what we're also seeing is that plastic exporters saw some sort of a dip between June and July orders as well. Now, all of this comes with the context of Indian negotiators in Washington for this interim trade deal or a mini trade deal that is being negotiated. That is ahead of this August 1st deadline. We do expect some sort of a statement, some sort of a deal to come out of these negotiations that are going on since March now. And we are in the 5th round, and we have our eyes peeled on any sort of outcome coming in from Washington as well as New Delhi.
Thanks, Rishabh, for that. We'll continue tracking that story. Extremely crucial updates coming in there. And now, big updates coming in from the satellite broadband space as Elon Musk's Starlink is inching closer to its India debut. Sources exclusively tell NDTV Profit that Starlink is set to appoint an India CEO ahead of its much-anticipated commercial launch by the end of 2025. My colleague Aishwarya joins in with all of the details.
End of 2025 is what we've been hearing from our sources, that Starlink will make its India debut. Ahead of that, what they are aiming at is what our sources are telling us is that they will be setting up a core team and an India CEO hunt is ongoing as we speak before the commercial launch in 2025. So far, if you've seen, the one name in reports and in news is their global licensing head, which is Padmil, who has been in talks with the government and also going through all the paperwork to set up its India business, starting from their unified license and their in-space authorization as well, that he has been negotiating with key stakeholders, the DOT and TRAI as well. In fact, about 10 months back, the one hire they made was for their company secretary, based out of New Delhi. In fact, the copy of the LOI that NDTV Profit had reviewed earlier showed that their initial office will be set up in New Delhi for, of course, public policy and talks with the government, the proximity to the ministry and the officials as well. So in most likelihood, they will be headquartered out of Delhi. And post all of this regulatory hurdle, which they have already cleared, the next step, of course, is applying for a test spectrum. A request will very, very soon go to the DOT for a test spectrum approval and setting up of their Earth stations as well going forward. They've identified locations across India. So that's the update so far. We'll hopefully bring you the name of the first Starlink India CEO very, very soon here on NDTV Profit.
Right, Aishwarya, we'll be keenly awaiting those details. Moving on, Kinetic Green has announced a joint venture with Italy's Tonino Lamborghini to design, manufacture and export premium electric golf carts. With a 70% stake in the joint venture, Kinetic Green aims to disrupt the global e-mobility segment. My colleague Rishabh spoke to the founder and CEO, Sulajja Firodia Motwani, about Kinetic Green's 5-year revenue target and also about the rare earth magnet shortage and how that could affect supply. Let's listen into a snippet of that conversation.
You've signed a joint venture with Tonino Lamborghini. Talk to us about the sort of top-line growth that you're seeing. You've stated out some very ambitious targets over the next 5 and 10 years. Talk to us about those targets.
So we're very excited about this joint venture, which I think brings the complementing strengths of the two partners together. Starting, of course, with the strengths of Lamborghini brand, which is the design excellence, experience in global lifestyle product marketing, and of course the world's most prestigious logo and brand, the red shield with the Toro. And I think that combined with Kinetic strength of innovation, engineering, local manufacturing, supply chain management, we are able to create a winning combination where I think that we have created something which is disruptive, which will truly make a big difference in the way the golf and lifestyle carts are being seen and sold. And therefore, I'm very confident that this will make an impact on the global markets. The brand Torino Lamborghini is not just an Indian brand, which Kinetic is known in India, but Lamborghini is known all over the world. And we will approach the global markets with a lot of confidence. As I mentioned, we plan to enter the top 30 markets over the next 3 years through global distributors. And we're aiming to reach a top line of $300 million in 5 years.
It's an interesting time to be a part of this EV space is because of what China is doing in terms of rare earth magnets and the control that they're exerting, right, over supply chains, etc. What do you make of that situation with respect to your companies?
So certainly it's a problem for the sector that needs to be addressed. In the short run, of course, manufacturers are scrambling, finding solutions. But in the medium term, I think it has to be a G2G dialogue that resolves this.
Right.
And in the long term, it has to be a strategy to localize not the vehicles or the components, but also the raw material supply chain. And the government has begun thinking and working in this direction. But I think it has to be addressed at short, medium and long term. And medium term, there needs to be some kind of a G2G solution as well.
Meanwhile, global technology company Zoho Corporation has announced new developments in its artificial intelligence portfolio at Zoholics India. The company has introduced its own large language model, Zia LLM, which is a new automatic speech recognition model for English and Hindi. My colleague Uma Sudhir spoke to Zoho's CEO Mani Vembu. Let's listen in.
You have some exciting new announcements today to make that has some implications also for the language law.
We are announcing Zia LLM. That's the major announcement. So it is not for the consumers, it is for the business use cases. So basically we are right-sizing the model to handle some of the use cases, business use cases. And this is to make sure that we offer value to our customers. So we want to reduce the costing there. So we are right-sizing the models. We are launching like say 1.3 billion parameter, 2.6 billion parameter and 7 billion parameter. See, all three models are trained specifically for certain use cases. That is our major announcement. And we are also working on like say announcing the Zia ASR, which is like say speech recognition for both Hindi and English. So, and we are going to enhance it for other Indian languages too. So that's the plan.
So if there are gaps otherwise, I know you're talking about LLMs is a bigger focus, but if there are gaps otherwise because the country has so many diverse languages, technology is giving us the answers.
Yes, exactly. Right. So now if say some of our sales or support talks in Hindi to a customer in North, so now that will automatically get converted and right, so the notes can be in English.
No, so that's fantastic actually. In a country as diverse as this, so all languages can stay alive and thrive as well.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates. And don't forget to catch Ask Profit on the end of this very short break.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज़ और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their
Welcome, you're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna, and I will be taking up all your stock related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now. And on the show we are joined by Mahesh M. Ojha on the fundamentals and Sundar Kevat on the technicals. Welcome to the show, gentlemen.
Good evening.
Yeah. Good evening. Good evening. So let's get started with the show. First query is written to us by M.R. Vishwanathan Nair from Kochi, and he's asking whether is it a good time, to buy Dreamfolk Services. So firstly, coming to you, Mahesh, on the fundamentals of Dreamfolk Services, how are you viewing this counter?
No, currently I'm not much more optimistic for Dreamfolks, but yes, definitely if books are improved then we can look. Currently books are not so improving. So for time being, we are escaping the counter.
Right. And Sundar, what are the charts suggesting? What are the key resistance and support levels that you're seeing there?
Yeah, so Himakshi, the stock is trading into its all-time low, and I could see that the stock is creating a kind of lower highs and lower low pattern from 23 May, and there is no buying interest seen in this stock. So I would recommend the viewer to avoid this stock.
All right. So with that, we have another WhatsApp query. But before I take up this one, I'd just like to request our viewers, this is your golden chance to get all your stock related queries solved, because we have our experts there. Whether it's a fundamental query or a technical, you just have to pick up your phones and call us right away. The numbers are there flashing on your screens right now. And with that, we have Vijit's query. He holds 123 shares of Power Finance Corp at 434 rupees. Although he hasn't mentioned the time horizon, so firstly I'd like to come to you, Mahesh, on the fundamentals of Power Finance Corp. So in this sector, how are you viewing this particular company? Is it like a good bet?
Definitely, PFC REC are good back from current level, and we can see some more good upside from current level. If your horizon is 12 month or more than 12 month, I think 500, 525 level easily could become in PFC. And also if you are looking for a REC, that is also good bet. So from current level, yes, you can buy. We can see some medium term upside also, but yes, keep horizon more than 12 months. I think minimum 20 to 25% upside could become in PFC.
Okay. Thank you so much for that. And, Mahesh and Sundar, RIL has come out with its numbers, and I'm just going to address it for now. So the net profit is at 26,994 versus NDTV profit estimates of 19,775. So, and also if I talk about the revenue, so revenue is at 2.44 lakh crore rupees versus NDTV profit estimate of 2.42 lakh, which is probably in line with our estimates there. Then EBITDA is at 42,905 crores versus NDTV profit estimates of 44,497 crore rupees. And if I talk about the margins, so margins are at 17.6% versus NDTV profit estimates of 18.4%. So these are the numbers that have come out of the Q1 results of RIL. So Mahesh, I'd like to come to you. How are you viewing this? These are some strong numbers there.
Definitely, if you're looking from a net profit perspective, that is just some surprising numbers. But yes, we have to look on the detailed reason for the same. But yes, from revenue perspective, that is in line. And I think from margin perspectives, many brokerages have their different views. So on margin perspective, slightly lower. But yes, on EBITDA, I think in line, and revenue perspective in line. But yes, from net profit perspective, I think we have to see more detail on that one. So, what trigger they have done for net profit up, that is beat estimates.
Right. Because we will be getting our colleague shortly on this one to, give us a detailed breakout of these numbers and what does this really mean. But before that, let's go across to a caller joining us from Bengaluru. Hi, Mohan. Good evening.
Madam.
Mohan, are you there on the phone line? Yes, please go ahead with the
madam.
query.
Good evening, madam.
Good evening.
Yeah, madam, I am holding the 20 shares of HDBL Finance.
Okay.
So after the quarterly results, which was announced 2 days back, the stock price is gradually decreasing.
Yeah.
So I want to accumulate some more stock. So what is the price, accumulation price?
All right. So Mahesh, I'd like to come to you on this. HDB Financial is the counter. So if he wants to accumulate more, do you suggest these levels to be correct ones?
Definitely, they can accumulate on these level, or if any downside nearby 760, 770 zone. And definitely, these type of counter you should keep on longer term portfolio perspective. I think one result can't decide the future of company from the like these days. So we are positive on HDB Financial, and near term, I think if any good number coming in near quarter, then we can see 900, 950 level at least in 3 to 6 month horizon. After that, we can see some more upside if a company number improve in terms of NPA and other thing. So we are optimistic, positive on HDB. Buy on lower are advisable.
Okay. Thank you so much for that. Now we are joined by a WhatsApp query. So Krishnam has written to us from Hyderabad. He holds 50 shares of Cochin Shipyard. He bought it at 2,200 a piece. So again, he hasn't mentioned the time horizon. So firstly, I'd like to come to you, Sundar. So Cochin Shipyard, but before we have Mayuresh on the phone line to address the RIL earnings, to analyze the results that have come so far. So, hi Mayuresh, thanks for being there on the show with us.
Hi, the pleasure is all mine.
Yes, so Mayuresh, the numbers that have come in, so if you could just break it down for us, and how are you viewing it? What does this really mean?
I think on the face of it, the numbers look pretty decent, and it was always expected to be a decent quarter for Reliance Industries. The expectations in terms of the retail business expected to hold up, both in terms of the operating performance as well as absolute margin. The O2C business expected to show signs of stability, and the expectations again in terms of the digital businesses picking up steam. I think all these factors are working together for Reliance in this quarter. Obviously, there was an element of the refinery shutdown, which would have also played on the numbers as far as the refining business is concerned. But again, I think the overall numbers, both in terms of the margin performance at consolidated level as well as individual businesses, I think decent set of numbers in line with what the street was probably expecting.
And also what caught my eye was the other income, which is up 208%. So if you could just tell us more about that, as well.
No, so I think the other income component was expected to go significantly higher because they obviously had a large pool of the cash hitting in terms of reserves that were probably built up. And therefore, I think the other income jump is quite substantial. But I think you probably should focus more on the core business. And therefore, I think with the core business expected to perform reasonably better also in the coming few quarters, with more stability expected, both in terms of refining margins as well as the petchem spreads, which had obviously before this quarter remained extremely volatile, along with confidence coming through, both in the geo as well as the retail business. I think that leads to confidence that the core business should probably show significant signs of stability and improvement as we head into the next few quarters. Other income obviously is a component, but it's not too much of it's not too much that of an emphasis that one should really put on in terms of Reliance numbers.
Right, Mayuresh, and just stay with us. My colleague Somit is also joining us on the bulletin right now. Somit, the RIL numbers, what do you make of it?
Well, if you look at the consolidated numbers, they are slightly below than what the street was estimating. On the EBITDA fund specifically, the number has come at close to 42,905 crore as against street expectations of close to 44,500 crore rupees. It's a miss of around 4%. If you look at the net profit number, yes, it looks way ahead of what the street was estimating at close to 27,000 crore rupees. But that is largely because of the spike that we have seen in other income. And the spike in other income is because they had sold their stake in Asian Paints. So whatever gains were there, around 8,900 odd crore rupees, that is something that they have recorded in other income. And that's the reason the net profit number looks to be quite ahead. Now, if you look at the internals, for the O2C segment, the EBITDA has dipped around 4% on a sequential basis at close to 14,500 crore rupees. So that's again a mess because street was estimating this number to be anywhere between 15,400 crore rupees. For the oil and gas exploration business, the number is pretty much in line with what the street was estimating at close to 5,000 odd crore rupees. The retail segment has again come in below the street estimates. 6,381 is the EBITDA. Street was estimating the number to be around 6,650. For Geo, if you look at the ARPU expectations were around 208.8, and that is what the number has come in. Subscriber number is also pretty much in line with what the street was estimating. So overall, if you look at on a consolidated basis, the numbers seem to be slightly below compared to what the street was estimating.
Right. So, Somit, Mayuresh is also with us. So, Mayuresh, Somit actually wants to pose a question to you. Somit, over to you.
Mayuresh, if you look at the current Singapore GRMs, it has come off a bit. And even when GRMs were stronger in the first quarter, the EBITDA from the O2C segment has come down. So how are you looking at the O2C performance going forward?
So, Amit, I think, yes, a tad bit below, but one should, again, as I was mentioning in my opening remarks, there was a refinery shutdown as well, which would have impacted numbers partially. But going ahead, looking at how the expectation largely is getting built in terms of both the Singapore margins as well as expectations of Reliance having access to a lot of feedstock options to pose relatively better better margins than the Singapore GRM. I think that seems to be a base case scenario. The other aspects obviously is in terms of the petchem spreads itself. And the expectation here again is a large part of the polymer demand or the polyester demand, which gets obviously controlled to a large extent in terms of how the Chinese demand supply is and the global demand supply as well. I think that should show some signs of stability and pickup as we head into the next few quarters. And therefore, I think there is some expectations in terms of the feedstock options that Reliance has, the expectations in terms of the crack spreads actually stabilizing. And therefore, I think both the refining margins as well as expectations in terms of the petchem spreads actually stabilizing and improving as we head into the next few quarters. I think that remains a base case scenario for the O2C business.
Right. And when you look at the telecom business, that is Reliance Jio, with this quarter ending, the impact of tariff hike is largely factored in. So what will be that growth trigger for Reliance Jio going forward? Because ARPUs now are expected to be flat going forward.
Absolutely. I think to a large extent, I think the ARPU increases was well gestated in terms of Reliance numbers as we headed into those numbers this quarter. But again, I think expectations largely for the industry as a whole, in terms of significant price hikes, I think that seems to be something that the market would probably look out for, or the street will probably look out for. Will there be any significant amount of ARPU increases over the next few quarters? I think I have a personal, I'm a little susceptible that might really happen. There might be calibrated increases in terms of ARPU going forward, because they really don't want to disrupt the market. And so I think it's largely an oligopoly as we speak, because Vodafone Idea is restricted largely to the circle that it operates out of. I think a substantial ARPU increase might not be on the card. However, I think a calibrated ARPU increase is definitely there on the card over the next few quarters. And therefore, I think that will get penciled in terms of better cash flows. And because large part of their CapEx needs have actually been adhered to, I think that really will translate into better operating performance going on.
Right, all right. Thank you so much. And Mayuresh, for our viewers who are joining us right now and who are viewing at this, like they have come out with the numbers. So if you could just, compile whatever, points you have again for our viewers who have just joined in, so that they get a sense of that what does these numbers actually imply.
So I think on the Geo front, if I specifically speak, it's been a decent achievement. The net subscriber additions in the first quarter have been close to 9.9 odd million. The ARPU increases have obviously helped the overall operating performance. And going ahead, as I said, if one really expects even calibrated increases happening with ARPUs and a reasonable addition in terms of their overall subscriber base, both the revenue market share and the subscriber market share should show significant amount of stability going forward. And therefore, I think Geo should probably hold up as numbers are concerned. When it comes to the O2C business per se, I think a tad below expectations, but I'm not really disappointed, because the expectation here largely going ahead is that as demand starts coming back slowly and steadily over the next few quarters, and with the new energy initiatives that Reliance is obviously undertaking and has undertaken in terms of the CapEx spend, a large part of the O2C business, because of their superiority in terms of feedstock availability and expectations of stable refining margins, along with better petchem spreads going forward with improving demand, improves the outlook for the O2C business. When it comes to the digital and the retail part of the business itself, the expectations in terms of discretionary spending actually going higher in the next few quarters, in both urban and semi-urban, along with rural areas. I think that can be a big push through in terms of same-sales store growth for the retail-oriented business. And therefore, I think the expectation in the second half of the retail business actually holding up and improving seems to be a base case scenario. As far as the A&P business is concerned, on the overall numbers part, I think it's still a very small component of EBIT. So I'm not really perturbed in terms of how that business probably shapes up. But really, I think with expectation in terms of demand-supply dynamics, specifically on the global front, that business should probably just see some kind of a lag effect. However, I think the core businesses should have reasonable amount of stability going forward. And therefore, in my opinion, again, I think the next few quarters should see reasonable amount of growth coming through as far as Reliance.
This reasonable amount of growth that you're expecting, do you think it will be continued to led by the legacy businesses of O2C, given the fact that for Geo there is no much of a trigger other than subscriber growth? Retail has been kind of flattish, and second half could be slightly better is what the street is estimating. But then what would be that key trigger for Reliance Industries? Would it be demerger or would it be a big acquisition? What do you think?
So I think demerger is one part which will obviously play out both sentimentally. But I think for the core performance, I think the expectation is that retail businesses should contribute significantly going forward. And therefore, I think as a component in terms of percentage contribution, which is almost half as we speak, as that percentage starts inching a tad bit higher every passing quarter, my own sense is that retail businesses, both in terms of Geo, digital, and expectations of the core retail business, should be the next growth driver. So obviously, I think the new energy verticals that Reliance is venturing into can be a huge value addition. But again, I think the entire CapEx has got front-loaded. The expectations in terms of the numbers which will start coming through will obviously come with a lag over the next 2 to 3 years. But I think it's a story which will play out meaningfully for Reliance going forward. And therefore, the new energy businesses as a vertical can be a huge value addition going forward as well. And obviously, I think the O2C business, I think the kind of feedstock options, for the sake of repeating myself, that Reliance probably has as we speak. Yes, I think it might remain volatile as global demand conditions come back slowly and steadily. But I think this is one business which will probably also ensure that as the transition probably happens, like we've seen in the case of Aramco, the margins of this business can also improve going forward. And therefore, I think retail is the core focus, where I think the retail businesses can drive growth. The new energy business for Reliance Industries can actually start contributing meaningfully over the next few years. And O2C business can provide stability because of the specialty part of the business as far as O2C is concerned that Reliance is getting into. So there are plenty of figures for the stock per se. I think it's only a matter of patience because this is going to be a long drawn out story and a good growth story at that over the next few years.
Right. And Mayuresh, I just have to, shed some light on the IPL viewership numbers as well of Jio, and they've also highlighted in their, press release that it has delivered the biggest ever IPL viewership in terms of the monetization as well. So do you see that also reflecting?
Yeah, I think that can be a component, but how do I ascribe value for that at this juncture? I think I'm a little skeptical on what value to probably assign. But obviously, I think there is going to be an element of an upside as far as all these other elements and aspects are concerned.
All right. Thank you so much, Mayuresh, for being there on the show with us and breaking down those numbers for our viewers. Thank you so much.
Thank you.
And let's go back to the queries that we were catering to viewers. So we were talking about Krishnam's query. He holds 2,200 shares of Cochin Shipyards. So quickly, I'd like to come to you, Sundar. So what's your view? How is it looking on the charts, Cochin Shipyard?
Yeah, so Himakshi, on daily time frame, the stock is creating a kind of lower rise and lower low pattern. And if you see from 6th June, the stock has, hasn't shown some kind of positive follow-up momentum, and the stock is fizzling out. Now, for me, the important support level is at 1720, that is 1720 levels. And if the stock price hold to that level, then only then the stock could be, entered or added. Otherwise, this stock could, face some kind of more selling pressure. And apart from this, if you see the current market price and the 200-day moving average, the disparity is pretty high. So again, the proper mean price for me will be at 1720 levels.
Okay. And Mahesh, I'd also like to take your fundamental view on the counter. How are you viewing Cochin Shipyard?
I think it's talking some kind of upside potential, but currently we are seeing some kind of lower consolidation. I think 1,650, 1,680 level could be a good consolidation lower level for the stocks.
All right. Thank you so much for that. Now we are joined by a caller from Indore. Hi, Amal Karma. Good evening.
Hello, hi, Kamal here, Kamal Karma.
Okay, Kamal.
So,
I'm sorry, my bad. Yes.
Yeah, no problem. So, my query is regarding NACL Industries. So, recently I bought it.
Okay.
So, since the news from Coromandel, they acquired around stake in that.
Yeah.
So, I just wanted to know about the technical point of view about it, because fundamentally I think it is not correct right now, but technical in the short term 3 to 6 months. Can I hold it or can I add more quantity on this?
Okay. So, Sundar, he bought it at 178 NACL, and currently I can see a spike on the charts there. So, is it going to stay there? And also, if it's rising there, the elevated levels, do you suggest Mr. Kamal to actually accumulate more at these levels?
Yeah, so Malika, if you see, Himakshi, if you see on a weekly time frame, the stock has created, it has created a kind of higher rise and high low pattern. And if you see from 21st April 2025, the stock was into a kind of sideways zone, but the stock has, breaking out of its roof. Now, if you see, one interesting thing about this stock is that on weekly time frame, the volumes are shrinking. So I would recommend the viewer to, book some profit, or, he could exit whole of his quantity, and he could accumulate at 210 or 215 levels in coming sessions, because again the stock could correct and it could face some kind of selling pressure.
Okay. So a sell on NACL for a short term, from a short term perspective, but I'd also like to take fundamental view on the counter. Mahesh, quickly, if you could just tell us, are you optimistic about NACL?
No, recently we have already discussed NSCL on the year. So these kind of level, I think stock has a limited upside, or I think you should, if you are looking for a fundamental, don't buy on these levels.
Okay. Thank you so much for that. And with that, I'm afraid that we are running short of time on this edition of Ask Profit. But thank you so much for being there with us and patiently being there and solving all our viewers' queries. So thank you so much. And viewers, that's a wrap on this edition of Ask Profit. But please don't go anywhere as Sanjana Chauhan comes up with Profit 360 on the other side of the break.
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trade.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चलता है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ही अलग फाइट, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Market closes lower for the second consecutive day. Nifty closes below 25,000 and Sensex loses 500 points. Nifty Defence is the top sectoral loser. Reliance Industries overall Q1 earnings come in below estimates. Other income jumps to more than 200% after including proceeds of profit from sales of listed investments. Jio surpasses 200 million 5G subscribers, 20 million home connections. JSW Steel Limited records a 45% rise in its consolidated net profit during the quarter ended. The company outperforms analyst expectations in every area that matters. As India and the US enter the fifth round of trade talks, sources say the ongoing negotiations are focused on securing preferential access for India, raising the question of whether India could land a better trade deal than its Asian peers. Exporters flag delay in US orders amid tariff uncertainty. Sources cite slowdown across sectors such as plastics, pharma and engineering goods. Indian smartphone manufacturers have written to Telecom Minister Ashwini Vaishnav, highlighting how China's informal trade restrictions are disrupting their supply chains. They identify choke points, including tighter scrutiny of component imports and other things that are threatening India's global competitiveness. Starlink is set to appoint its India CEO as it builds a core team in Delhi ahead of a planned launch by the end of 2025. The Prime Minister's office convenes a crucial meeting to address India's growing rare earth magnet supply crisis as manufacturers across the auto and electronics sectors warn of severe production risks due to China's tightening export restriction. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it. Benchmarks declined for the second straight session with Nifty closing below 25,000 as financial stocks weighed heavily on the market. Most sectoral indices ended in the red with Nifty Defence emerging as the biggest loser. Earlier today, we also caught up with Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors, to get his perspective on the current market landscape. In our conversation, we delved into the mega trends shaping markets right now and discussed how investors can identify pockets of value amid all the market noise.
Thanks for tuning in to Talking Point Unfiltered. And my guest today is Ravi Dharamshi of ValueQuest. And the idea of doing the conversation with Ravi, as I told him as well, was to try and understand that how do large investors think of mega trends and how do they chase these mega trends? How do they diversify their portfolio between 4 or 5 concurrent mega trends that they might be seeing at any given point of time? Ravi, such a pleasure having you here.
Thanks, Neeraj. It's my pleasure to be here.
So, you've always spoken about these mega trends all through the times that we've spoken. Back from 2015-16 when I first started talking to you, when I think we were in the midst of the chemical mega trend, if you will, and the pharma mega trend, you kind of try to identify some of these and then maybe invest early in them and then ride the whole wave till you can. Would that be a good summary of one basic investing style?
So let me try and explain a bit with a little bit more nuance and a little bit more in detail. See, in any particular industry, there are phases, right? You have a tough phase, struggle phase, then you hit that inflection point, you have the great growth phase, and then you reach a kind of a plateau, then again you have a growth phase. Idea for us is to identify which that growth phase is. everybody can name a lot of mega trends today, but even within a mega trend, you make money only when you are invested in that particular growth phase. And for that, you need to be very clear in your mind what stage that particular mega trend is. And there are markers that we keep track of, whether it is the technology curve, the cost curve, behavioral shifts, regulatory shifts, capital flow, talent flow. All these things tell us which way the wind is blowing, how strong that wind is. Is the mass adoption reached that kind of an inflection phase? Are we going to see a J curve kind of a growth phase?
Now let's take a look at the earnings today. Reliance Industries of Q1 results came in below estimates. The profit jumped 39% while revenue dropped by 7%. Somit now joining us with an analysis.
Well, if you look at the consolidated numbers, they are slightly below than what the street was estimating. On the EBITDA fund specifically, the number has come in at close to 42,905 crore as against street expectations of close to 44,500 crore rupees. It's a miss of around 4%. If you look at the net profit number, yes, it looks way ahead of what the street was estimating at close to 27,000 crore rupees. But that is largely because of the spike that we have seen in other income. And the spike in other income is because they had sold their stake in Asian Paints. So whatever gains were there, around 8,900 odd crore rupees, that is something that they have recorded in other income. And that's the reason the net profit number looks to be quite ahead. Now, if you look at the internals, for the O2C segment, the EBITDA has dipped around 4% on a sequential basis at close to 14,500 crore rupees. So that's again a mess because street was estimating this number to be anywhere between 15,400 crore rupees. For the oil and gas exploration business, the number is pretty much in line with what the street was estimating at close to 5,000 odd crore rupees. The retail segment has again come in below the street estimates. 6,381 is the EBITDA. Street was estimating the number to be around 6,650. For Geo, if you look at the ARPU expectations were around 208.8, and that is what the number has come in. Subscriber number is also pretty much in line with what the street was estimating. So overall, if you look at on a consolidated basis, the numbers seem to be slightly below compared to what the street was estimating.
And turning to other major earnings, JSW Steel delivered a standout performance in the first quarter with net profit soaring 158% year-on-year to 2,184 crore, sharply beating expectations. Sequentially, profits surged 45% over the previous quarter, supported by improved cost efficiency and steady domestic steel sales. Vansh now joining in with a quick review of the numbers.
Yeah, so let's quickly understand the entire picture. The numbers have beaten the estimates and the EBITDA has improved on the account of the lower coking coal and the better steel prices. There has been an inventory build-up due to the fall in the export volumes of the company, and in regards to the Bhushan Steel case, company has already filed a review petition and they believe to have strong grounds to pursue the review petition. In terms of financials, the revenue is fallen by 3% to 43,400 odd crores versus the estimates of 42,800 odd crores. EBITDA is risen by 18% to 7,500 odd crores versus the estimates of 7,200 odd crores. Margins are at 17.4% versus estimates of 16.9%, and net profit has risen by 45% at 2,100 odd crores versus the estimates of 2,000 odd crores. If we talk about the EBITDA per ton, now the EBITDA per ton for the company stands at 11,300 odd rupees versus the estimates of 10,400 rupees per ton. If you talk about the production volumes of the company, the Indian operations saw a 5% sequential decline and the operations for US remained flat, and the capacity utilization for the Indian operations stood at 87%. Now, if we talk about the outlook that the company has given, the company expects the volumes to improve in this Q2 FY26, and they expect healthy performance from the international operations. They also expect muted steel prices in July, and also expect the coking coal prices to further lowered by $5 per ton. And the offset will be led by the cheaper imports and the seasonal factors that is coming in for the company. So this is what the overall picture is looking like for the JSW Steel.
Thanks for that, Vansh. Meanwhile, several major banks are set to report their quarterly earnings in the next coming days, drawing keen market attention. Jasmeet now joining us with a quick preview of what to watch for in these crucial earnings releases.
A bunch of earnings coming up tomorrow as well as on Monday. So here are key things to watch out for when it comes to HDFC Bank earnings. Firstly, the net interest income. It's expected to rise 7% on YOY basis but remain flat on QOQ. When you look at the operating profits for the bank, It's expected to rise 12% YY basis, and while on QOQ it's expected to be up 1%, and the gross NPA is expected to remain flat at 1.33% on both QOQ and YY basis. When you look at the key monitorable, what to watch out for in HDFC Bank preview, first thing would be the cost ratio, which is expected to aid the operating profit. Secondly, the asset quality of how it has been stable over this quarter. Thirdly would be the guidance for credit growth. That's something very important to watch out for. And lastly, the provision when it comes to the agriculture segment. While the next one would be the ICICI Bank. So here's the preview and what to watch out for. What is expected out of the Q1 earnings? Firstly, the net interest income is expected to rise up by 8% on YY basis, while be down 1% on QOQ basis. When you look at the operating profit for this bank, it's expected to rise up by 8% on YY basis and go down by 2% on QOQ. When you look at the gross NPA, and that's expected to inch up by 12 basis point on QOQ basis and expected to be around 1.79%. Now, what to watch out for when it comes to the ICICI Bank? First thing would be the margin, how they have been performed and the decline, and any guidance going forward for Q2. Second thing would be there might be a slight inch up expecting in an NPA ratio. That's something to watch out for. Thirdly, the provision expected to rise off on a low base. That's thirdly. And lastly, what to watch out would be the loan growth to be just double digit. That's some number to keep an eye for. It'll be interesting to watch out how this particular earning turns out tomorrow in trade.
That's right, Jasmeet. All eyes on the next coming days. Moving on, there's movement on the India-US trade talk front, with official sources claiming that this deal will focus on preferential access for Indian exports. This is now the 5th round of negotiations, and insiders say the agreement is expected to be announced as early as next week. My colleague Rishabh has more details from his sources.
What we're picking up from government sources is the fact that this trade deal, which has been imminent for a very, very long period of time, what we're hearing on that about now is that the main theme is going to be preferential access. That is something that Donald Trump has also pointed towards in terms of his deals with Vietnam, his deals with Indonesia. But this is something that we'll also see now with India. That's what we're hearing from the official government side. The Indian negotiating team, led by Special Secretary of the Commerce Department, Rajesh Agarwal, continues to be in the US. This will now be the 5th day of negotiations for them. And there is some sort of an outcome that is expected ahead of the August 1st deadline, roughly about 12 days left for that, and that is something that we're keeping our eyes peeled on so far as well. An update on the UK FTA signing as well. Remember, this FTA was finalized about a month or two back, and now the final formal signing of this deal will take place, post which the operationalization of this deal will take about an year or so. So that's what we're hearing, is that the Prime Minister, India's Prime Minister Narendra Modi, is likely to visit the UK for this signing sometime next week, perhaps July end, is what NDTV Profit also reported. But what we know so far is that there's no finalized date, but July end, India's Prime Minister might go for a formal co-signing of the UK FTA with UK Prime Minister Keir Starmer as well.
Meanwhile, tariff uncertainty is also weighing on India's exports as US buyers pause new orders ahead of the August 1st tariff deadline. Key sectors including plastics, pharma, electronics and gems are now seeing a slowdown, with exporters bracing for a sharp dip in shipments over the next few months. What are our sources telling us? Let's find out with Rishabh.
What we've picked up on this US tariff uncertainty is the fact that it is now impacting the export plans and the confidence, and rather the order books of Indian exporters. What we've picked up from several exporters is the fact that they have flagged delays in US orders amid tariff uncertainties. What we're seeing is that there is a slowdown in orders across sectors, and that is pharmaceuticals, plastics, as well as engineering goods. What is causing this is, of course, the unpredictability in tariff rates across Southeast Asia. So you're seeing a lot of India's competitors in terms of manufacturing economies, Cambodia, Thailand, Vietnam, Indonesia, a lot of them having a bunch of tariff back and forths with the United States. We saw Vietnam go from a higher rate to a lower rate. Same for Indonesia, expecting something similar for Cambodia and Bangladesh as well as Thailand. So that is something that is impacting the long-term plans of these exporters. What we're also picking up is the fact that the US clients that these exporters have, they are now very cautious over these new orders and especially over long-term orders, given that there was some sort of front loading in these couple of months ahead of the August 1st tariff deadlines before additional tariffs come into play. You did see a lot of front loading, but it is the longer term orders that are seeing some sort of an impact. They are awaiting clarity vis-a-vis the tariff differentials that India has with China, Indonesia, Vietnam. And what we're also seeing is that engineering goods exporters also foresee some sort of a dip coming in because of this front loading, and then they see some sort of a slump coming in starting from August, starting from next month. So what we're also seeing is that plastic exporters saw some sort of a dip between June and July orders as well. Now, all of this comes with the context of Indian negotiators in Washington for this interim trade deal or a mini trade deal that is being negotiated. That is ahead of this August 1st deadline. We do expect some sort of a statement, some sort of a deal to come out of these negotiations that are going on since March now. And we are in the 5th round, and we have our eyes peeled on any sort of outcome coming in from Washington as well as New Delhi.
Meanwhile, India's top smartphone and electronics manufacturers are raising alarms over a pattern of informal and targeted trade restrictions by China, which they say is putting the country's electronics manufacturing ecosystem at a risk. Let me quickly go back to my colleague Rishabh, who has all of the details.
This was a letter that was sent by the ICEA. This is an industry association of electronics manufacturers and smartphone makers. They sent out a letter to Ashwini Vaishnav, India's IT minister, India's IT and electronics minister, on July 1st, asking for an urgent meeting. And also they flagged off 3 very interesting specific choke points that the Chinese have been informally administrating. So these are not curbs that the Chinese government is doing on paper. These are all off paper, informal stuff that is being done by the Chinese administration to stifle India's growth in terms of electronics and smartphones. Now, the 3 choke points that I have here with me, we reviewed a copy of this letter that was sent. The first choke point is, of course, the restrictions on exports of high-precision tools and machinery. So that is something that the Chinese government has been doing for a very long time now, and this is across sectors. But over the last 8 months or so, these choke points, these restrictions have now been extended to electronics manufacturing. Choke point 2 is the critical mineral risks that has been the talk of the town for a while now. We've seen with rare earth magnets, but this is going to impact electronics manufacturing as well, not just EVs. And 3 is the travel restrictions and recall of Chinese technical workers. This is something that we saw happen with Foxconn very recently. And now we're seeing this on a broader basis as well across manufacturers, across smartphone manufacturers, because this leads to some sort of stalling of technology transfer, as well as the new sort of product development that Indian companies want to do. So these are the sort of Chinese informal Chinese sanctions that have been affecting this electronics industry, and this body really wants to set up an urgent meeting and also find some solutions to mitigate these issues.
Thanks, Rishabh, for that. Moving on, the Ola and Uber driver strike has entered its 4th day with no breakthrough in sight. Drivers are staging a sit-in at Azad Maidan, sticking to their main demands: fairer fares and equal rates with metered taxis. However, this ongoing strike affects more than just the drivers. Customers, working professionals and commuters are finding it exceedingly difficult to commute, and their cabs often delayed or simply cancelled. My colleague Shubhana was on ground speaking directly to the protesters and the customers. Let's listen in.
Mumbai's lifeline, the app-based cab services have come to a halt. Now that's because Ola and Uber cab drivers are off the road and commuters are in pain. We are here surrounded by the cab drivers who are in a sit-in protest at Azad Maidan. This is the 4th day of the protest. Sir, I wanted to ask, this is the 4th day of the protest. What are your demands? What is the problem? If you could just explain it to us.
we have a very basic demands. I mean, actually the fun fact is that we have zero demands. All that we are asking is execution of the existing laws that we have in place. But unfortunately, the startups who boast about employment generation, and we in everyday's newspaper we read about the fundings they are getting in millions and $billion. You can witness here they are misusing that funding and they are exploiting passengers and drivers, and that's why lakhs of drivers in all over Maharashtra, in Pune, Mumbai and Nagpur have stopped working.
कस्टमर से कंपनी कितना लेता है? 400-500 लिया तो हमारे हाथ में कितना आता है? 250-300 आता है. हाँ, उसमें सीएनजी जाता है, उनको एसी भी चाहिए तो एसी से माइलेज घटता है बराबर. दूरी का 1 घंटा लगेगा, 1-1.5 घंटा 2 घंटा ट्रैफिक में चला गया, हमारे जेब में क्या बचता है?
At the moment it is so difficult to commute across, even if I have to go like visit a friend or for a meeting within the area, like now in BKC, as it is very difficult to get a normal auto. We try Ola, Uber or anything as such. Firstly, the wait time is so long. Uske upar se nobody is ready to go. Once they do reach, they will be like, okay, no, they'll cancel at the end moment. So of course it is very difficult.
It's been hectic, booking a rickshaw or even a cab on the app because it's cancelling on its own or the drivers are not accepting it, and it's because this is a corporate area. In the evening, as usual, it gets a bit crowded, and people are booking at the same time. With the strike, it's been more and more hectic.
This is the 4th day of the protest, and they're demanding a right fare per kilometer rate and relief from steep commission cuts. Well, they're not just asking, they're making demands. Now, a committee is set to meet the representatives of Ola and Uber today to negotiate on the same. But for stranded riders and frustrated drivers, the wait still goes on. This is Subhana Sheikh with camera person Prahlad from Mumbai.
Thanks, Shubhana, for that. Now let's take a look at some of our other stories that are making news around India. Prime Minister Narendra Modi laid the foundation stone and inaugurated development work worth over 7,000 crore in Motihari, Bihar. Addressing a rally later, he accused the opposition of playing politics in the name of the poor. The Prime Minister also visited West Bengal's Durgapur and launched development projects of 5,500 crore rupees. These projects span across sectors such as oil and gas, power, road and railway, and he criticized the ruling party TMC for hindering the development of the state and vowed to transform it. Kenvue, a consumer health company and makers of Benadryl cough syrup, announced the launch of cough clinics, an industry-first initiative in association with the Association of Physicians of India. As part of this initiative, Kenvue plans to establish 10 cough centers of excellence around India, and these centers will run cough clinics with an aim to scale knowledge on scientific best practices around cough evaluation and expand its usage in treatment. Justice Yashwant Verma of the Allahabad High Court has petitioned the Supreme Court to challenge the findings of an in-house 3-judge panel that alleged that he had amassed large amounts of cash stored at his official residence. Verma claims the panel appointed by former CJI Sanjeev Khanna denied him a fair chance to respond and drew conclusions without full investigation. Chaitanya Baghel, son of former Chhattisgarh Chief Minister, has been arrested in a money laundering probe. This is linked to a 2,100 crore rupee liquor scam. The ED raided their Bhilai residence where Chaitanya was detained under the PMLA for alleged non-cooperation. A suspected cylinder blast caused the 2nd and 3rd floors of a 3-story chawl to collapse in Bandra East in Mumbai. This has injured at least 7 people and has trapped several others. Firefighters, police and civic teams rushed to the scene and rescue efforts are underway. Individuals and HUFs having taxable capital gains income can now start filing income tax returns ITR2 for financial year 24-25. The income tax return form is now enabled for filing through online mode with pre-filled data at the e-filing portal. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
They promised guaranteed returns. They advertised illegal trading in broad daylight. But NDTV Profit picked up the trail.
2 साल हो गए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We called, we questioned, we exposed.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Because your money deserves protection, not empty promises. Easy money, hard lesson. Stay alert. Verify before you invest.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense forces some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the